A much awaited video for all CMA final students. Here is the CMA final audit revision marathon. Cost and management audit revision marathon. Guess what? What are all I'm going to cover and what all I'm going to talk about, in the next coming 5.5 hours of the video. Let's look at. And this video is going to be approximately for 5.5 to 6 hours approximately, where I am going to cover 70 marks portion for the revision. Okay, in your exam, blindly watch this marathon, practice the concepts and questions correctly, and directly go and write the exam. 99% you will really do well. And before that, I also spoke about, okay, I also spoke about 3/4 strategy. Yes, in CMA final audit, what exactly the 3/4 strategy you need to follow. Don't worry, below description there is a timestamp available. Intro to the subject timestamp is there. Just go to that and then you will find it. Before that, watch this introduction that I'm giving. Introduction to the marathon that I'm giving. What chapters I'm going to cover in the marathon? I am going to cover totally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 chapters I'm covering totally, marathon. That too, what are the chapters? Basics, cost records and audit rules, cost auditor, cost accounting standards, and cost audit standards and documentation. If you see, these first 4 topics I did revision with detailed explanation also, and even in the 2nd chapter and 4th chapter, which are problematic based, these 2 chapters are problematic. We even solved problem solving approach. We also solved some 3 or 4 illustrations for your understanding. So problems also have solved. See the weightage, how much weightage that I'm covering. Then you see here, these chapters you see 14, 15, 13, 17, 5, 7. For these chapters, when I'm taking my exam oriented class, at the end of each chapter, I do something called quick revision at the end of each chapter. Some 20 minutes to half an hour, sometimes it is 40 minutes also. A quick revision I will do. There, you will not find much of explanation, but you will find at least a decent idea about what exactly the topics that we have. Okay, that quick revision videos I'm attaching for these chapters. The next 5.5 hours, what are you going to get? You are going to watch these 4 chapters in-depth revision, and you are going to watch these 6 chapters quick revision. As a whole, this particular 5.5 6 hours video that you watch will cover minimum 65 to 70 marks weightage in the exam. Now, by the way, what books or PDF is used in this marathon? What books we have used? I have used my CMA final, material, audit material of mine, concept notes, which is just 440 pages. Remember, though it is 440 pages, 100 pages approximately plus content is irrelevant. Okay, but in order to make the book comprehensive and covers every point that is there in the study material, we covered it and it came up to 440 pages. Don't worry, as you watch this marathon, you will get an idea what to filter in this particular book. And you see, it's a fantastic colored book. Fantastic book, I can say best book in the industry. And in this book, there is a QR code. If you scan that, right now you're watching this video, right? Playlist will be there in the YouTube for CMA final audit. Many other videos will be there in that. Okay, time to time I'll be uploading many videos related to CMA final audit, that one. And this is the book. Okay, here we have given weightage distribution, everything. Apart from that, this is the question bank which we used, a colored question bank. Okay, in this marathon I have used even this question bank also. Sir, where can I download or where can I order these books? Very simple, go to our website, srestafacacma.com. go to our website, go here, click here CMA final. You will find my exam oriented course, which is just 4,000, which is of 70 hours. Right now 100 marks portion, 50 hours is already uploaded. Okay, 50 hours is already uploaded, 50 hours which is occupying 100 marks. Then another 28 marks worth of portion is there, approx another 15-20 hours will take. That will be uploaded by January 15th, because right now a batch is going on for CMA final, all 8 subjects. So as per the schedule we are going. Okay, that's it. So right now 100 marks portion is already uploaded by the time when I'm uploading this marathon. Okay, that's it. By the way, this is full course. Now, sir, where the books can be bought? You just click on the books, you just click on this CMA final, you will get here. You see here, 849 rupees, you will get a colored concept book and colored question bank, both. Or, sir, I don't want the book, sir, I can't wait it also. But do I have a PDF? Yes, just go to free resources. Here you select CMA final. You see here, cost and management audit. Right now, just I showed, right? Concept book and, question bank, that you can download here. That's it. So these are the books that I have used. Now, apart from that, what else? Weightage expected. What is the weightage expected? 70 marks is the maximum weightage. 70, sometimes it may be even 75 also. 70 approximate weightage can be expected. And additional requirement, solve the question bank which I am giving and concept notes which I gave, and previous year paper questions also. By the way, you know, the question bank which I showed, this will cover previous year paper problems also. I will show you right away. For example, first chapter, you see, yeah, you see, first chapter, previous year questions also we gave. You can see here, questions from previous year papers, everything is given at the end of every chapter. This question bank is one-stop solution for you. So previous year question papers are also given, so that you must solve in the question bank. Solve question banks including previous year paper and read our main notes. Whatever the concept notes I gave, right, that concept notes also you read. That's it. So what else is required? Entire introduction I gave. And by the way, sir, 3/4 strategy I explained in the intro to the subject already in the same video below. Timestamp intro is there also. I already explained what is 3/4 strategy, and I, if possible, I will upload a separate video for CMA final 3/4 strategy. That's it. So why late? Continue watching introduction to the subject, then watch one by one chapter, and do comment below, share this video, like this video, and definitely you will really love it. Okay, you will really love the content, and do comment below what extra things that you learned after watching this marathon. So awaiting to see your response below in the comments. That's it. Continue watching. All the very best. So let's begin the CMA final cost audit paper 17 revision marathon. Now before we actually discuss, by the way, the subject name is cost and management audit. First, let us look at the composition of the syllabus. We actually have totally 18 chapters. We totally have 18 chapters, right? Now, what is the weightage of these particular chapters? And by the way, in the same book, there is a QR code given. If you just scan that, you will get, the revision video links, all that. Whatever related to CMA final audit, whatever we are going to upload in future. So all audit related things are all you can obtain. I mean, on the YouTube, you can just scan this. You will get it. You will get the playlist. Okay. Now, look at the weightage distribution. We have totally 18 chapters, right? And these 18 chapters are broadly divided into 4 categories. 4 categories. They are Section D, Forensic Audit and Anti-Money Laundering. Section C, Internal Control, Internal Audit, Operational Audit, Different Service Organizations Audit. Then Section B, Management Audit. Then Section A, Cost Audit. And there is something called 3/4 strategy, which I popularly which is very popular in CA Inter. Okay, the same strategy can be applied even in CMA Inter and CMA final, everywhere. Now, in this particular subject, what is the weightage of the subject? What is the actual weightage of this particular subject? Now, just a minute. So the weightage is, if you see any question paper in the past 4 or 5 attempts, if you see, the weightage is 128 marks. The question paper is always for 128 marks. And in this, 30 marks is for MCQ. And balance 98 marks is, 98 marks is for descriptive. How this 98 marks will be asked in the exam? They will ask you 7 questions. They will give you 7 questions in exam. You just have to write any 5. And each question will carry a weightage of 14 marks. So literally 2 questions into 14, 28 marks worth of choice you have. 30 marks, close to 28, 30 marks worth of choice you have. You are supposed to attempt only, 5 questions of 14 marks each. Again, in these 5 questions, there will be 2 sub questions which will carry 7 marks. Sometimes 3 sub questions will be there. That time this will be given 4, this will be given 3. The composition is their choice, or 5, 5, 4. Each question 14 marks is there. No? They can give it as a 5 plus 5 plus 4 or 7 plus 7. Anyway, any composition they can ask. But popular is 7 and 7. So this is the paper structure that you are going to get in the CMA final audit. Now, if you look at the actual subject, this material which I'm going to use is approx 440 pages. But in this, close to 100 pages, I can say, it is only costing related principles. In this material, it is close to 100 pages is costing. For example, second chapter is there. Okay. At the end of second chapter in the same book, if you see, we talk about what is a material cost, what are all inclusions in that, what will be excluded in that, what is employee cost, what are included, what are excluded, all that. A similar thing once again will repeat in fourth chapter. In the fourth chapter, we have something called cost accounting standards. We have totally 24 cost accounting standards. Okay, remember they are again different from fifth chapter where we have 4 cost audit standards. So cost audit standards are different, cost accounting standards are different. If you read second chapter at the end, where we gave material cost means what, employee cost means what, utility cost means what, like that we gave some tables, computational formats, we gave overheads means what. You don't even have to touch fourth chapter. There is no point of reading fourth chapter. But in fourth chapter, one list you have to read. Okay, when you're revising later on after this particular revision, when you're revising later on in the fourth chapter, you have to remember the list of cost accounting standards. We have 24 standards, right? What are those 24 standards? Headings alone, numbers and headings alone, if you remember, that's enough, because MCQ might come. Rest of the entire fourth chapter you can ignore, no problem at all. Remaining fourth chapter, rest of the content you can absolutely ignore. Able to understand now? So technically, and moreover, this is what a brief overview about the subject first. Now what is the composition? As I already told, there are 4 segments. In that, the first segment is what? Cost audit. Second segment is speaking about management audit. Third segment is about internal control, internal audit, operational audit, and finally forensic audit and money laundering. What I always recommend to CMA final student is money laundering you can ignore. And in management audit also, entire management audit you can ignore. Only one thing, system security and information system security audit and corporate image. These 2 you focus on. In the management audit, these 2 chapters you focus on. 9, 10, 11 you can completely ignore. 9, 10, 11 you can completely ignore, and even 18th chapter also you can completely ignore. See, what does it mean? In fact, it doesn't mean that you don't touch them at all. First, remaining all other chapters become perfect. Once you are perfect in all other chapters, then these 4 chapters you touch. This is what 3/4 strategy is all about. So entire syllabus of 18 chapters, what am I doing? 14 chapters and 4 chapters. I'm dividing them into 14 and 4. Here 9, 10, 11 and 18th chapter. Yes or no? This is management audit. This is anti-money laundering. These 4 topics you study only after you are perfect in these 14 chapters. Okay, what are these 14 chapters? 1 to 8 chapters are dealing with cost audit. Okay, then 14, 15, 16, these 3 are dealing with internal audit, operational audit, different types of audit, all that. Then 17, forensic audit you should study. Then we have something called 12 and 13. This is information security audit, IS audit, we also call it as. Then this is corporate image. These are the chapters that you have to be perfect at. Once you are perfect in these chapters, and I'm telling you, cost audit, if you see, second and fourth chapter is just a repetition, duplication. Okay, in second chapter you will be having material computation format, whereas in fourth chapter the same will be shown as cost audit standard, cost accounting standard 6, material cost. In second chapter you will have something called employee cost computation format. The same is nothing but CAS 7. Able to understand? So in cost accounting standard matter, you are not going to get anything special. Okay, so in second chapter, if you are perfect at, where at the end we give computational formats, if you're good, if you just see them once, read them once, MCQ purpose, it might help you. Okay, fine. Anyhow, when I'm revising, I'll tell you what are all to be revised in depth everywhere. Clear? That's it. So this is the composition of the chapters, and this is the 3/4 strategy implementation. Able to understand, all of you? So this is a 3/4 strategy that you should follow with respect to cost audit. I mean, this cost and management audit. Typically speaking, management audit major portion, and at the end of the syllabus, anti-money laundering related provisions. So these 2 keep it as choice. You have 128 marks. You don't have to worry about it. If at all you are able to write, like based on 14 chapters, whatever I'm telling you, you can minimum attend the paper for 90 marks. Minimum. Whether it is MCQ or descriptive all put together, you can easily attempt how many marks? 90 marks of the paper you can easily attempt if you are just mastering these 14 chapters. That's it. Okay. Now without any delay, so this is the introduction. So what is the subject we saw, what chapters we saw, how many divisions it was divided into we saw, yes or no, and 3/4 strategy also we understood. Clear? Yeah, just a minute. Now let's begin the very first chapter, basics of cost audit. First of all, why cost audit is required and what we exactly audit. So once you compare with your CA Inter or CMA Inter financial audit provisions, in a company will prepare every year financial statements based upon books of accounts, yes or no, and these financial statements, books of accounts will be audited by a chartered accountant. Okay, and what is the purpose of audit of those books of accounts and financials? The auditor will confirm whether these financial statements are reliable, trustworthy, true and fair or not. Correct? Yes, and we know what is the purpose of books of accounts, we know what is the purpose of financial statements, we know, and what is the purpose of audit also we know. The audit purpose is to enhance confidence of the users of the financial statements. Like financial statements are given by the company, whether can we believe it and take a decision or not. Auditor report is there, he is saying true and fair, believe it, so we will believe and then take a decision based on those numbers. So financial audit is enhancing confidence of the users. Now in the cost audit subject, there is something called cost records, okay, which is nothing but books of accounts. In the financial statements it is books of accounts, right? Here we call it as cost records. Then we have something called cost accounting statements. This is nothing but financial statements and financial statements accounts. So cost accounting statements, and these two will be audited by cost auditor. These two will be audited by cost auditor. Now we know that books of accounts, financial statements mainly is a public document which is used by public. What about cost accounting statement? We have never seen anywhere outside they are circulating. No, cost accounting statements are confidential, they are not meant for public domain, they are not for public. Then why cost accounting statements are prepared, cost records are maintained, why cost audit is done? This is for the benefit of the government. This is for the benefit of the government. Like, you know, whether a company which is manufacturing so and so goods, are they charging fair price or are they charging exploiting? Like, are they charging too much of money? So government want to know, government want to regulate the consumer market, inflation and all they have to regulate. So if they have to regulate inflation, first they should know what are the factors causing inflation. So they should know what is the cost a company is incurring. Yes or no? The cost accounts, cost accounting statements, cost records, cost audit, everything is from government perspective mainly, which indirectly helps public a lot. Clear? Now look at cost audit. So based on cost accounting statements only, like every year a company will file cost accounting statements with the central government. Based on these statements, based on auditor's report only, government will design upcoming subsidy policies, all that. Okay. Now, so what is a cost audit? You know, our CMA Institute definition you can take. Cost audit is a system of audit where we review, examine, appraise. Appraise means what? Evaluate cost accounting records, which is mandated under Companies Act. Now we have for conducting cost audit, we have something called standards on cost audit. Okay, and for cost accounting statements, how to maintain cost records, how to maintain cost accounting statements, how to prepare them, we have cost accounting standards. Okay, now, so what is the scope of cost audit? This itself can be asked as a 7 marks question. The scope of cost audit is ensuring accuracy of cost data and correct computation of product cost. So in cost audit, we audit efficiency of details of expenditure. It's a preventive measure, it's a guide for management policy, it's a barometer of performance. Now beyond propriety, the scope of cost audit is beyond propriety. What exactly is the benefit or scope? What exactly cost audit covers? It beyond propriety. Beyond propriety means what? Here we not only look at wastage of resources, all that, we also advise company how to achieve efficiency, how to achieve effectiveness, all that. Look at cost audit focuses on efficiency and also improvement, which can help in determining sales price and margin. Through cost audit, it will help management in decision making. Cost auditor will identify wastages that are happening in inventory and recommend management, thereby minimizing wastages. Cost auditor will ensure inventory valuation is accurately calculated, accuracy of closing stock or inventory valuation, overall efficiency improvement, and cost auditor will help management in setting standards and budgets. Okay, now remember, all the standards and budgets are already there in cost accounting statements. In the cost accounting statement prepared by the company every year, they will discuss about all budget, standards, everything. So many disclosures and all will be there. Like cost accounting statements, cost records, cost accounting statements, they are in which format? CRA 1. Okay, I'll come to the formats point later. Next. So cost audit is not just a compliance tool, it's a valuable process that goes beyond compliance, which is offering wide range of benefits to the organization. Now we have another important question in this chapter. I'm only discussing this revision from exam point of view, absolutely. Okay, so I'm not covering rest of the content. Now, by the way, under Companies Act, which provision deals with cost audit? 148. The section that is dealing with cost audit is what? 148, which has 8 subsections. 148 section has how many subsections? 8. 148 subsection 1, which talks about central government, for companies, central government, has to pass an order regarding cost records applicability, all that. 141 talks about cost records applicability, which companies are liable for cost records, all that. Okay, and 148 subsection 2, that talks about when cost audit is applicable, when cost records a company has to maintain, when cost audit is applicable. We'll discuss in the upcoming chapter. Second and third chapter both are dealing in depth on this point only. Then, and 148 subsection 3, this talks about who should do the cost audit. 1 talks about cost records applicability, 2 talks about cost audit applicability, 3 talks about who should do the cost audit. It must be conducted by a cost accountant in practice. Okay, appointed by whom? Board of directors. And this auditor must do audit as per cost auditing standards. The same subsection says a person appointed as an auditor of a company under 139 shall not be appointed as auditor for cost records. A financial auditor cannot conduct cost audit, where it is told 148 subsection 3 itself, because that's the only section talking about cost auditor, who should be a cost auditor, who should not be a cost auditor. 148.3 MCQ might come. Next, and remember, subsection 4 is giving a clarification. What clarification? See, this is in addition to audit under financial statements. So financial statements audit and these are not substitute in nature, they are complementary in nature. So it's a clarificatory provision. Then 148.5, what this section talks about. Now, okay, we understood only a cost accountant. Are there any disqualifications for him? Yes, there are some disqualifications. What are his rights? What are his duties? All qualifications, disqualifications, rights, duties, all these provisions exclusively they have not given for cost auditor. Wherever applicable, you take financial auditor provisions only here also. So 148 subsection 5 talks about applicability of financial auditor related provisions under Companies Act to cost auditor. So what are they? The cost auditor is subject to same qualification, disqualification, rights and duties as other auditors. Yes or no? The cost audit report shall be submitted to board of directors. 148.5 also talks about one more point, to whom the report is to be submitted, board of directors. So where it is mentioned 148.5 MCQ, this point can be asked as an MCQ. Here in cost audit, no, you can get MCQs on section numbers, you may get MCQs on form numbers, you may get MCQs on cost audit standard numbers, cost accounting standard numbers. Penalties can be asked. No, anything can be asked in MCQ. Next, now cost auditor has to submit a report to board, right? Within what time? Within 30 days. I mean, board of directors, what they need to do? Okay, cost auditor will submit the report to board. Now board, what they need to do? They need to submit the report to central government. They need to submit the report to central government. Okay, so 148.1 to 148.6, these are the provisions. 1, which talks about cost records to be maintained. 2, which talks about cost audit when it is applicable. 3 talks about who can be cost auditor, who cannot be cost auditor. 4 talks about cost audit is in addition to financial audit. 5 talks about 2 things. Qualifications, disqualification, rights to duties are same like financial auditor. 2, cost auditor has to submit a report to board of directors. 6 talks about, now company received cost audit report, right? What they need to do? They need to submit this to central government. That is what subsection 6 talks about. Then what subsection 7 talks about? After submitting report to government, no, if government want more information, they can ask from the company. So that is what subsection 7. Subsection 7 is from government point of view. Then subsection 8. What is this subsection 8 talks about? Penalty for non-compliance. If any of these provisions are not complied, yes or no, you are punishable. Company and officer is punishable as per 147 subsection 1. What is 147 subsection 1? Financial auditors. For financial auditor also that 147 is applicable. Okay, so if a company and officer is a default with any of the above provisions under 148, they are liable for punishment under 147 subsection 1. What if auditor defaulted with provisions of Companies Act? What if auditor is the mistaken? Then same 147 subsection 2 to subsection 5 talks about auditors related punishment. Able to understand? Now remember, this 147 subsection 1 plus subsection 2 to 5, the same composition is applicable even for financial auditors as well. Clear? This is regarding 148. They may ask you a 7 marks question. Write about provisions of cost audit under Companies Act 148. They may ask you a 7 marks question. You have to write this. Next. Then, what are the objectives of cost audit? Remember here 2 points were there. One is general objectives and social objectives. In exam anything they can ask, or they can ask both. Write about objectives of cost audit and social objectives of cost audit. Social objective is what? Social objective means what? Ensuring your pricing is matching the quality. Like society should get a qualitative product, or whatever the price you are charging, quality should match. And you should eliminate any disparities in pricing of the product. There should not be any differentiated pricing system. Ensure that no cost-based economic imbalance occurs in products and services. These are the 3 social objectives of cost audit. Then what are the primary objectives of cost audit? What are the primary objectives of cost auditor? He has to verify cost accounts are properly maintained or not. And these cost accounts are compiled according to cost accounting system. And we need to comply with prescribed procedures. Identify frauds and errors. Verify that cost of each unit and cost center is calculated correctly. Ensure that inventory valuation is correctly. Facilitate in fixation of price based on the cost data. Yes or no? Reconcile cost accounts and financial statements. Remember, we have in second chapter reconciliation problems. Generally in exam 7 marks question might come. Reconciliation problem is there. In the second chapter I will discuss that particular problem. One problem we will discuss. Next. Cost auditor objective is to ensure all resources, human, physical, financial, are optimally utilized, and he will advise management where improvement can be done. He will promote corporate governance, and he will also support on anti-dumping, valuation of cost, anti-profiteering, all this. These are all various objectives. Now here you see 12 points were there, below 3 points were there. All the 3 points are important social objectives, and in the remaining 12 points, any 6 points you have to write. That's it. Next. What is the utility and advantage of cost audit? Like how cost audit evolved and what are its benefits? Initially, cost audit was is a price control tool in the consumer and infrastructure industries. The main objective when cost audit was started and introduced was to administer pricing mechanism in core industries like pharma, okay, and cement, all necessities and core industries will be there, right? Their price has to be regulated. For that reason, companies want, the government want to know what exactly the cost company is incurring and how much they are charging to customer. Is it reasonable and fair pricing or not? For that reason only the primary objective. Later, originally cost records, cost audit and cost records and cost statements, they provide authentic data to help government management demand and supply through price control. You are able to understand? Next. Now later on, like what are the benefits of cost information? What are the benefits of cost information? Benefits of cost information. First, it will help the organization itself. It will help the very original company itself to structure their cost, understand them, communicate effectively with stakeholders. It will help organization in assessing their own performance. Costing is a key tool for checking how well an organization performs, how profits are made, value is made. The moment we see a value, there is something called value addition. Okay, value addition means what? We are going to discuss with some problem in second chapter. Okay, next, how well inputs are turned into outputs, and it contributes to inputs on economic parameters like resource efficiency, waste management. So cost information benefits organizations to assess their performance. Okay, next, cost information supports decision making, like effective costing practices will support both regular and non-routine decisions like meeting customer expectation as well as profitability target, continuous improvement, guiding product mix and investment decisions. These are all various advantages, benefits of cost information. Remember, benefits of cost information, they say it's not benefits of cost audit, it's not benefits of cost accounting statements, it's benefit of cost information. Next, costing includes product, process, resource related information. So where a cost data will cover all functions in the value chain. Okay, it supports appraising actual performance based on strategies, and common data source for various reports. The cost information prepared by the company is the basis for preparing cost accounting statements. That's the basis on which cost auditor will perform the audit. Yes or no? And that's the basis for the management to take various decisions. And that's it. So what are the key benefits of cost audit? As per IFAC, what are the benefits of cost audit? Cost audit help identify weakness in organization cost accounting system. So cost auditor will identify weakness in cost accounting systems, ensuring more accurate and reliable reporting. And cost audit assist in reducing the cost by identifying wastage and inefficiencies. Thereby resource utilization can be in a better way, profitability can be improved. Cost audit will help even government by providing valuable data which will help in policy formulation, tariff fixation, taxation policies. Clear? No. How a company will prepare cost accounting statements, cost records? By following cost accounting standard. We have an exclusive chapter, fourth chapter. Like cost accounting standards means what? These are set of standards designed to ensure uniformity and consistency in cost accounting principles. For example, direct cost means what? Direct material cost means what? What you should interpret, what some other else should interpret, everyone should interpret in the same way. So for that, the standards are given so that everyone will interpret in the same way. Uniformity in application of cost accounting principles. Ensuring uniformity in application of cost accounting principles. That is the objective of cost accounting standard. Agreed? Next. So now, what is the objective of cost accounting? Guidance to user organizations. It provides guidance to government. It provides guidance to research agencies and academic institutions. The main goal is uniformity and consistency. Where? In cost classification, in cost measurement, in cost assignment. Okay, next. What are the benefits of cost accounting standard? 7 marks question can come directly. Benefits. Cost accounting standard provide a structured approach to measure the cost of manufacturing process. It offers guidance to users to achieve uniformity and consistency in cost classification, cost measurement, cost assignment, and cost allocation. Then it will help determine basis for computing cost of the products. So cost accounting standards will help you to correctly arrive the cost of the product, because you are charging expenses and all based on the standards. It enables practitioners, nothing but practitioner means what? Cost auditors, to use these accounting standards in attesting general purpose cost statements. And it assists in providing uniform understanding related to cost, yes or no, to the organizations, government bodies, regulators, and others. And it will integrate, harmonize, standardize cost accounting principles and practices across industries, across various types of companies, across various types of industries. What are all common cost will be there? Further, we will have a standards. Clear? This is cost accounting standards benefit. That's it. With that, the first chapter is completed. In the first chapter, what are the probable questions? One is scope of the cost audit. Okay, the one is scope of the cost audit. Benefits of cost information. Benefits of cost accounting standards. Able to understand? Then we have what else we have? Key benefits of cost audit as per IFAC. Key benefits of cost audit as per IFAC. Social objectives of cost audit. That's it. These are the 5 to 6 possible questions from the first chapter. In the first question in the exam, first, from this only it will come. Clear? That's it. With this, the first chapter is over. And one more thing, what I recommend everybody is, this is mainly this notes, this particular material, whatever you're seeing. In addition to that, open our question bank also. Okay, in the website we have question bank as well. So if you open, this is the question bank, you know, in the website PDF you will be there, you can just download the PDF. Even in the question bank we have given all past exam questions, MCQs at one place. Okay, please once read them, because in question bank one or two additional concepts also might be added, so that also you read them once for a better understanding, so that a comprehensive coverage will be there. Clear? So that's it. Next, so with this the first chapter is completed. Confident on this? Yes, that's it. So let's begin the second chapter, companies cost records and audit rules 2014. There is another rules called companies audit and auditors rules 2014. Audit and auditors rules are applicable for financial auditors. This cost records and audit rules are applicable for both companies as well as the cost auditors. Now what these rules exactly says? Okay, now if you remember 148 subsection 1, 148 subsection 1, 148 subsection 2, 148 subsection 3, especially in 1 and 2, they say as may be prescribed, as may be prescribed. Okay, to which companies cost records applicable? As may be prescribed. To which companies cost audit is applicable? Based on turnover, as may be prescribed. Where it is prescribed? Companies cost records and audit rules 2014. Here it is prescribed. Understood? So now this particular rules have some 6 or 7 sub rules. Some 6 or 7 sub rules we have. You don't have to remember the rule numbers. I'll tell you where to remember. Okay, now as per this particular rules, there are totally 4 forms that are involved with respect to cost records, cost audit. There are totally 4 types of forms. Okay, what are they? CRA 1, CRA 2, CRA 3, CRA 4. What is the CRA 1? The format of maintaining cost records. The format of maintaining cost records. These format of maintaining cost records is taken. These formats are taken from cost accounting standards. We have 24 cost accounting standards, right? These formats were developed based on principles that are guided, given under 24 cost accounting standards. Okay, now CRA 2. What is the CRA 2? This is appointment of cost auditor. Like, it's not actually appointment. Once a company appoint cost auditor, they have to inform it to ROC, right? Central government, right? So how they will inform? Through CRA 2 form they will inform. CRA 3. This is the format to prepare. What is this? This is a format to prepare cost audit report. The cost auditor, ultimately what he need to do? He has to give a cost audit report. In which format he will prepare the report? CRA 3 format he will prepare the report. Now cost auditor will prepare the report, and then what he need to do? He has to submit it to the central government. Sorry, he has to submit it to the board of directors. Okay, like, sir, what is this cost audit report? How he will be appointed? When he has to submit? What are the timelines? We'll discuss it. Okay, I'm just to briefly talking about 4 types of forms that are discussed in this chapter. CRA 1, cost records format, which is taken from principles given under cost accounting standards and GACAP, generally accepted cost accounting principles. Okay, so based on GACAP and cost accounting standards, based upon their principles, format of cost records, format of cost accounting statements, entire that formats are given under CRA 1. CRA 2, intimation to the central government regarding appointment of cost auditor by board of directors. CRA 3, preparation of cost audit report. CRA 4, which talks about filing of cost audit report. Remember, filing is spoken under CAR 4. In what format cost audit report is to be prepared? CRA 3 format. Now the report which you prepared, you will give it to board. The board has to file with the central government. Filing will be done in which format? CRA 4. So CRA 4 is a filing format. To the CRA 4, there will be so many annexures. One of the annexure is cost accounting statements. One of the annexure is cost accounting statement. Various other statements will be company attaching to the cost audit report. Entire that bunch they will file with the central government, and that filing format is CRA 4. These are the 4 forms that are there. In exam they'll ask you, in which format cost auditor prepare the report? CRA 3. In which format cost audit report is filed? CRA 4. Both are talking about cost audit report only, but one is talking about preparation, another one is talking about filing. So what exactly in the MCQ they are asking, you should figure out that. Able to understand? Now look at. So companies cost records and audit rules. And now, as I told you, there are totally 6 rules it has. What are the rules exactly? Rule number 1 talks about the title about this rules. These rules are called as companies cost records and audit rules. They came into force from 30th June 2014 onwards. They are applicable from 30th June 2014 onwards. Remember, MCQ 2 marks MCQ. Then in every act or rules, no, second rule number 2 or section number 2, which talks about definitions. Rule number 3, which talks about application of cost records. So rule number 3 actually talks about which companies are liable for cost records. Rule number 3 talks about which companies are liable for cost records. All the companies, look at what they say. All the companies, this rule applies to 2 categories. Okay, I'll come back to that categories later. This rule applies to all the companies manufacturing products or service, manufacturing goods or providing services as listed under, just a minute, as listed under table A, table B. If a company is engaged in manufacturing of goods or providing services as covered under table A and table B, and whose turnover is 35 crore or more, whose turnover is 35 crore or more, they are liable for cost records. These companies have to maintain cost records. Not every manufacturing company cost records are applicable. Only those companies which are manufacturing goods or providing services. That too, which goods and services? Those goods and services either covered under table A or covered under table B. Okay, only those goods if they are manufacturing, those services if they are providing, and there is one more condition, and the turnover is 35 crore or more. When it is to be seen? Preceding financial year. What is it? In preceding financial year. If the turnover is 35 crore or more in the preceding financial year and manufacturing either goods belonging to table A or table B or both, then these companies have to compulsorily maintain cost records. Clear? However, there is one exemption. Micro enterprise and small enterprise, they are exempted from these rules. They are excluded. So micro and small enterprises, they are exempted from maintaining cost records even though their turnover is 35 crore or more. Yes or no? Even though they are manufacturing products or providing services as listed under table A, table B, they are exempted. Clear? Hello? Next. So rule number 3, important MCQ. Okay, rule number 3 talks about what? Applicability of cost records for the company. Rule number 4, this talks about applicability of cost audit. Now this applicability of cost audit, we have in-depth discussion in the upcoming parts. Okay, in the second chapter or third chapter, there we have in-depth discussion. There I will cover regarding cost audit applicability. Remember, there are totally 6 rules that we have. Rule number 3 talks about cost records applicability. Rule number 4 talks about cost audit applicability. Then now rule number 5 talks about in which format cost records have to be maintained. The rule number 5 says the format is CRA 1. And rule number 6 is talking about cost auditor. Technically speaking, it is talking about cost auditor. How to appoint the cost auditor, of casual vacancy if it arises, what to do, all that was discussed under rule number 6. Then so rule number 1, CRA form number 1. Under CRA 1, a company has to maintain cost records for 30 items. For totally how many items? 30 categories. 30, and sometimes they say at some places 31. Actually 30 is what category? The 31st is called as unit of measurement. Unit of measurement is just a list, like what are all the measurement units that you have used when you're maintaining this records. Some companies they may use the word metric tons, some companies they use the word thousands, cages, some companies use some word million cages. Some companies use the word, various units of measurements. Companies uses it. Each company uses a different unit of measurement. So what unit of measurement you have used, you need to explain it under 31st item. So totally 31 items will be there. 30 are actual items. 30 are actual items which talks about various issues. Yes or no? 31 is actually unit of measurement. Able to understand? These records a company has to maintain. What records they need to maintain? A company has to maintain material record, employee cost record, utility record, direct expense record, overheads record, transportation cost record, pollution control, all this. Now all these items, how to arrive them, how to compute them, at the end of the same chapter we have given a list. We have given a list at the end of the same chapter. If you see CMA Institute study material, it will be very confusing. You can't even understand that. So we simplified it and gave it in the table format. What are all to be added, what are all to be reduced, what are all clarifications in each element, like that we gave at the end of this chapter clearly. Clear? Next. As I already told, CRA 2. CRA 2 is for what? Intimation of cost auditor appointment. A company has to inform central government regarding appointment of cost auditor. Yes or no? So in that, what are all we need to appoint? We have to mention details of cost auditor, the financial year for which cost auditor is appointed, details of previous cost auditor who is not reappointed, board resolution copy, and any other attachment. Then CRA 3, cost audit report format. CRA 4, it is for filing cost audit report. To that, annexures will be there, and the annexure will have 4 parts: part A, part B, part C, part D. Okay, part D talks about general information. Part C talks about service sector, what information they need to give. Part B talks about manufacturing sector, what information they need to give. What information they should give? Some quantitative data. They need to give some cost statement abridged. They need to give materials consumed, utilities consumed, industry specific operating. Here also the same, almost the same. And general information, value addition and distribution of earnings. That statement we need to submit. We also have to submit reconciliation, profit reconciliation between cost records and financial records. Okay, so these two. Now on these two we are going to compute problems. On these two. Only these two types of problems were there. Pakka some 7 marks to 10 marks weightage from these problems. I will show you 2 model problems. You will understand based upon that. Next. Then CRA 4. This is a format. This is a form for filing cost audit report. Now when you are filing this form, generally you will also attach along with this form XBRL form. XBRL form related to cost information, all that. Okay, and any other optional attachment. Now we are having detailed discussion. Now we just saw 6 rules briefly. Now we are going to discuss in a detailed manner what are all these. Okay, by the way, cost records are applicable for which companies? Indian or foreign, doesn't matter. Every company is applicable. When it is applicable? If at all they are engaged in production of goods or providing services as specified in the table. Table means what? Table A, table B. Table A talks about what? Regulated sector. Table B talks about what? Non-regulated sector. So if a company is engaged in production of goods or production of services which are specified in tables, and they have annual turnover of 35 crore or more in the immediately preceding financial year, then that company is liable for cost records. However, one exemption, please write exemption here itself. Exemption, what is the exemption? We already saw above, but one more time we will write here. Micro and small enterprises under MSME, remember micro and small only exempted, medium enterprise not exempted. Okay, so micro enterprise and a small enterprise as defined under MSME Act are exempted from cost records applicability. They are exempted from cost records applicability. Please make a note of that. So a micro enterprise and a small enterprise covered under Micro Small Medium Enterprises Act, they are exempted from cost records applicability. Clear? All of you? Next. Now, what about cost audit? Rule number 4 talks about cost audit applicability, correct? Cost records applicability is mentioned under rule number 3. Cost audit applicability is given under rule number 4. Now I told, right, table A, table B, this is discussed under rule number 3 only. What is table A? What is table 4 products? Okay, they are discussed under rule number 3 only. Suppose if a company is manufacturing products or services which are covered under rule number 3, if a company is manufacturing products or services under rule number 3, then when cost audit is applicable for them, when the cost audit is applicable for them, must get cost audited if annual turnover is 50 crore or more and aggregate turnover for individual product and service. Which individual product and service? It may be table A product or table B product or both. This is very important clarification. Which may be table A product or table B product or both. And from those products turnover is 25 crore or more in the preceding financial year. Now look at this diagram, a simple diagram I'll give you. Now a company is manufacturing either table A or table B products, only then the question of cost records and cost audit arises. Agreed? Now when they are manufacturing table A and table B products, if at all they are manufacturing either table A or table B or both, whatever, okay, if they are manufacturing that and if their total turnover in the last year is 35 crore or more, then cost records they need to maintain. Agreed? They need to maintain cost records. Now when cost audit is applicable, very simple, suppose company is manufacturing table A products, table B products, or either one of them or both of them, okay, either one of them or both of them. Is this company liable for cost audit is the question. Is this company liable for cost audit is the question. A company is manufacturing goods which either falls under table A or falls under table B or both, doesn't matter, okay. Is this company liable for cost audit provision is the question, okay. Now what is their overall turnover in the last year? Is it more than 50 crore? Check out last year total turnover. Is this product other product, doesn't matter, total turnover how much in the last year? Is it 50 crore or more? Check out. Suppose yes, the answer is yes. And check one more condition. Are their turnover, is the company turnover is more than or equal to 25 crore from table A plus table B related products? Check out. Yes, last year turnover is more than 50 and current and last year table A or table B or both put together the turnover is more than 25. Then with respect to table A products, they are liable for cost audit. First apply, first remember this, sir. What is table A, what is table B? There they said regulated sector, that and all I'll connect later. Okay. Now suppose 25 crore crossed, overall turnover 50 crore crossed, from table A table B products turnover 25 crore crossed, okay, in the last year. Then table A products audit is mandatory. Sir, actually the company is manufacturing both table A table B, sir, but is audit now audit is liable only for table A right now? Yes. When table B products are also liable for audit, company is manufacturing table B product also, right? Is that product also liable for cost audit? Yes, it is liable if at all the last year turnover is 100 crore or more and total turnover from table A and table B is more than or equal to 35 crore, correct? More than or equal to 35 crore. More than or equal to 35 crore. Here the provision is applied in an incremental logic. Able to understand? Incremental logic. We should not apply from regulated sector how much turnover, from non-regulated sector how much turnover. This breakup itself is irrelevant. They always say table, rule number 3, turnover. They say turnover. Here, for example, you see, here what they say, aggregate turnover for individual products and services. If you see the original law, rules, covered under rule number 3, they say. Covered under rule number 3 means what? Rule number 3 covers about which products? Both regulated sector products are covered in rule number 3, non-regulated is also covered under rule number 3. So when you are checking this 25 crore limit and 35 crore limit, rule number 3, table A, table B, both the products you need to check. Clear? Now look at once again. So see, the company in reality may be manufacturing only table A, or in reality they may be manufacturing only table B, or they may be manufacturing both. That doesn't matter. Last year turnover how much overall? More than or equal to 50 crore crossed? Yes. Last year turnover from table A plus table B, both put together more than or equal to 25 crore crossed? Yes. Then all table A products are liable for audit. All table A products are liable for cost audit. For example, it is more than 50, more than 25. Not only this, it is more than 100 also, it is more than or equal to 35 crore also, then both table A, table B, all the products are liable for cost audit. Then all the products are liable for cost audit. Very simple. If at all a company table B product is liable for audit, automatically table A product is liable for audit. When table B audit is applicable, suppose you are manufacturing table B products, when those products are liable for audit, if your turnover is more than 100 crore and total rule number 3, total table A, table B put together turnover is also crossing 35 crore. Indirectly, what are they saying? Very big company, both the products are liable for cost audit. Not so big company, only table A products are liable for cost audit. Can I say like that? Yes or no? Yes. Now look at. So companies which are covered under non-regulated, suppose if a company is manufacturing products under non-regulated sector, for example, then when audit is applicable, overall turnover in last year must be more than 100 and aggregate turnover for individual products and services, aggregate individual products and services covered under table A plus table B put together should be 35 crore or more, then only audit is applicable. Able to understand, which means if a company is covered under second category, if at all a company for which cost audit is applicable for non-regulated, automatically it is obviously applicable for regulated also. Clear? All of you, for this applicability provision in our question bank, we have given some problems on this. Okay, just go ahead with that. Some questions will be there, solved case study, some questions were there, some 5 or 6 questions were there. You just apply this logic, whatever I told, it will be easy. Clear? Now cost audit is exempt for certain companies. What companies? Export oriented company, a company who is export oriented, where 75% of the total revenue is from exports in foreign exchange. No duty for cost audit. Sir, their turnover is 500 crore. Doesn't matter. Cost audit is exempted. And a company which is engaged in says special economic zone, exempted. Or a company is engaged in generation of electricity for captive consumption. Remember, generating electricity is a table A product. Electricity generation, distribution, all that comes under table A. So a company engaged in generation of electricity, okay, so this company, and actually they are generating not for supplying to public, but they are generating for captive consumption. So if at all they are engaged in table A product manufacturing just for captive self consumption, that is also not liable for, that don't come under general manufacturing. We exempt them from cost audit. So 3 exemption: special economic zone, an entity whose revenue from exports in foreign currency is more than 75% of the total revenue, and third one, a company which is generating electricity for captive consumption, that is also exempt from cost audit. Clear? Hello? The same is given as a diagram. So cost records applicability is given under rule number 4. So whenever you see 25 crore, 35 crore, here individual products and service means what? Rule number 3 turnover. Rule number 3 turnover means table A plus table B. Both you should see when you are checking the 25 crore, when you are checking the 35 crore. Clear? Overall turnover means what? Table A, table B plus other products. That's it. Next. So now they are now talking about various records that they need to maintain. Now cost auditor, what is his tenure? Straight away now we'll discuss this question. Okay, cost auditor, what is his tenure? Just 1 minute. So cost auditor, let's discuss cost auditor. Cost auditor means what? Here we are going to discuss about appointment procedure, all that. Now there is a diagram here. So cost auditor, who should appoint? Who will appoint the cost auditor? Board of directors will appoint in a board meeting. When they will be appointing? Within 180 days from the commencement of the financial year. Cost auditor shall be appointed within 180 days from the commencement of the financial year. He shall be appointed. Now then, okay, after appointment, what they need to do? After cost auditor is appointed, they need to file a form with central government, CRA. They need to file which form? CRA 2. File a notice of such appointment. In which format you will find this? You will file this notice. CRA 2. Within how many days? Within 30 days of the board meeting in which appointment is taken place, or like in exam they may ask you, CRA 2 filing time limit is what? Within 30 days of the appointment, or maximum 180 days from the commencement of the financial year, whichever is earlier. Or within a period of 180 days from the commencement of the financial year, file a notice, whichever is earlier. So CRA 2 form once a cost auditor is appointed, a company has to inform the cost auditor appointment details to the central government within 30 days of the board meeting or within 180 days from the commencement of the financial year, whichever is earlier. Now, cost auditor, until when his tenure is valid? Cost auditor tenure is valid until expiry of 180 days from the closure of the financial year. The cost auditor tenure is valid until 180 days from the closure of the financial year or till he submit the report. Now, okay, so he will be appointed within 180 days from the commencement of the year, and once March is over, from there within 180 days. This is the appointment tenure. In between, if cost auditor is affected with disqualification or died or some removal of membership happened for him, so casual vacancy happened in cost auditor's position, who will replace? Board of directors only has to fill the vacancy within 30 days. Whether the casual vacancy, it may be by resignation, it may be by removal, it may be by death, or it may be disqualification, it doesn't matter. Casual vacancy may be because of death, removal, disqualification, all that doesn't matter. Board of directors only will fill the vacancy. Again, since another auditor is appointed to replace the old auditor, again it's an appointment, right? Again, this appointment information CRA 2 form you need to file within 30 days of such appointment. And finally, the whoever is the cost auditor is there, he has to submit his report in CRA 3, and CRA audit report shall be submitted to board of directors within 180 days. Finally, once board of directors receive the audit report, what they need to do? They have certain annexures, which there are some annexures which they need to prepare, and those and all has to be attached to the audit report, and they need to file in CRA 4 to central government within 30 days from the date of receipt of the cost audit report. Once cost audit report is received by board of directors, 30 days is the time limit for them. Within 30 days they need to file this cost audit report, and they should also attach some annexures. That's it. This entire matter you can easily read and understand now. Okay, this entire matter you can read and understand. Now next, now we have some points. We told, right, in CRA 1 there are totally 30 elements were there, right? All the 30 elements were explained. What are the 30 elements? For example, if you see, this is something like your costing principles only. In your CMA inter costing and management accounting you studied, the same principles here they have mentioned. No specific new principle. For example, and remember, these tables are important. You need to read on your own once, because this is very easy for self study. Okay, if possible tomorrow, later on, one more revision class on this particular topic I will do later, but in this main revision I'm not covering that. But briefly I will show you. Normal losses from material before reaching the factory should be absorbed in cost of the remaining material net of recovery. Only units you will reduce, but you will not reduce amount. Okay, shrinkage or evaporation loss, they must be, absorption should be absorbed in material cost, adjusting the quantity accordingly. Transportation cost, they must be determined as per transportation section is there. We have another separate table for transportation, there it will be decided. Now if you see, what are the items of cost to be reduced? Reduced means if at all it is included in total amount, reduce it. If it is not included, ignore it. Okay, finance cost you have to ignore. Demurrage charges you have to ignore. Subsidies and grants, if at all total material cost price is there, from that subsidy you got, reduce it. Then abnormal cost should not be included. Understood? Now for example, if at all you are buying this material from outside India, you should value them on the date of transaction, not forward rate, not settlement rate. Date of importation, what is the price of the raw material? That is the price at which you should record it in the cost records. Understood? Subsequent changes in exchange rates and all will not be forming part of cost. These are key points in material. Now coming to employee cost. Employee cost includes what? Gross amount, allowances, cost benefits, yes or no, retirement benefits, everything. Okay, for everything. Next, remeasurement in other comprehensive income. Suppose because of in India there is something called remeasurement of employee cost, employee benefits. That remeasurement value is just an adjustment accounting. Don't consider that as part of cost. Bonus, they are part of the cost. Remuneration paid to directors, board of directors, executive directors, managing directors, yes, it will be forming part of employee cost. However, non-executive director remuneration is part of administrative overheads. Non-executive director, non-executive, he won't execute anything in the company. He's just there for the meetings, which is for administrative activity, corporate activity. So it will come under administrative overheads. MCQ might come. Non-executive director remuneration is part of administrative overhead. Okay. Then recruitment and training cost. Yes, of course, this is treated as overhead. Recruitment and training cost is treated as overheads. Then what is not included in employee cost? Subsidies and grants. If at all government is reimbursing some of the wages, don't. Okay. Penalties or damages to pay to state authorities, they are not to be included in employee cost. Any recovery from employee should be reduced from employee cost. Okay. For example, a company gave 10,000 worth of accommodation and they charged in employee cost 10,000, but they recovered 5,000 rupees from the employee. That should be removed. Only 5,000 is the company net incurred rate. That's it. Next, utilities. Utilities means what? Water, electricity, boilers, all the steam. These are all various utilities. Okay. So utilities, no, whatever the cost of purchase utilities, purchase cost. Self-generated utilities, direct cost, direct employee, direct expense, and factory. Nothing but cost of production. If at all self-generated utility, cost of production. Okay. Next. Then what are the items to be excluded? I think there are common points again. Subsidies, grants, common points. Common points were there. Fine. Direct expense. These are all, I think, I hope you're able to understand, right? Okay. Mostly these are all something which you can easily understand. Earlier, whatever you have studied in CMA Inter, cost accounting, management accounting, or even in final SEM, same principles, no new things. Okay. So that's it. With this, I will conclude the second chapter, but problems were there in second chapter that we will discuss. Okay. Now let's go to the problematic paper in the second chapter. Let's go to the problematic paper in the second chapter. Now, we'll just go to 15. You know, here there are two types of problems which they will ask. There are two types of problems that can be asked in exam. Okay. Here you see computing value addition as a percentage of net sales. Computing, one is value addition. How much is the value addition? And how much is the operating profit? Operating profit is very simple. Operating profit means what? Total income minus direct expenses, all that. You know, operating expenses, if you reduce, what you get is operating income. Value addition means what? When you're calculating value addition, what is value addition? When I buy raw material and processing this raw material, how much sale I generated, and that's called value addition. To generate this value, I incurred some cost also. For example, employee cost, I incur all that. But employee cost is not value addition cost. Because no, a company buy the raw material and do some further processing and sell it. Whatever the extra value addition that they generated, no, that is distributed among employees, investors, government in the form of taxes, lenders in the form of interest on capital, all that. Able to understand? So when you are preparing value addition statement, you should calculate operating profit before considering. You should compute operating profit before considering employee cost, before considering finance cost, before considering dividends, before considering taxes. Able to understand? And before even considering retained earnings. So that is how value addition has to be computed. How value addition has to be computed? Very simple. Take sales figure. Stock adjustment you do. Stock adjustment you do as usual. Closing stock, net increase in stock or net decrease in stock, or stock adjustment you do. Then reduce all expenses except employee cost, employee related cost, managerial remunerations, okay, non-executive director, all that managerial, dividends, interest on capitals, taxes, retained earnings. See, whatever value, all these people together generated this value, they will distribute it among themselves. No, so before considering manpower cost, before considering finance cost, before considering various factors of input, okay, how much value generated purely based on raw material by using utilities, using raw material and using utilities, okay, how much value we generated, that value generated will be distributed among employees, managerial people, taxes, government, investors, lenders. That's it. Able to understand. Now, how to compute operating profit? If you see directly, I will show you the answer. You can easily understand what items are not considered. I will show you. Operating profit is not about value addition. Value addition is different. Operating profit is different. So let us look at operating profit. You see, operating profit, how are they computing? You see, how much is the net sale? Generally in exam, they'll give you net sale figure. Now, cost of the sales. Now you are computing cost of the sales. What you are reducing? Raw material, direct wages, power and fuel, storage and spare, factory overhead, excluding depreciation. Because in the question, they are asking the computation should be based on EBITDA. EBITDA means what? Earnings before depreciation, interest and tax. So before depreciation they are asking this. So that's the reason why they are excluding depreciation. Suppose in the exam they say after depreciation, then after depreciation. So administrative overheads, selling and distribution overheads they are reducing. Bonus and gratuity also they are reducing. Now, this is the total cost. So company has actually generated operating profit 199 only. The company has actually generated operating profit 199. Remember cost sheet in your CMA inter, you might have understood cost sheet objective is to compute operating profit. Operating profit means profit from operations of the entity after incurring all factory cost, overheads, administrative overheads, selling cost, everything. Yes or no? Then what you get is called as operating profit. To this operating profit, if I add non-operating income and if I reduce non-operating expenses, then I will get P&L, financial accounting profit. Hello? Yes or no? Now you see how value addition they are computing. Difference between what is a value addition? Difference between value addition is a difference between net output value, net sales, and cost of bought out material and service. Remember this, cost of bought out material. From outside what material I bought, from outside what services I bought, only that I should reduce. Inside services which I paid, no, employees I paid inside, directors I paid inside. These and all I will not consider. Only bought out material and service cost I should reduce. What is value addition? Value addition is equal to net output value. Net output value minus bought out material or services. Only this, this you need to reduce. For example, in the given question, if you see, when I am computing value addition, I will consider net sales. I will reduce raw material. I will reduce direct wages. This is not a bought out item. This is incurred in the company. So I will not reduce it. I will reduce power and fuel. I will reduce stores and spares. Okay. Then again salaries. This is not a bought out item. Depreciation is to be ignored, they said. Depreciation you have to ignore everywhere. Rates and taxes is not a bought out item. It is something that I need to appropriate after incurring money. After making money I should pay to government. This is not a bought out item. Then salaries and wages, not a bought out item. Rates and taxes, not a bought out item. Other overheads, yeah, it's a bought out item. We don't know for what they incurred, but I assume that other overheads is some service that you bought, some item that you bought. Selling, wages, salaries, not a bought out item. Packing and forwarding, yes, bought out item. Depreciation, we are ignoring. Other overheads, yes, we are considering. Then interest is just an appropriation. It is not a bought out item. Bonus and gratuity is not a bought out item. So now you compute this. Okay, what is that? So 1745 you add minus 1140 minus 30 minus 6 minus 162 minus 6 minus 124 is equal to how much is the value added? 277 I'm getting. There is something else is also there. Is there anything that we missed? In computation? Hey, here other overheads is there na? 6. That we didn't consider. We missed it. This item we missed it. Okay. That is also bought out item only. So how much is the value addition? 271 is the value addition that company made. Okay, by selling, by buying what are all the company bought from outside, raw material and various other services they bought from outside. Internally they purchased employee service, manager service, director service, all that and all you ignore. They are all inside, we incur. How much a company is buying from outside and how much sale that they generated, the difference is called as value addition. Now this value addition, no, how much is the value addition now we computed? How much is the value addition that we computed? Value addition right now we computed is 271. Now how I will distribute this? I will distribute among employees, I will distribute among directors, I will distribute it for as taxes to government, I will distribute it to investors, I mean investors in the form of dividend, I will distribute them to lenders, interest on capital, then balancing figure if at all is there, I call it as retained earnings. Sometimes in exam they may ask you, in this question right now what they asked is, what is value addition? 271. We also computed operating profit 199. How much is the operating profit as a percentage of value addition? 199 divided by 271. This is what they asked. 73%. 73% is the 73% is nothing but what is operating profit percentage out of total value addition. Indirectly the 27% is for distributions to various people inside the company. Yes or no? Now until this only in this question they ask, only until that only they have asked in that question. Now there is another question where you see here operating profit as a percentage. Okay, operating profit as a percentage of value addition. What is value addition as a percentage of net sales? 271 divided by net sales, that percentage. This kind of questions can come in exam directly. Okay, now here they have given one more question. Now here what they're asking, they're asking value addition. They're also asking how much earning is available for distribution. Value addition versus earnings available for distribution. What is the difference? Value addition plus other incomes if you take, then you will get earnings available for distribution. Value addition plus other incomes if you total, then you will get earnings available for distribution. How to compute value addition? Net sales minus bought out material or bought out services, then you get value addition. To this value addition if you add other income, then you will get earnings total which is available for distribution. Then they are asking distribution of earnings to different claimants, employees, directors, tax authorities, lenders, and balancing figure is retained earnings. Correct? Now let us directly compute value addition here in this problem. So net sales we need to consider. Other income we will not consider now, I will keep it pending. Other income I will consider when I am calculating earnings available for distribution. Increase in stock I will consider. Raw material consumed I will reduce. Direct and wages, that is not a bought out item. Power and fuel, bought out item. Stores, bought out item. Cess and taxes, not a bought out item. Other manufacturing overheads is a bought out item. Audit fee, yes, it's a bought out, it's purchased from outside. Service purchased from outside. Salaries and commission to directors, not a bought out. Other overheads, it's a bought out item. Salaries and wages, not a bought out. Packing, yes, it's a bought out item. Other overheads, it's a bought out item. Then in depreciation we should ignore it. Here probably they are here also we don't consider depreciation. Okay, generally whenever we are computing value addition we ignore depreciation and then compute generally. Okay, now interest charge, only working capital loan I will consider it as a bought out item. Working capital loan alone is considered as a bought out item. Remaining and all various appropriation I will consider. Okay, remaining fixed loan, no, it's not a bought out item. Okay, it's a distribution. Debentures is a distribution. Provision for taxes is a payment to government. Proposed advance is payment to investors. These are all not contributing directly to value addition. So what is contributing to the value addition? I borrowed working capital. Because of this one I'm able to generate value addition. Yes or no? Value addition means operating. How much operating amount you are able to generate. That is value addition. That's it. Now let us look at this. So 4,800 plus 20 minus 1,760 minus 240 minus 160 minus 430 minus 36 minus 260 minus 20 minus 250 minus 60. 1604 is the value addition. Just look at this. How much is that value addition? Yes, you can see here 1604 is the value addition. So first part of the answer we computed value addition. Second, Earnings available for distribution. What is the formula? Value addition plus other earnings, other incomes. Here how much is the other income? 300. So value addition plus other income is equal to 1904, which is available for distribution. Now not only that they are asking, they are also asking third question. What question? Third one they are asking. Okay, third question what they are asking? Distribution of earnings to different claimants. 1904 I will distribute between various people like this. 1904 I will distribute. If your retained earnings answer is correct, your answer will be correct. Retained, first I will distribute among employees. How much I will distribute among employees? You see here, what are all employee cost is incurred here? So employee cost, this one, correct? Salary to director, 48 is an employee cost. Is there any other amount here in this employee cost? Then we have here direct wages, 440, correct? That's it. So 440 plus 48 plus 36, correct? Yes, correct only, is equal to 524 we are distributing to employees. 524 we are distributing to employees and directors. Both I can categorize under same. Okay, employees and directors I categorize under one category. But better you show employees how much, directors how much, you show breakup better. Okay, no problem. Next. Next, how much again I'm distributing for tax departments, taxes. Now here you see cess and tax 120, and again below is there any other taxes that I'm paying? So cess and local taxes, no other. Okay, provision for tax, array provision for tax is there, 316 plus 120, how much it is? 436, correct? 436 for government towards taxes, correct? Then then I will see proposed dividend. You see proposed dividend, how much it is? 420. This is for shareholders, correct? So 420 proposed dividend to shareholders. Then we have interest on debentures in IDBI plus interest on debentures. Total how much it is? 120, correct? 120 to lenders. Now is there any other amount that we not considered? That's it. Depreciation we can ignore it. Okay, depreciation we can ignore it. Now how much is this total amount? These three, 524 plus 436 plus 420 plus 120 is equal to 1500. Okay, so these all put together 1500. So balancing figure 404 is retained earnings. If your retained earnings answer is right, your entire distribution generally will be right. See the answer given, correct? That's it. This is one type of problem that they will ask in exam. Clear? All of you? Next, they will be asking you something called reconciliation. Next, they will be asking you some questions called reconciliation questions. Okay. Now here if you see, here what they said, the financial accounting, they have a profit of 8 crore 98 lakhs some 7,500. Okay, the profit as per cost records for the same period is less. Cost records profit is less compared to financial profit. Okay, the following details are extracted from both. Financial accounting what they did, cost records what they did, they have given both the details. Okay, now if you see in financial accounting, opening semi-finished goods and opening finished goods, this is nothing but both are opening only. Okay, now closing finished goods and closing semi-finished and closing finished. So these two are opening we need to add, these two are closing we need to reduce, whereas in cost accounting the numbers are different. So no, this is one reason why cost records profit was less. Okay, this is one reason why cost records profit is less. So what we need to do, technically speaking, we will start with the financial accounting profit. Start with profit as per P&L. Now in the P&L account, where and all differences were there compared to cost records? See, very simple. Our objective is in BRS, bank reconciliation statement, you do know bank balance as per bank passbook. Then you will arrive bank balance as per cash book. So where and all adjustments, that you just eliminate the adjustments. Yes or no? The difference causing items you eliminate. Automatically you get net balance. Correct? Next. Yeah, it's okay, no problem. So now look at, so can I do this? Okay, now for example reconciliation I am doing it. So first You know, I have profit. Net profit as per P&L account. Net profit as per P&L account. How much it is? 8 crore 98 lakh 7,500. Now first thing, stock adjustment is there. In P&L account, total opening stock how much? 31,700 plus 83,220 is equal to 1,14,920. Total closing stock how much? 35,260 plus 89,320 is equal to 1,24,580. This is the books of accounts, financial statements related opening closing stock values. Cost accounting related, 35,210 opening stock plus 78,590 is equal to opening stock as per cost records is 1,13,800. 39,420 plus 84,50 closing stock is equal to 1,19,870. Correct? 870. Now tell me, in cost records there is a net closing stock which is a positive. Correct? How much is the net closing stock? 119,870 minus 113,800. So net stock effect 6,070, cost records. Ultimately stock adjustment is 6,070 positive in cost. Whereas in financial statements 124,580 minus 114,920, here net stock adjustment is 9,660. Oh, see, they said in the introduction, financial statements profit is higher, cost records profit is lesser, because net stock adjustment 9,660 added in financials, whereas here 6,070 thousands. This is thousands. Okay, here also we can do one thing. Here also we can take thousands. 8 lakh, what's actually here? 8 crore 98 lakh 7,500. So 89,807.5. I will start with this. Okay, now if you see below, we understood right now that in costing the net stock adjustment is 6,000 only, whereas in financial statements net stock adjustment is 9,660. How much extra in financial statement net stock adjustment happened? 3,590. Financial statement has net stock higher. Now if I have to bring costing profit, what should I do? Eliminate it. Yes or no? Minus stock adjustment issue. How much it is? 3,590. Then only I will get a costing profit. Correct? Next. Now if you see urea and transit subsidy. Subsidy means what? Income. Now in financial books of accounts, this income is considered. In costing books, it is not considered. So if I want to know costing profit, what should I do? Now here what are they saying? You are required to prepare reconciliation statement, arrive profit as per cost records. So they are asking you to bring cost record profit. So now in financials, no, this subsidy income is considered, whereas in cost we didn't consider. Yes or no? So what should I do? Reduce it to get cost records profit minus subsidy. How much it is? 248. 348. 348. Next. Expense on CSR. This is an expenditure item. In financial statement, this amount is already reduced. In cost records, we should not reduce, which means to this extent, cost record profit will be higher. So I will add back. Yes or no? CSR, how much is the amount? 56. 56 I will add back. Next. Profit on sale of fixed asset. Add back. Correct? Hello? Profit on sale of asset. No. It's a profit, income item. In P&L account, it is considered. In costing, we should not consider. We should reduce. How much is that? 150. Next. Chemical used internally. Chemical consumed internally 382, whereas in costing it is 365. In costing we shown only 365 expense, whereas in books of accounts we shown 382 expense. 17 rupees extra expenditure we shown in P&L. To that extent costing profit will be higher, no? So if I have to go to costing profit to that extent, I have to bring add back. Correct? But in books, they did reduced. That's wrong. Whereas in suggested answer of June 25 exam, they gave right answer. Yes or no? So add back, what is that? Consumables, excess consumables. Yes or no? 17. Correct adjustment. Hello? In the book, below answer they might have reduced. In the CMA book they might have reduced. That reducing is not right answer. Look at June 25, they added this kind of adjustment. Okay, very simple. In financial statements, extra expenditure shown. In cost statement, low expenditure is shown. By showing extra expenditure in financial statements, profit would have been reduced in the financial statements to this extent. So if I have to bring cost profit, I have to add back. Then favorable exchange rate variation. Favorable means this income is considered in financial statements, but we should not consider in financial statements. Okay, so reduce it. Forex. Okay, reduce how much ma? 294. Next, post-retirement medical grant. This is a company expenditure. In financial books, we showed this expenditure. In cost, we didn't show this expenditure. Yes or no? In financials, we already reduced it. Yes or no? We need to add back. Next, purchase tax refund. Refund is shown in the financial statements, income item, but costing it was not shown. So if I have to bring costing profit, I should eliminate this. How much is that? Next, litigation recovery. They said recovery means income. In financials, they consider this income. In costing, they won't consider this. So I should reduce. Hello, correct? That's it. Now look at 89,807.5. Yes or no? Minus 3,590 minus 348 plus 56 minus 150. Yes, plus 17 minus 294 plus 584 minus 453 minus 125 is equal to 85,508.5 is the costing profit. But here in the book, if you see, 34 rupees difference will be there. 85,470 they said, correct? 85,470.5. 85,470.5. What is the difference? 85,508 minus 85,470 is equal to 38. 17 into 2. Actually, how much is that difference actually here? Here first, you see the difference first. Here 17 only. Rest all of the right, whatever. Only this they reduced actually. This actually we are supposed to add. So look at once all this. Stock adjustment 3590 correctly took. Correct? Okay, add additions 584.56 we added. Here also 584.56 we added. Then 150, 348, 125. 150, 348. Yes, reduced. 150, 150, 348. 150, 348. 125. Reduced. Correct? We reduced it. Then what else we need to reduce? 294 we need to reduce. Did we? Yes, we reduced it. All the items, this 3590 considered. 450 also, 453 also, yes, reduced. Correct? 453 also reduced. Now 17 here they reduced. They should not reduce it. They should add it actually. To that extent only answer will be different. So which means here our answer everything is right. Probably here might be some small computation mistake might have been there. Okay? 504. Okay, fine. So 504 is correct. Our answer is this 85,504.5, whereas they have given this. So 34 answer. They reduced it, right? Their answer is 85,470.5. 85,470.5. This is after reducing 17. First they should not reduce, but they reduced it. So 17 add back. They should moreover add back. So that also you add back is equal to 85,504. This is the right answer. So 85,504 is the right answer. Okay. In our actual class also we clearly discussed at this point. In fact, initially struggled a lot. This is wrong, this is wrong. Later at last when we see the suggested answer of June 25 paper, then we understood our adjustment is correct. Clear? These are the two types of problems that are possible in second chapter. That's it. Second chapter is completed. With this, you can score easily 50 into 20 marks. 2 chapters weightage. Clear all of you? Yes. Next. Let's revise the third chapter, Cost Auditor. Okay. Again, second chapter the weightage is, first chapter the weightage is Paka 7 marks. Second chapter the weightage is easily 10 marks. 7 to 10 marks minimum. The third chapter weightage is minimum again 7 marks. Okay. Now, sometimes even 14 marks also can come, including MCQs, everything. Now, look at Cost Auditor. So, who is a Cost Auditor? Directly, a cost auditor is a person who is a cost accountant in practice appointed by board of directors. Correct? Next, in this we are going to discuss about cost audit provisions, professional ethics also we are going to discuss. We are also going to discuss about duties of the cost auditor to report on fraud. We are also going to discuss about some liabilities which a cost auditor has to face under different laws. Okay, now remember, if you recollect 148 subsection 5, we have understood one point there. Whatever provisions, rights, duties, qualifications, disqualifications that are applicable to financial auditor, the same are applicable even for cost auditor, right? Now, what are the disqualifications of the cost auditor? Same company's auditor disqualifications. Like, what are the company auditor disqualification? A body corporate is not eligible. However, LLP is eligible to act as a cost auditor. Remember, the cost auditor can be an LLP, or can be a partnership firm, or can be a sole proprietary firm, or he can be just a simple individual member directly with the COP he can provide, or he can incorporate a firm. In that firm, he can be a single proprietor, or it can be with a partnership where LLP or partnership form, both forms are permitted. Correct? Yes or no? Now, individually practicing means firm registration number won't be there. And if at all you are practicing with a sole proprietary firm or LLP or partnership firm, firm registration number will be there additionally. Understood? Now look at, so a body corporate is disqualified. Second disqualification, officers or employee of the company. Yes or no? If at all the person is an officer or employee in the company, he cannot be appointed as a cost auditor. Third one, not only officer and employee, their partners, their employees, they are also disqualified. And not only officer and employee, their partners, their employee, a person whose relative is a director or key managerial person. Suppose I am a cost auditor, I am a cost accountant. If my relative is a key managerial person or a director in the company, then again I am disqualified. If my partner is officer there, disqualified. If my partner is employee there, disqualified. Or if I am an employee or officer there already, I am disqualified. Body corporate, disqualified. My relative in the company, director or key managerial person, disqualified. Remember, if my relative is just a normal employee, not a key managerial person, not a director, this disqualification may not apply. Able to understand? Next, fourth disqualification, suppose a person or the relative or the partner holding security or interest in the company. Very simple. If the accountant, cost accountant, or my partner or my relative, if any of us are having ownership in the company, which companies? That company or holding company, subsidiary company, associate company, subsidiary of its holding company, nothing but sister company, then also I am disqualified. However, my relatives can hold securities up to 1 lakh face value. Suppose if at all my relative cross shareholding more than 1 lakh by mistake, from the date on which they crossed, within 60 days I should rectify it. If not, 61st day I am disqualified. I have to vacate the office. Now the 60 days logic is not given in the ICA book. Able to understand? So in our book also I have not given, but I am just telling you here. Next, indebtedness. What is this indebtedness provision? If the cost accountant or his partner or their relative, if they are having outstanding indebtedness with the company or same 4 more companies, with 5 more companies, with the company holding subsidiary, associate, subsidiary of its holding, totally 5 group companies. If at all in the entire group, if I am having indebtedness, I am disqualified. Or if at all they have given guarantee exceeding 1 lakh, indebtedness is at least 5 lakhs. Guarantee is only up to 1 lakh is permitted. Beyond 1 lakh you gave guarantee, disqualified. Now remember, ownership is the right. Security or interest in the company, security or interest, the person, if at all you have directly disqualified. Your relative only can have up to 1 lakh. But indebtedness, you can also have indebtedness up to 5 lakh. Guarantee, you can also give a guarantee up to 1 lakh. Next, another disqualification. A person or a firm, if you, a cost accountant or your firm, if at all they have a business relationship with the company, disqualified. What is a business relationship? Any relationship for commercial transactions for commercial purpose. However, if at all you are already providing some professional services which are permitted under Companies Act, which are permitted under CAA Act, yes or no? Cost and Works Accountants Act and Companies Act, any services that you are providing which is permitted in nature, not prohibited service. Permitted services you are already providing, even though it's a business relationship, that will not lead to disqualification. Second one, You are using company products and services in ordinary course of business, just like a customer, any other customer. You are buying products and services at arm's length price. That will not be treated as a business relationship. Are you clear? Then a person who is in full-time employment elsewhere holding more than 20 companies, this is called audit ceiling. A cost accountant, how many cost audits he can do in a year at a time? There is no such thing called in a year, per calendar year, per financial year. It is at a time. Today, for example, somebody, you know, one friend who is a cost accountant in practice, go and ask him right now for how many companies is acting as a cost auditor. He says more than 20, he's disqualified. Right now, at any point of time throughout the year, maximum for how many companies you can act as a cost auditor? 20. Maximum 20 companies. In this ceiling, one person company, dormant company, you know, a private limited company whose paid up capital is less than 100 crore, they will not be considered in this 20. That exception point is not given here. In the CMA book also it is not given fully. Okay, next. Or a person, if the cost accountant is convicted as a fraud by the court and 10 years, up to 10 years after the conviction, he is disqualified. Or if at all the cost accountant or he is a subsidiary, for example, cost accountant is there, for him there is a consulting company is also there, which is a subsidiary of the firm only, okay, or associate company related to cost auditor. If the cost auditor or his subsidiary or his associate entity, if any of them are providing prohibited services to the company, then also the cost accountant is disqualified. What are prohibited service? Accounting and bookkeeping, internal audit, design implementation of financial information system, actuarial services, investment advisory, investment banking, outsourced financial services, management services, any other service prescribed. Okay, if at all you are providing any of these services, you are disqualified. Now tell me, what is the qualification criteria? Very simple. He must be a cost accountant and eligible for appointment as a cost auditor. Who is a cost accountant? Cost accountant is a cost accountant defined under CAA Act and having certificate of practice. Yes or no? He should be a member of CMA Institute. His name should appear in register of the members of the institute. Who can act as a cost auditor? Individual or firm? Both of them can be eligible. Yes or no? If a firm is appointed as a cost auditor, majority of their partners must be qualified and cost auditors. Yes or no? LLP can also be appointed, provided, you know, who will sign on behalf of the firm or LLP? Only the cost auditor who is in practice can sign. Remember, in the firm, majority partners must be cost accountant. Other partners can be remaining other professions also. Able to understand. And regarding this, we discussed specifically in the class multidisciplinary firms, all that concept we discussed. Okay, that's it. Then vacation of office, vacancy. What is vacancy? Vacancy means what? Suppose you are validly appointed. Your appointment is valid. After appointment, disqualification arises. After appointment, some disqualification arises. Then that is called as what? Vacation. You are automatically deemed to have vacated the office. Now that vacancy in the position, now your position is vacant in the company, right? Cost audit position, that is called as casual vacancy. What casual vacancy a company has to do? Board of directors has to fill the casual vacancy within 30 days of erasing the vacancy. After filling it by appointing another cost auditor, simple. After filling it, the board of directors has to intimate to central government in CRA 2 format. Correct? Now then we'll discuss about appointment procedure. What is the appointment procedure? We already saw in the second chapter. Cost auditor must be appointed by the board of directors within 180 days from the start of the financial year. Before you appoint, no, suppose you met one cost auditor, you decided to appoint him within 180 days. But before appointing him, no, get a written consent that he is willing. First of all, he should express his willingness, no, and get a certificate. What certificate? Certificate must give 4 points compulsory. Okay, he has to give a declaration that he is eligible and not disqualified, and he met with the criteria under qualifications, and his appointment is within the limit, ceiling limit 20. Limit means what? Ceiling limit 20 laid down within the act. And what are all the list of pending proceedings that were there on him? List alone he has to give. Okay, after giving this certificate only, company will appoint him. Able to understand? Remember one more point, board of directors will appoint. Suppose if the company is already having audit committee, then audit committee will participate in selection process as well. Be careful. Next, the company must inform the cost auditor about his appointment and also file a notice with central government within 30 days of the board meeting or 180 days from the commencement of the financial year, whichever is earlier, in CRA 2 format. Correct? Okay, cost auditor appointed until when his appointment is valid? Until expiry of 180 days from the closure of the financial year until expiry of 180 days. Yes or no? And again, can a cost auditor be removed after appointment by the board? Yes. Through a board resolution, you can remove him also. And if you remove him, it's a casual vacancy. If he resigned, it's a casual vacancy. He died, it's a casual vacancy. Able to understand? Next, casual vacancy is there. Who should do? The board only has to fill the vacancy within 30 days of such vacancy. Once appointment is done, again from the date of appointment, within 30 days, they need to file CRA 2 form with the central government. Are you clear? Once cost auditor is appointed or filled vacancy, now he will complete the audit, right? The audit report has to be given to the board of directors. So the cost statements, by the way, cost auditor will audit what? Cost accounting statements. Who should prepare the cost accounting statements? Board of directors. So cost statements must be approved by board before giving them to the cost auditor so that he will report on them. So just like in financial statements in 138 section, 137 section, 137 approval of financial statements, 134 authentication of financials, all that. Okay, so just like financial statements approval, cost accounting statements shall also be approved by board of directors. Next, now once cost auditor saw the cost accounting statements, reviewed cost audit report, everything, he will give a report in CRA 3 format. That report has to be submitted to board of directors within 180 days from the end of the financial year. Board will review the report. Is there any qualifications and all cost auditors spoke? They will look for it. Now if at all any remarks and all were there, board of directors has to give an explanation on that. So now they need to file this report with central government, right? CRA 4 within 30 days of receiving the report. When they are filing with central government, no, they should also explain whatever cost auditor objected, no, what they objected, what is their explanation on that. They should give all that. And remember, when you're filing CRA 4, you should also file XBRL report along with that. Able to understand? Next. And cost auditor has one more duty. Okay, he has to report on fraud also. What is duty to report on fraud? We'll discuss it later. Okay, next, resignation of cost auditor. Can a cost auditor resign from the company? Yes, he can resign. An auditor who resigned from the company must file a statement with the ROC within 30 days of his resignation. The form must be filed in ADT 3. Remember, there are totally 6 forms that you will get in this chapter. Okay, CRA 1, 2, 3, 4. Then you will have ADT 3, ADT 4. ADT 4, resignation. ADT 4, fraud reporting to central government. ADT 4 is what is it? Fraud reporting. Okay, central government. CRA 1, 2, 3, 4. CRA 2, appointment. CRA 3, cost audit report. CRA 4, filing of cost audit report. CRA 1, cost records. Correct? These are the 6 forms that you will get it. ADT 3, auditor will file when he is resigning. ADT 4, when he is reporting fraud, he will file it. Remember, MCQ is important. Okay, next. Suppose if the auditor fails to file the statement that he resigned but he forgot to inform ROC, then what is the penalty? Minimum 50,000 rupees, maximum 2 lakh rupee. Okay, actually penalty provision is more in depth. There is something called continuous default, per day 500 rupees, like that and all. That is not discussed in the CMA Institute study material, so they won't ask in exam also. Clear? Next, is the rotation of cost auditor applicable? No, rotation provisions are discussed only for statutory auditors. For cost auditors, rotation provisions are not covered. Next, remuneration of cost auditor. How much is the remuneration? Just like statutory auditor, remuneration of cost auditor shall also be fixed in AGM, technically speaking. But in AGM, what they do? They give the power to board of directors. That's it. So just like how statutory auditor remuneration will be fixed, same cost auditor. So for companies where audit committee is required, the board will appoint cost auditor based on recommendations of audit committee. Audit committee itself will recommend remuneration also. Board will consider and approve the remuneration which is recommended by audit committee, then later ratified by shareholders. Suppose if there is no audit committee, directors will directly fix the remuneration and shareholders will ratify in the AGM. Clear? Next, can a cost auditor be removed? Yes, cost auditor can be removed by board of directors with a board resolution. Yes or no? So the cost auditor can be removed before their expiry through a board resolution after reasonable opportunity of being heard. Now because of removal, what happened? Casual vacancy has been caused due to removal. This casual vacancy shall be filled by board of directors within 30 days of occurrence of such vacancy. Okay, they fill it, which means new cost auditor is appointed now within 30 days. Now from the date of appointing new cost auditor, within another 30 days, the board of directors has to inform the ROC, central government, that another cost auditor is appointed in CRA 2 format. Easy or not? Next, what are the rights and duties of the cost auditor? Company shall provide all assistance to the cost auditor. It is right. Company we have to give entire cooperation. Cost auditor, auditor conducting cost audit shall comply with cost accounting standards. Means you need to comply. You need to check whether cost records are matching as per cost accounting standards. Cost auditor report has to be submitted to board of director, and he has to give some important statements like what are they? I think 6 items were there, correct? 7 items were there. 7 items were there. What are they? Cost auditor has to confirm whether all necessary information has been obtained or not. Cost auditor has to confirm whether proper cost records are maintained or not. Cost auditor has to confirm whether adequate returns from branches of the company, various factories of the company which you did not visit, have you received it or not. Cost auditor has to confirm whether these cost records are giving true and fair or not. Cost auditor has to confirm whether internal audit system in the company is adequate. Cost auditor has to confirm whether cost of production, cost of service, cost of sale, cost accounting statements give true and fair view or not. Cost auditor has to confirm whether unit wise, product wise cost statements are kept in the company or not. These are all various CRA 1 rules. Clear? Next duty to report fraud. First I will discuss that. Okay, duty to report fraud I will discuss. Where is that? Yeah, duty of the cost auditor to report on fraud. What is the cost auditor duty to report on fraud? If cost auditor believes fraud has been committed against the company, they must report the matter to central government within prescribed time. Actually the time limit prescribed is 60 days. Okay, now these provisions actually these provisions are applicable for financial auditors mainly, but later through subsection 14 they mentioned this is applicable even for cost auditor. Suppose if a cost auditor came across some fraud but he failed to report, what is the penalty? In listed companies 5 lakhs is the penalty, in other companies 1 lakh is the penalty. Remember, this provision is discussed twice in the CMA study material. At one place 25 lakhs limit penalty point is given, which is an old provision. So ignore what is given in the study material and consider whatever we have given here. Correct? Now when you're reporting fraud, how you will report fraud? ADT 4 form you will file. What you will report inside that? You will mention what is the fraud that you found, who, how much amount involved, individual parties involved in that fraud. Yes or no? Further, board of directors have to disclose in their board of director report the same information along with the extra one more point they should report: remedial actions taken. Able to understand? That's it. This is duty to report a fraud. Now let's look at other things. Next, now in December 24 or somewhere they have asked one question: can a cost accountant act as an independent director and key managerial person? Yes, they can act as. So no, cost accountants, they can act as a key managerial persons like a managing director, CEO, manager, company secretary, chief financial officer, all that. Cost accountant can also become key managerial due to their qualification and experience. Can a cost accountant act as independent director? Yes, he can act. Most of the listed companies must have 1/3 of its total directors as independent directors. Yes or no? Independent director are the one who has skill, experience, knowledge in fields like finance, law. So cost accountants, because of their expertise, they can become independent director. Can a cost accountant become a technical member in tribunal? Yes, who have 15 years of experience at least, they can become a technical member. And can a cost accountant become technical member in appellate tribunal, NCLAT? Yes, he can become with minimum 25 years of experience. He can. Whether it's an employment experience, practice experience, it doesn't matter. But in a tribunal law, if you want to become a normal technical member, 15 years of practice experience is required. But if you want to become a technical member in appellate tribunal, 25 years experience required. It may be practice or it may be employment. Can a cost auditor become a liquidator? Yes, provisional liquidator, company liquidator, you can become with at least 10 years of experience in company affairs. Yes or no? Can cost auditor become administrator? Yes, he can become an administrator. These are all various designations under Companies Act for cost auditor. Companies Act strategic positions for cost auditors. Clear or not? Can a cost auditor be an expert? Yes, of course he can be. In especially when under Companies Act, if any serious fraud investigation is taking on, if at all any fraud investigation is taking on, the cost auditor can assist this fraud investigation as an expert. So cost accountant, due to their qualification and experience, they may be appointed as an investigator. So this itself can be asked as a 4 marks question. Yes or no? And cost auditor as independent director, 4 marks question. Cost auditor as the key managerial person, 4 marks question. In December 24 or June 24, somewhere these questions were asked. Clear? Clear? Next. Can a cost auditor become a registered valuer? Yes, he can become a registered valuer. You know, when a valuation is required for various assets, it must be done by registered valuer. The person who is valuation must have requisite qualifications, all that. So audit committee, board of directors will appoint the valuer. Cost accountant, because of their experience and all the expertise that they have, they can also be acted as a registered valuer. Can cost auditor appear before tribunals? Yes, he can appear before tribunals. Yes or no? Both NCLT, NCLAT, both they can appear. Can a cost auditor do mediation and conciliation? Yes, he can do mediation and conciliation also. Next, liabilities of cost auditor. Statutory liabilities. Second liability, contractual liability. Under law, they have some liabilities, punishments. Non-statutorily, because of violation of terms in contract, contractual liabilities also will be there. Statutory liabilities, for example, under Companies Act, criminal liability will be there. What is a criminal liability? If at all the auditor authorizes issue of prospectus with a misleading statement or untrue statement, which auditor did intentionally, they are liable for fraud under 447. What is the punishment for fraud under 447? Important for MCQ or important for theory descriptive question. What is the punishment for 447? What is 447 punishment? For fraud involving an amount of 10 lakh rupee or 1% of the company turnover, whichever is lower. If the fraud amount is 10 lakh rupee or 1% of the turnover, whichever is lower, then imprisonment for 6 months to 10 years or fine which is 3 times of the fraud amount. Are you clear? Suppose if the fraud is public interest, then imprisonment will be minimum 3 years. Sir, what if the fraud is less than 10 lakh rupee or less than 1% of the turnover? Here the fraud is minimum 10 lakh rupee or 1% of the turnover. Whereas here the fraud is less than 10 lakh, less than 1%, no public interest. Then imprisonment maximum is how much? 5 years. Fine is also maximum how much? 50 lakh or both. What is a fraud under 447? It is an act. Intentionally you are acting or you are omitting, you are concealing, or you are using position for your advantage where you gain some undue advantage, or it may harm the company or it may harm the shareholder, creditor, any other person. Whether you make a gain or you make a loss, it doesn't matter. Because of your intentional activity, somebody suffered. Whether you gain the profit or loss, it doesn't matter. Able to understand? That is fraud definition under 447. Further, there is another punishment, penalty for contravention of 139, 144, 145. So penalty for contravention, this penalty is given under 147. Okay. Now, if an auditor violates under 139, the fine will be minimum 25,000 up to 5 lakh and 4 times of the remuneration. If at all auditor violated knowingly and willfully, then imprisonment will be minimum 1 year, fine will be between 50,000 to 25 lakhs or even 8 times of the remuneration, whichever is less. So if at all auditor failed to comply with these provisions, this is the punishment. MCQ or descriptive. Next, further, the auditor who has convicted as fraud should refund the remuneration, all that. Further, the auditor firm, no, it is with respect to fine, firm is fully liable. With respect to imprisonment, only the concerned partner will be liable. Clear? Next, fraud in relation to winding up, fraud in relation to punishment, false evidence, that and all not required. Liabilities under other acts also not required. Contractual liabilities. Contractual liabilities may be what? What are the contractual liabilities? You know, in a contract, terms and conditions you violated. So accordingly, whatever contract terms and conditions as per the violation clause is there, that liability will apply to you. Then we have something called professional ethics, another important aspect in this chapter. So professional ethics means what? Okay, there are some fundamental principles for cost accountants: integrity, objectivity, competence, confidentiality, professional behavior. Cost accountant must be straightforward and honest. Cost accountant must be fair, not influenced by prejudice. Cost accountant must be competent. Okay, and cost accountant must not disclose information obtained by him to third parties without authority from the client. Cost accountant should act in a manner that maintains reputation of the profession. Clear? Next. Now, apart from this, CMA Act has given two schedules. CMA Act has given two schedules. What are the two schedules CMA Act has given? You know, now look at. So there are two schedules, like cost auditors. No, under CMA Act, cost auditors can do professional misconduct or other misconduct. CMA Act classify cost auditors conduct into two types: professional misconduct or other misconduct. Okay, now they have given schedule 1, schedule 2. Schedule 1 again has 4 parts: part 1, part 2, part 3 and part 4. Schedule 2 has 3 parts: part 1, part 2, part 3. Schedule 1, part 1, cost accountants in practice. Part 2, cost accountants in service. Part 3, for all cost accountants generally. Part 1, professional misconduct. Part 2 is also professional misconduct. Part 3 is also professional misconduct. Whereas part 4, other misconduct for cost accountants generally. Okay, then coming to schedule 2, part 1, again this is for cost accountant in practice doing professional misconduct. Part 2, this is cost accountants generally professional misconduct. Part 3, other misconduct for cost accountants generally. Are you clear? Hello? Now again, now this part number 4 has 2 clauses. Okay, this schedule to part 3 has 1 clause. Part number 1 has 7 clauses in schedule 1. Part number 2 has 2 clauses. Part number 3 has how many? 3 clauses. 3 yeah? 3 only yeah? Yeah. Then part number 1 in schedule 2 has 10 clauses. This has 4 clauses. Correct? So totally 10, 14, 14 in schedule 1, 15 in schedule 2, totally 29 clauses we have. This is the overview of the schedules and parts and clauses applicable for your exam. You have to remember clause numbers here. Able to understand clause numbers and all you have to remember. Now part number 1 in both the schedule deals with cost accountants in practice conducting professional misconduct for cost accountants in practice. Last part in both the schedules, first schedule has 4 parts, last part is part 4. Second schedule has 3 parts, last part is part 3. Last part is dealing with other misconduct for all cost accountants in general. Whereas schedule 1 has one exclusive part which is not there. This kind of part is not there in schedule 2. Okay, schedule 1, cost accountants for service, those cost accountants who are engaged exclusively in service. Okay, part 3 talks about cost accountants generally conducting professional misconduct for cost accountants in general. Here also professional misconduct for cost accountants in general. Clear? Hello? Yes. Now directly we'll discuss in one particular order. So part number 4, first I will discuss other misconduct with respect to all the members of the institute. Okay, CMA Institute, all the members. Member means what? He is a cost accountant and his name is entered in the register of members. Now this member can be COP, can be without COP also. Are you getting it? You just obtained membership number, but you are not practicing. So you are just a member of the institute. So generally, some other misconduct means you did misconduct not related to profession. Some other misconduct, still under CMA Act, you are punished. You will be treated as guilty. 2 clauses which are dealing with that. What are they? Suppose a member is guilty. If at all there is a misconduct, where misconduct is punished by civil or criminal court, where imprisonment is awarded but not exceeding 6 months. Second misconduct, a member is guilty if in the opinion of the CMA council, if at all they are bringing disrepute to the profession, whether or not related to professional work. Suppose if you are doing some activity, because of that some disrepute profession is getting, you will be treated as guilty under clause number 2, part number 4, schedule number 1. Able to understand? Sir, What if imprisonment is more than 6 months? This more than 6 months is covered under Schedule 2, Part 3. It has only one clause. It has only one clause. So, Part 4, Schedule 1 completed. Part 3, Schedule 2 also completed. Are you clear? Yes or no? Next. In the Schedule 1, Part 2. Okay. Part 2 dealing with what? Professional misconduct for cost accountants in service, member of the institute in service. What are they saying? Clause number 1, a member of the institute is getting salary in company, no? He should not pay salary to anybody else except relatives and friends. He should not pay to anybody else. Indirectly, what is the objective behind this? A cost accountant should secure a job by skill and talent, but not through job agency, where after getting salary he will pay commission to job agency. So this kind of practices has to be prohibited. For that reason, this clause says a member is guilty if they pay or allow any other person to share emoluments that is getting from the company. That is clause number 1. Clause number 2, what is it talks about? Cost accountant who is working as an employee in the company, he should not accept any amount from company's third parties. Company has some third party suppliers, lawyers, advocates, vendors, everything, right? From them you should not accept any commission. That's called kickbacks, illegal money. Okay, don't obtain. So a member is guilty if they accept any fees, profit, gains from lawyer, cost accountant, broker, customer, agent of their employer in the form of commission or gratification, prohibited. Suppose if it is company itself permitted you to take, authorizedly you are taking, that is not guilty. Unauthorizedly you are taking, that is guilty. Are you clear? Next, part number 1 has totally 7 clauses. First, clause number 1, if you are a cost accountant in practice, your name only you should use or your partner should use. Your name should, or your employee can use your name. Others should not use your name. Yes or no? Your name board cannot be at some other place where they show that it's a branch of you. No, not permitted. So a cost accountant is guilty if he allows someone to practice in his name, unless that person, the other person is also a cost accountant practice and is partnership or employed by him. He is my employee, full-time employee. He is my partner. So my firm name he can use, no problem. Able to understand. Next, a cost accountant is guilty if at all he is paying or paying commission, brokerage or share to anybody other than member of the institute, other than a partner, other than retired partner, other than legal representative. So I can pay, I am treated as guilty. A cost accountant is treated as guilty if at all he is paying any profit or commission to anybody else. Yes or no? Other than another cost accountant or a lawyer or a member of recognized qualification or body, I can pay commission, but others I cannot pay. I should not accept from non-members also. Some other person paying me money, I should not accept that. Okay, a cost accountant is guilty if at all he is accepting or agree to accept any profits from others. But remember, like referral fees permitted. Suppose I referred my client to one of my friend and he's giving me some referral fee, that is permitted. Among cost accountants referral fee, no problem. 4, a cost accountant cannot enter into partnership with others. You are prohibited. You can only form partnership with permitted only your own members or other permitted members. Other permitted members means what? Another cost accountant or a member of recognized professional body or a resident abroad who is eligible to become a member of our institute or one whose qualification is recognized by council. With these 4 you can form partnership. Another cost accountant or a person who is residing outside India who is eligible to become a member of the institute or a member of the another recognized professional body or whose qualification is recognized by central government. With them you can form partnerships, no problem. 5, a cost accountant is guilty if at all he is getting the work. Okay, if at all he is getting the work other than through employee, other than through the partner, or unauthorizedly you are getting the work. Okay, you are guilty. Unauthorized ways means what? You are soliciting the work through advertisement, circular, personal communication, interview, you are guilty. Okay, or you are advertising your achievements, you are using some designation, you are using some titles, okay, through that you are getting the work, you are guilty under clause number 7. Clause number 6, you are advertising through circular, social media, personal communication, interviews, guilty. Clause number 7, you are showcasing your achievements, your talents, you are using multiple designations to attract people, then also you are guilty. Clause number 5 says if you are getting services through 6 and 7 method, you are guilty. Or you see, you can get clients through your employees or you can get clients through your partners, but not any other way. That's what 5, 6, 7 clauses is all about. Part number 1, schedule number 1 completed, part number 2 completed, part number 4 completed. Now part number 3. What is part number 3? Professional misconduct in relation to members generally. Okay, now what is it? You are acting as a fellow. You are actually not a fellow. You are ACMA, but you are showing yourself as a FCMA. Guilty. Professional misconduct. 2. You are failing to supply information which is called by institute, quality review board, appellate authority, committee, council. Institute or somebody else is calling you for information. You are not supplying. Or you are giving false information to clients when inviting work. You are treated as guilty while inviting professional work from others or responding to tenders. You are giving false information. You are guilty. False information to others. Clause number 3. Not giving reply to institute. Clause number 2. Giving wrong information to the institute. Schedule number 2, part number 2. Okay, there I will connect. Next. Now, schedule number 2, you see. Suppose you are giving false information to the institute. Schedule number 2 offense, part number 2 offense, part number 2, professional misconduct for members of the institute in general. So, a member is guilty if they include false particulars to the institute. Able to understand? Now, a member is guilty if they contravene provisions of CMA Act, Council guidelines, all that. If at all you are violating all these acts and all, you are straight away guilty, professional misconduct under clause number 1, part number 2. Okay, next up. You are disclosing confidential information in employment. By the way, if at all you want to know in depth about ethics revision, you can use our CA final ethics revision also, where we discuss in depth of all these clauses. Just that in CA final, part number 1, schedule number 1 has 12 clauses. You have only 7 clauses. That's the only difference. Rest all clause numbers, everything is same. Okay, if you want to have a more in-depth knowledge on that, you can use that, no problem at all. Okay, so, and if at all you are working as an employee and your company's related secret data you're revealing to outside, your professional misconduct as per part number 2, schedule number 2. Able to understand? So schedule number 2, part number 2 has totally 4 clauses. Part number 1, contravention of the act. Part number 2, in employment you are disclosing confidential data. 3, false information to the institute. 4, a member is guilty if they defalcate money received. So you are getting money from client and you are misusing it. Guilty. Clear? Part number 3 is already over. Now, part number 1, schedule number 2. First of all, now immediately you might get it out. Sir, what is first schedule? What is second schedule? In first schedule also, professional misconduct, practice, professional misconduct, service, professional misconduct, general, other misconduct. In schedule 2 also, professional misconduct in practice, professional misconduct, general, other misconduct. What's the difference? It can be in single schedule, right? What's the difference? In schedule 1, the offenses are less severe. Whereas in schedule 2, the offenses are more severe. Yes or no? In schedule 1, if you see part 1, schedule 1, practicing people, part 1, schedule 2 also practicing people. Whereas in part 1, schedule 2, a third party will affect. Because of your activity, a third party will suffer damage. Whereas in part 1, schedule 1, the way you are running your business, if at all something wrong you did, maybe third party will not affect, but reputation will affect. Only you are affecting. So that's the difference between schedule 1 and schedule 2. Schedule 2 is more severe offense. Schedule 1 is less severe offense. Clear? Now, so second schedule. So what is second schedule? If at all company's confidential information, you are an auditor, right? Company showed you cost data, you know. If at all you're guilty if they disclose client information to third party, you are guilty. Clause number 2, you are guilty if at all you are submitting a report without verifying. You are guilty if at all you are certifying some estimates and all, yes or no, without even verifying accuracy. Okay, if at all you are certifying cost estimates, you should not certify cost estimates and all. You can certify provided assumptions are clearly disclosed, provided you clearly mention that you did not know the accuracy, all that you clearly mentioned, all that only assumptions alone you certified, that then it is not guilty. And conflict of interest, a cost accountant is guilty if at all you are expressing opinion on a client where you or your relative or partner has substantial interest, then also you are guilty. 5, suppose in cost accounting statements some material fact is there which is missing, you still reported on that everything is correct, you are guilty. There is a material mistake happened in cost accounting statement, blunder is there, you know it, knowingly you still ignored and then certified it, you are guilty. 7, you carelessly certified cost accounting statement, you didn't even examine that, without even examining you certified. Clause number 7, gross negligence. Clause number 8, whenever 7 is applicable, 8 is also applicable. In the class I told you which combinations will apply. Yes or no? In the class I told you 2, 7, 8, these 3 are interlinked. Yes or no? Next, A cost accountant is guilty if they fail to address material departures from generally accepted procedures for costing and pricing. So if at all a company is deviating from generally accepted cost accounting practices or cost accounting standards, or you are deviating from cost audit standards, in any of these cases you are guilty. And a cost accountant is guilty if at all he is failing to keep client money in a separate bank account. Whenever you receive any money for client purpose, for his spending purpose only, okay, you should keep it in a separate bank account. You should not keep in your own bank account. So if at all you fail to keep in separate bank account, you are guilty. Clause number 10, part number 1, failure to keep money of the client in separate bank account, guilty. Whereas clause number 4, part number 2, embezzlement and fraud, okay, misuse of client funds, that is also guilty. Clear? That's it. All 29 clauses we clearly understood. Next, penalties and other things and all. Suppose you are showing yourself as a member of the institute, okay, actually you're not a member. So your first time if you are caught, 1000 rupees, subsequent time it is 5000 or even imprisonment up to 6 months. Can a company engage in cost accountancy practice? Prohibited. Even an LLP where company is a partner, that is also prohibited. Okay, so an LLP, can an LLP have a partner who is a company? Prohibited. Okay, so cost accountant in practice must be either individual or partnership firm or LLP. That's it. That's it. Over. Third chapter is over. Clear, all of you? So that's it. Then we have 24. Then we have fourth chapter, which is actually talking about cost accounting standards and generally accepted cost accounting procedures. Here 24 cost accounting standards were given. This number and heading, it is very important for you to remember. Rest of the fourth chapter you can ignore, don't even touch it, no problem. Okay, but in fourth chapter there are some problems which are involved, like capacity related calculation problems, all that. Okay, one important problem I will tell you in fourth chapter. Okay, I'll do one thing, I'll just stop this video and then put another video. Okay, so with this third chapter is completed, then again I will give separate introduction for fourth chapter. Clear until now? Yes, let's begin fourth chapter revision. I will only tell you about how to solve problems in fourth chapter. Only problem solving I will be telling you. Okay, in fourth chapter major problem is about installed capacity computation problems will be there. That is only something new. Rest there are few more problems which are very simple, which is purely costing knowledge. Okay, that's it. So in a revision class I only talk about the capacity computation related problems. By the way, fourth chapter is what? Heading cost accounting standards and generally accepted cost accounting principles. So this is the chapter heading. Now we have totally 24 cost accounting standards. All the 24 standard numbers and headings you have to remember. Please practice 5 to 6 times. If you revise it slowly, thoroughly, you will understand. Okay, now in that there is a standard called cost accounting standard 2, which is capacity determination, which is recently amended in 1st April 2024 onwards. Okay, so that capacity standard is amended. By the way, if you see, most of the cost accounting standards have corresponding guidance notes. Okay, but there are few standards where there is no guidance notes at all. Sometimes in exam they will ask you which of the following cost account standard does not have a corresponding guidance note. That also they'll ask you, matching kind of concept. So please remember that also. Okay, now capacity determination. What is this actually? Capacity determination. So what are various types of capacities? Okay, one is installed capacity. Okay, one is installed capacity. Another one is practical capacity. Another one is normal capacity. Another one is idle capacity. Another one is abnormal capacity. Then actual capacity will be there. Actually, actual capacity is not, it is not expressed as capacity, it is actually shown as actual production. Able to understand? Now, how to compute installed capacity? Generally 365 days mission can run. Most of the companies will operate in 3 shifts. In exam they will give you shift information. Years in a day, number of days in a year, 365. Per shift generally 8 hours is the work time, multiplied by per hour how much production can be made. This data they will give you. You multiply all this, then you will get installed capacity answer. Then what is practical capacity? See, A company cannot work 365 days. Working 8 hours in all the 3 shifts is also not possible. Definitely in 8 hours some idle time will be there. 365 days some holidays and all, mission maintenance and all, downtime and all will be there. So practically this much capacity can a company achieve? Not possible. So practical capacity is what? 365 minus holidays. Normal holidays, not abnormal. Okay. Practical capacity, when you're computing, you should only reduce from days normal holidays, weekends, Sundays, festival holidays, all that, general maintenance, preventive maintenance related breaks, all that. Abnormal strikes and all will be there na, abnormal gaps, that will not be considered in practical capacity computation. Please remember, abnormal breakage, abnormal days for which machinery factory is not running, that is not considered. So reduce that. For example, after reducing, it is coming 300 multiplied by, of course company is working 3 shifts in a day, multiplied by number of hours in a shift is what? 8 hours. But 8 hours output company cannot give. Idle time will be there, some 1 hour, 7 hours multiplied by production target per hour. Now what you will get is called as practical capacity. Are you clear? Now in the problem, generally they will give you how much actual production happened in a particular period. They will give you in that year how much production happened, they will tell you. Now if you see, practical capacity is 1 crore units, whereas you produced only 80 lakh units. Practically 1 crore possible, but you produced only 80 lakh. This 20 lakh you are unable to produce is called as abnormal capacity, abnormal idle capacity. What is it actually called as? Abnormal idle capacity. See, what is first of all idle capacity? Idle capacity, installed capacity 1 crore units. I mean, installed practical capacity 1 crore means installed capacity 1.2 crore units is there, but you produced only 80 lakh unit, 40 lakh your machine is idle. This is idle capacity. But I cannot say entire 40 lakhs is literally normal idle. Arey, be practical. Yes or no? So abnormal idle means what? Practical capacity minus actual production. Total idle capacity means what? If at all they ask you idle capacity totally, total installed capacity minus actually how much you produce. This is idle capacity. In that abnormal idle capacity means what? Practical capacity minus actual production is equal to abnormal idle capacity. Understood or not? This provision you remember and go to problems and then apply this logic, whatever I told, you will get right answers. Okay. Then we have another one called normal capacity. Normal capacity, company actual production detail they will give you in the past 3 years or 5 years data. They will give you 3 years, or 3 years means 3 years you take, 5 years data if they give, 5 years data you take. Average of those 3 years actual production in the last 3 years, or average of 5 years, whatever data they give, take that data. Okay, average of actual production in the last 5 years, if 5 years data is given, that is normal capacity. That's it. So you will have a problem in the question where you have to compute installed capacity, practical capacity, normal capacity, idle capacity, abnormal idle capacity, all that. Now we'll solve one problem. Okay, one problem we will compute for a better understanding. Now look at, so now look at, you see here, for example, you see first problem I will solve. Okay, the company specifications capacity for mission per hour is 1500. Okay, so specifications means as per manufacturer specification, per hour a mission can produce 1500 units. Okay, number of shifts, each shift is 8 hours. Totally how many shifts a company will work in a day? 3 shifts. Paid holidays, Sundays 52 days, other holidays 12 days. This holiday information is relevant for us to compute practical capacity. Next, annual maintenance is done within this holiday. So for maintenance there is no separate idle time. Okay, preventive weekly maintenance is carried on Sundays. Oh, Sundays anyhow holiday, so there is no separate capacity wastage that we are incurring for preventive maintenance. Normal idle time, oh, out of 8 hours, no, idle time is 1 hour. This 1 hour calculation is important when we are doing practical capacity computation. And production based on last 5 years. Oh, this last 5 years data is important. This is important for normal capacity computation. Actual production happened in the current year is 81 lakh. This is important to calculate idle capacity, abnormal idle capacity. Easy. Now you see, what are they asking? Installed capacity they are asking. First one, installed capacity, 365 days I can work, 3 shifts I can work, 8 hours I can work, Per hour I can manufacture 1500 units. How much is the installed capacity? 365 into 3 into 8 into 1500 units is equal to 1 crore 31 lakh 40,000 units. Yes or no? But tell me, practically 365 days is not possible, because no, 64 days you are not working at all, which means 301 days only you are working, 3 shifts you are working, 8 hours also you can't work, 7 hours only you can work, because idle time 1 hour is there, and multiplied by 15. So 301 multiplied by 3 multiplied by 7 multiplied by 15. So 94 lakh 81,500 units is practical capacity. Now actual capacity percentage they are asking. Actual capacity percentage, when they ask you in exam, you give two percentages. Actual capacity as a percentage of practical, also give actual capacity as a percentage of installed capacity, both. Actual production how much here, by the way? 81 lakh 50,000. So 81 lakh 50,000 divided by installed capacity 1 crore 31 lakh 40,000 multiplied by 100 is equal to, you know, actual capacity as a percentage of installed capacity is 62, whereas as a percentage of practical capacity it will be 81 lakh 50,000 divided by 94 81 500. As a percentage of practical capacity is 86%. In exam they may not ask you this, but you please give this also, because sometimes, you know, I mean actual capacity percentage they by default calculate on practical capacity sometimes. So both answers you give. Then normal capacity, average of these 5, 75.7 plus 87.42 plus 65.38 plus 77.97 plus 76.08 plus, that's it, divided by 5. Normal capacity is 76.51 normal capacity. Idle capacity, how much time the machine is idle, percentage they are asking. Idle capacity percentage, very simple. Actual capacity 62%, right? Remaining 38 is idle capacity. Exactly. So idle capacity, how to calculate? Installed capacity minus actual capacity. Installed capacity 100% minus actual capacity 62, 38%. Yes or no? Now abnormal idle capacity, abnormal how much? See, 38 is not fully normal idle time. Practically you can produce 94,800, but you produced only 81.5. 94 lakh 81,500 minus 81,000 81 lakh 50,000. So abnormal capacity is 13 lakh 31,500 units only, abnormal idle capacity. Or in other words, abnormal idle capacity is only 14%, I will say, because practical capacity is only 86%, right? Actual capacity of practical. So 14 is only abnormal idle time, not entire 38. Percentage wise also I'm just telling you. Now look at the answers. So 13 lakh 315 units, yes or no? Now here 37.98, that's what we call it as 38%. Then 76.51, yes, correct. Then 94.8, then 13, yes or no? Then actual capacity is 62. Able to understand? This is how you need to compute the answer. Clear? There are few more problems in this chapter. You can easily understand, not a big deal at all. Okay, so which is not a tough. I mean, if you're having normal costing knowledge, basic costing knowledge is enough for solving all these problems and all. That's it. With this, fourth chapter is also completed. Confident. Okay, but in fourth chapter, what are the things that you need to do? You need to remember those 24 standard headings and then numbers. Further, second chapter at the end I showed some list. Material cost means what, employee cost means what, production overheads cost means what, admin overhead means what, selling overhead means what, transport means what, packing means what, like that 30 elements were there. Just a single reading of those enough. Okay, if at all an MCQ comes, you can be safe. That's the reason. Okay, that's it. So with this, 4 chapters in cost audit is completed. Okay, then we still cover cost audit standards, all that also I will be covering in the continuation. Clear? So before we solve the question bank on this 5th chapter, cost audit and assurance standard, first we'll have a quick revision of this entire topic and then we'll go to the question bank solving. Now look at, so cost audit standards, they are the standards which are issued by ICAI under Cost and Works Accountants of India with the approval of central government. Nothing but MCA gave the approval. And who issued these cost audit standards? CAASB, Cost Audit and Assurance Standards Board. What is the role of this board? The Cost Audit and Assurance Standard Board formulates the standards. How they formulate? Keeping in mind applicable law, business environment in India, and keeping in mind Cost and Works Accountants of India, Code of Professional Ethics and Cost Accounting Standard, keeping in mind any other documents like guidance notes, all that cost accounting standards, guidance notes, all that they keep, technical guides, all that they keeping in mind. These people formulate standards. Accordingly, now how many standards were formulated? 4 standards formulated, which we already saw, which we will revise now. Now, if there is any inconsistency between the standard and law, which is applicable? Law is only applicable. Remember, law is always otherwise. Okay. Then, now what is the format of standards? I showed you in the institute material how the format looks like. First, the standard is in bold letters. Then application guidance is in normal letters. Yes or no? But they both have equal authority. Correct? Next. Now, cost auditing standards. What is the overview? Sometimes this itself can be asked as a 7 marks question. Write about overview of cost audit standards. They may ask you like this. Overview. Okay. The institute is a founding member of International Federation of Accountants. And there is an International Auditing and Assurance Standard Board under IFAC. You know, we have adopted ISA, international standards. Although institute could have adopted, we could have adopted, but these standards primarily focus on financial audits. Therefore, institute made some modifications wherever necessary for cost audit. The functions of audit remain similar across different types of audit, with just that scope and target is different. A cost auditor has same rights and duties and obligations just like financial auditor. Even though cost accounting is different from financial accounting, the audit practices are almost similar. There also they get sufficient appropriate evidence. Here also we get sufficient appropriate. There they form conclusions. Here we form conclusions. There they give a report. Here we give a report. There they will do risk assessment. We will do risk assessment. Yes or no? So standards on cost audit are issued based on international standards on auditing with a slight modifications to the framework and content of the cost audit. Considering the framework and content of the cost audit, international standards are slightly modified and then adopted. Understood? So totally 4 standards have been approved by Ministry of Corporate Affairs. 101, planning and audit of cost audit, cost accounting statements, cost audit documentation, overall objectives of independent cost auditor and conduct of cost audit in accordance with the standards on auditing, cost audit standards, knowledge of business, its process and the business environment. Most important, applicable with effect from 11th September 2015 onwards. Okay, for every cost audit which are whenever you are doing cost audit from 11th September 2015, these standards are applicable. Are you clear? Next. Now 101, planning. You know, what are the planning definitions? I'm not covering. Okay, definitions I hope which are very quick, or else we'll briefly discuss the definitions, no problem. Audit means what? Independent examination of financial cost or other information with an entity with an objective to give opinion. Cost audit means what? Independent examination of cost statements, cost records and related information to express an opinion. Cost auditor means what? Is an auditor appointed under CWA Act. Firm means what? That is what they appointed. The firm only appointed as an auditor. Now this firm can be a sole practitioner or a partnership or an LLP, yes or no, or an individual cost accountant without a firm. Even a sole proprietor without a firm registration number can also be an auditor. Remember, I told you, you can continue with the firm name or without firm name also. With the firm name, you have again 2 options: proprietary concern, partnership firm. Remember, I told you in ethics cost auditor discussion. Next, initial audit means what? First audit for the entity. First time company is appointing cost auditor, or previously some other auditor appointed and I am appointed now, replace it now. So both are initial audit engagement. Yes or no? Misstatements. It's a difference between reported cost statement and what is required under cost reporting framework. What is required under framework, what is reported in cost statement, if there is a difference, we call it as misstatement. Overall audit strategy, risk assessment, that we anyhow have a in-depth discussion. Next, audit partner means what? The partner who is a member of the CMA Institute and who is responsible for performing the cost audit and reporting. Yes or no? We call him as engagement partner also. Clear? Now, audit risk. What is an audit risk? Risk of expressing inappropriate opinion on the cost accounting statements which are materially misstated. And the audit risk has multiple components: risk of MMS and detection risk. Risk of MMS has again 2 components: inherent risk and control risk, which we will discuss in the 103 standard more in depth. Correct? Next, what are the requirements regarding planning? Requirements of planning, pre-planning requirement. Before planning, the auditor must ensure his appointment is proper, it is in accordance with legal formalities, and the letter of appointment is received, ethical requirements are satisfied, and you must understand terms of reference to know what units are covered in cost audit scope, which products are covered in the cost audit. When you are planning the audit, involve the team members also, important team members. Remember, planning is a wider term. Planning is a wider term. Plan is a narrow term. Planning means it's a full process. It includes strategy and plan. Yes or no? Next. Now, the auditor must formulate strategy to set scope, timing, and direction of the audit. When you are designing the strategy, the following factors you consider: results of preliminary activities, prior auditor's knowledge, business knowledge, nature and scope of the audit, deadlines, nature, timing, extent, resources, and relevant factors. Apart from this, there are few additional matters are also relevant. What are the additional matters? Cost reporting framework, industry regulatory requirements, unique features of the industry, extent of reliance on the work of the financial auditor, state of IT implementation, timeline for statutory reporting, yes or no, timeline for board of directors and audit committee meetings. These are all additional matters, yes or no? Then you need to develop audit plan, all that. Now then we have audit of small entities. So audit of small entities, for audit of small entities, what are all you need to check into? And again, there is one more point. Nature and extent of planning is influenced by size and extent of the entity, number of products, team members' prior experience, change in circumstance during the audit. Now, for small entities, for audit of small entities, you should also understand a few more things. Business description. I think that is there in the next part, I guess so. In the next standard, yes or no? Yeah. Here it is only briefly it is covered. There is no in-depth. Yes or no? Next. 102. Cost audit documentation. First of all, what is audit documentation? Definitions. First, audit documentation means what? Audit documentation is nothing but records, which includes working papers, which are prepared, obtained, retained by cost auditor. Documentation is nothing but records, which includes working papers. Who prepare this? Cost auditor. Who retains this? Cost auditor. Who maintains this? Cost auditor. Next, audit file means what? These are the folders, or these are the storage medium that contains documentation for a specific engagement. In a true or false based MCQ, they may give you for all engagements word. So be careful. Specific audit assignment, you maintain separate documentation, separate file for each assignment. Working papers are nothing but documents that record all audit evidence obtained and support audit work, ensuring it complies with the standard. Why documentation? Purpose. Main purpose is it's an evidence for cost auditor's basis for reaching a conclusion. It's an evidence that cost audit was planned and performed as per cost auditing standards and legal and regulatory requirements. And there are also additional purposes. It helps audit team in planning and performing the cost audit. It helps supervisory members to direct, supervise, and review the work. It helps the team accountable for the work. It keeps a record of important matters for future audits. It supports quality control review by quality review board. It facilitates external inspection as required under applicable legal, regulatory, environmental factors. Yes or no? Next, what are the requirements? The auditor must document whatever procedures he performed, whatever evidence he obtained, whatever decisions, conclusions he is taking. Correct? The auditor, how he should document? What is the manner of documentation? The auditor should document cost audit in such a way a competent person can understand. We should understand your compliance, conformance with legal and regulatory requirement, conformance with cost audits, cost accounting standards, results of procedures performed, audit evidence obtained, significant matters, conclusions, and professional judgments reached. Next, the auditor must record discussions with client and discussions with third party about especially significant matters. Then application guidance. Common audit documentation examples. What are the examples of common audit documentation? What documentation contains? Checklist will be there, programs will be there, analytical review will be there, query will be there, contracts will be there, letter of confirmation will be there, management letters will be there, reports and all will be there. Now, sir, what is audit program? Our next chapter is program only. Cost audit program, our next chapter. So there we will discuss what is a cost audit program. Next, factors affecting documentation. What are the factors will affect? So form and content of documentation depends upon size and complexity of the entity, to what extent computerization happened, risk involved, and audit methodology and tools. Yes or no? Next. Documentation must show conformance with standards. Yes or no? Including what all should be there? Plan should be there, appointment letter should be there, minutes of discussion with the client, minutes of discussions among the team members, all that should be there. Correct? Next. Documentation for smaller entities. What you need to document in case of small businesses? Description of the business, organization chart, flow of manufacturing, internal control, overall strategy and plan, risk of MMSSS, significant matters noticed in that small business. That's it. Over. Yes or no? And this final, once audit is over, cost audit is over, it has to be assembled properly and retained for how many years? 10 years. And the cost audit documentation belongs to cost auditor, and a portion can be shared to client or any third party with the permission of the client unless prohibited in the law. Clear? Next. 103. Overall objectives of independent cost auditor and conduct of an audit in accordance with cost audit standards. So what do you mean by? Here misstatement, all that we already know. Yes or no? Professional judgment means what? The application of training, knowledge and experience to make an informed decisions. Application of your training, knowledge and experience so that you take a decision which is more accurate, more correct. Yes or no? Next. Requirements. What are the obligations? What are the obligations of 103? What 103 is asking the cost auditor? Very simple. Comply with ethical requirements, including independence. Comply with audit standards. Understand the standard and apply the requirement correctly. And conduct the audit with an attitude of skepticism, recognizing that cost statements may be materially misstated, whether due to fraud or error. Obtain sufficient appropriate evidence to reduce the audit risk to low level. Exercise professional judgment. Ensure cost reporting framework is in accordance with Companies Act. Yes or no? Next. Professional skepticism. What is it? Professional skepticism is an attitude where cost auditor makes critical assessment with a questioning mind about validity of information he is receiving. Information is getting, no, he won't straight away believe it. He will question it. Information is nothing but audit evidence. Are you clear? Audit evidence is nothing but what? Information. Okay, the auditor stays alert to any evidence. The auditor will stay alert to any information that contradict with the management, that contradict with what answer given by top management. This attitude is essential to reduce the risk of overlooking unusual circumstance, overgeneralizing from observations, using wrong assumptions in deciding nature, timing, extent of audit procedures, and in evaluating results. Cost auditor should not accept evidence which is less than persuasive just because they believe management and top management are honest and with integrity. Even representations from management, take it, no problem, but they are not substitute for audit evidence. You must always rely upon objective evidence. Yes or no? Next. In audit, no, we can only give reasonable, but we cannot give absolute assurance. Why we cannot give absolute assurance? Auditor cannot guarantee absolute because of inherent limitations. These limitations, no, will impact your ability to detect misstatements. You can't detect misstatements because of these limitations. What are these limitations? Use of sample testing, limitations in control. Most of the evidence that we get is persuasive evidence but not conclusive. Next. And other limitations, some other factors also will be there which affect persuasiveness of the audit evidence, like related party transactions. Even if you look at the documents, agreements, everything seems fair, but intentions we don't know. Yes or no? So in such case, cost auditing standard may require specific procedures to obtain unless there are unusual circumstances or there is an indication that material misstatement has occurred. 99% not required. Okay, wherever I told required, that only you read. And we will also have a question bank discussion, right? There also we'll see. So ultimately, audit is not a guarantee that cost statements are completely accurate. Absolute assurance is not possible. An opinion does not guarantee future viability of the entity. So you can write this. For example, reasonable assurance, absolute assurance. This question they asked. 4th point you write, 7th point you write. Over. Now next. Again, what are the 3 elements of professional skepticism? Attributes, mindset, actions of the auditor. Correct? So, and especially the skepticism is critical when you are considering fraud risk. If fraud risk is high, auditor will adjust the procedures like getting independent confirmations from third parties or use forensic audit techniques or gather more reliable audit evidences. Next. What is the risk of not maintaining skepticism? Overlooking, overgeneralizing, using inappropriate assumption, which we already saw. Using faulty assumption, nothing but inappropriate assumptions. Next. What is audit risk? Entities, they face so many business risks in their industry, operation, regulatory. However, our auditor's focus is only on audit risk, where financial statements, cost accounting statements could be materially misstated. Audit risk is the risk of expressing an inappropriate opinion on cost statement that are materially misstated. The auditor reduces this risk by performing more and more audit procedure, get more and more evidence, so you satisfy that yes, they are free from MMS. Components: risk of MMS, detection risk. Risk of MMS, it includes inherent risk and control risk. Inherent risk means what? Again, I think somewhere below it is there. No, that's it. Inherent risk means what? It is a risk that entity cost statements are susceptible to material misstatements before considering controls. Don't consider controls. Where and all things can go wrong in cost accounting statements. That is inherent risk. Control risk means what? To prevent, entity could have identified so many risks, they would have implemented so many controls to mitigate the risk, still control is failing. That is called control risk. Now you see, we need to always do a combined assessment, yes or no? Yes. What is detection risk? It is a risk that you are verifying, you are conducting audit, right? Will not identify material mistake. Even though mistake is there, you may not detect it. That is detection risk. Next, materiality. Materiality or risk assessment, both. Okay, you need to determine at two levels. One is overall cost statement level risk. Okay, these are pervasive risks which will affect the entire cost statement and many assertions. This risk is often linked with control environment. Remember, sources of 104 standard, we saw sources: poor control environment, weak control environment. Yes or no? Often linked to control environment, but can also be sometimes due to external factors like economic downturn. A key example is management overriding control. Auditor, what you need to consider? Team's knowledge and skill. See whether experts are required. Level of supervision required. Focus is managed to accept. Focus is to manage audit risk so that it is in a low level. Assertion level. Auditor will also assess risks at cost head level, item of cost level, disclosure level to determine further audit procedure. To collect, ultimately, why assertion level risk assessment is important? To collect audit evidence, to support the opinion on the cost statements. Next, risk of MMS components. Inherent risk is the likelihood of MMS occurring in the cost data before checking the controls. Control risk is the risk that internal controls won't prevent, detect a material misstatement. Some level of control risk will always exist because internal controls also cannot provide absolute assurance. They also will be providing reasonable because they have limitations. Next, so inherent risk and control risk, they are assessed together as risk of MMS, and detection risk is inversely related to assessed risk. Clear? Next, that's it. Remaining points no need to touch also. Next, knowledge of business, all that requirements. Knowledge of business means what? Entity and its environment, entity internal control, yes or no? Entity internal control, IT environment and control, risk assessment and documentation. These are the requirements of the standard. Okay, now entity and its environment means what? Knowledge of business, industry and external factors, cost accounting policy, performance measurement. Knowledge of business means what? What operations the company is in, what are its major raw materials and inputs that they are using, what are the outputs that they are generating, what are the byproduct and wastage, who are the owners in the entity, what is the governance structure. Able to understand? Then industry and external factors. Understand the industry, regulatory, external factors which will affect the business, including cost reporting framework. Understand cost reporting framework, understand the industry, understand the regulation. The auditor should also understand entities accounting policies and how they were applied. Auditor should understand how the entity measures the performance, how entity reviews its performance. Auditor should also check key performance indicators and financial trends. Yes or no? Next, entities internal control. What is internal control? 5 components: control environment, entity risk assessment process, cost information system, control activities and monitoring. Okay, now control environment, see whether management created a culture of honesty and ethical behavior. See whether management maintained a culture of honesty and ethical behavior. Look at entity's risk assessment process. The auditor shall understand whether entity has a process of identifying the risk, assessing the risk, estimating the significance and deciding actions. Easy. Then cost information. The auditor has to understand information systems, including what are major transactions and how the transactions are initiated, processed and reported, what are the related records the company is maintaining, how the reporting process for cost statement. This is what understanding information system means. Control activities. The auditor shall obtain understanding of control activities that are relevant to audit. Then monitoring. The auditor shall understand what are the major monitoring activities that the entity uses. Especially, auditor has to look at adequacy of internal audit function. Next, third one. Auditor shall understand IT environment and control. What is IT environment and control? IT architecture, IT system, IT program. Data integrity, data security, data access controls, changes to systems. Yes or no? That's it. Then risk assessment. Auditor has to identify risk, including relevant controls. Assess whether these risks are arising from recent economic and any other accounting developments. Evaluate whether the risk involves significant transactions with related parties. See the subjectivity involved. See any additional information that you got, so that initial risk assessment will be revised. Documentation. Document understanding of the entity and its environment. Document identified and assessed risk. Document risk identified and related controls. Next, risk assessment. Understanding the business and its environment is a continuous process. This itself can be asked as a 7 marks question. Dynamic process is a dynamic process, a sort of continuous process. So the auditor has to design procedures and respond throughout the audit. So assessing ROMM is a dynamic process. Considering appropriateness of accounting policies is a dynamic process. Identifying areas where special focus is required is a dynamic process. Develop models for performing analytical is a dynamic process. Responding to assessed risk, including designing and performing further audit procedures to obtain sufficient appropriate evidence, is a dynamic process. Evaluate sufficiency of the evidence, dynamic process. Now, industry factors. This itself can be asked as a 7 marks question. What do you mean by industry factors? What is the market and competition? Is it a cyclical activity or seasonal activity? Changes in technology, business risk. Are the operations declining or expanding? Adverse conditions there or not? Key ratios there or not? What are the specific practices relating to cost accounting the company is following? What are the energy supply sources, environment requirements, all that? Easy or not? Next, cost accounting policy not required. For management performance review, inside that I told you 7 marks question, that is a point. The cost auditor may review the following internal performance data. What do you mean by internal performance data? KPIs, key performance indicators, key trends, period on period performance analysis, budgets, forecast, variance and segment divisional, departmental performance report, employee performance metrics, comparing our entity data with competitors. Now, if cost auditor identify risk that management did not identify, first evaluate whether the entity risk assessment process will identify this type of risk. Suppose yes, entity risk assessment process scope covers this risk also, but they fail to identify. Why they fail to identify? If yes, the auditor must understand why the process failed and evaluate whether the risk assessment process is appropriate for the entity circumstance, and evaluate are there any significant deficiency. Then IT environment. In IT environment, what are the risks? Inaccurate processing data, processing inaccurate data, unauthorized access to data, possibility of IT persons gaining access more than their powers, privileged access we call it as. Okay, unauthorized data changes, unauthorized changes to the system, failure to make necessary changes, inappropriate manual intervention, potential loss of the data. Internal audit function. What auditor has to do? Consult with them about business and risk of MMS. And if the cost auditor learns that internal auditor has findings which are relevant to cost audit, read the reports related to those findings and use it in your own audit. Next, risks are again two types: cost statement level risk and assertion level risk, which we already covered. In 103 we covered now. Easy. Yes or no? You read 2 to 3 more times, you will get even more better. Slowly. You see, now I did quick revision at the end of the chapter. But in between, when I'm doing cumulative revision, I revise slowly, and every time a new point comes. Understood? So you should read slowly, thoroughly. Okay, first 2 revisions you have to do very slowly and thoroughly. 3rd revision you can do quickly, no problem. Understood? That's it. Next we will discuss question bank. Then we'll go with cost audit program. Okay, that's it. Yes. Now let's begin the new chapter, which is cost audit documentation, audit process and execution. Just previously we covered standards, 4 standards. 1 or 2 standard is there, right? To that, this is an extension. That's it. Okay. So which is almost similar to 1 or 2 standard, 103, 104, 101, whatever we learned. So we are once again briefly brushing up here in this chapter. Now look at. So cost audit documentation, audit process and execution. Now, so the cost auditor, no, obviously he must be familiar, right, with all the documents to be audited. So the auditor should have a thorough understanding of cost audit process. The auditor needs to know what are the practical steps involved in cost audit. Now, what are the stages of cost audit? This question is only asked for 8 marks previously. What are the stages of cost audit? I will show you directly. Okay. In June 23 exam, it was asked for 8 marks. What are the 3 stages of audit? So what are the 3 stages? Planning the audit, performing the audit, conclusion and reporting. Here also we gave the same. You see, what are the 3 stages? One is planning, another one performing, and the last one conclusion and reporting. So these are the 3 stages of the audit. So now these definitions we already covered, if you remember. What is audit documentation? We covered. 1 or 2. What is audit file? We covered. What is audit working papers? We covered. Audit documentation means what? Documentation is a material which includes working papers prepared, obtained, retained by cost auditor in connection with audit. Working papers means what? These are all documents which contains evidence obtained during the audit. They support audit work and ensure compliance with relevant auditing standard. Yes or no? Next, audit file. 1 or more folders, or it may be storage medium, which contains records that constitute audit documentation for a specific engagement. Correct? Next, what are the stages? First, planning. In planning, what you do? You understand the client. You do risk assessment. You decide materiality. Then you develop audit strategy and plan. Yes or no? These are the 4 subparts involved in first stage, planning the audit. Yes or no? Planning. For this we have 101 standard. Yes or no? Now look at. So gain an in-depth understanding of the entity, operations and environment. By understanding the entity, what you will know? You will identify factors which will affect risk of MMS in the cost statement. You understand the business and its environment, where you identify risk of MMS in cost statement. Then evaluate the risk and materiality. Then develop a strategy determining nature, timing of audit procedures to make sure efficiency and effectiveness are achieved. In audit, no, efficiency should be achieved. Audit output should also be very effective. There is a quote: a well planned audit is almost halfway done. The best you plan, you're halfway done. These are all olden days. Planning alone is not enough. Execution is important. Okay. Next, our student study halls, you go and see, he will have 10 plans in 20 days. Okay, in 20 days itself, he'll raise 10 plans. You see, any student, next 3 months they'll have a plan. After 4 days, nothing, he'll start. Again, he'll develop one more plan, one more beautiful strategy. He'll write everything super as if he's going to follow it. Again, after 3-4 days, again he'll develop a new plan. Fine. So performing is most important. So now performing the audit. After completing the plan, now you need to perform, which is the second stage of the audit. What you will perform in audit? You do testing. You do what you will test? Internal controls you test. You do substantive testing. Substantive testing means taking the records and then checking whether numbers are matching, bills are matching. Yes or no? So accounting policies you look for. Procedures and consumptions you will test. Cost accumulation you will test. Allocation you will test. Apportionment you will test. Absorption you will test. Primary distribution, secondary distribution, material cost calculation, everything you test. Able to understand. Next, if relying on client system, auditor will also test controls. If at all you want to use control system and control systems also, you test controls. Controls means very simple. Software I will test. Okay. In material cost, what are all components I will add? What can be added, what cannot be added? Can I for example, from stores, we got example 100 units of raw material. Okay. Can I add in the consumption register more than 100? I will see that. More than 100 system is not allowing. Yeah, you received only 100. How can you add more than 100? Error is showing. Control is effective. Yes or no? In big entities and all, we mainly test controls. Very few actual transactions we will test. Getting the crores of issues will be there. Crores of transactions will be there. Yes or no? How many you will test? So you test on the process. Next, substantive procedure. Gather sufficient evidence to verify that cost statements are fairly presented. So control testing is also called as compliance procedure. Actual transactions, actual records testing is called as substantive procedure. So both together we call it as detailed testing. This is the second stage. Once you complete the second stage, you will get an idea. Results and all you will get. Now review the result from detailed testing. You did detailed testing, right? You might have got now the result. What result you might have got? Controls are effective, controls are ineffective, initial risk is high, initial risk is low, yes or no? And you might have found out some misstatements, you might have found out some mistakes in the cost classification, cost allocation, absorption rate recovery, so many mistakes you would have found. So review the results from the detailed testing in light of auditor's understanding of the entity, then draw conclusions, form an opinion on fair presentation of cost statements as a whole, express the final opinion on cost audit report in the cost audit report based on evidence and risk assessment. That's it. Easy or not? Now look at this, is important question. Okay, what are the stages of cost audit? Understand the client. First one, planning. Planning includes understanding the client, risk assessment, materiality assessment, strategy development. Then performing an audit means detailed testing like test of control, substantive. Then conclusion and reporting is the final stage of the audit. Planning, performing, conclusion and reporting. Now conclusion and reporting, what you will do in this? You got evidence, right? You will evaluate. Now you will take a conclusion, then you will express the opinion. That's it. See, all the keywords are also given. Yes or no? Now, in ICA book, how it looks like, you see, this is how it looks like. This is how it looks like in the ICA material. You see how beautifully we split it into multiple parts. Every topic you check. Next. You understood? Next. Now, what are the practical steps? Now, theoretically we understood stages. What stages audit were there? Now let us understand practically how auditor will perform this entire audit. Practically they divided the entire steps into 6 parts. 6 steps in audit. Okay. First step, first understand the objective of the audit, and also look at what management is expecting. Sometimes, though it is a statutory audit, management might be expecting more from auditor. Management might give you an extra duty beyond the law. Yes or no? No, I will come back to that later. Step number 2, preconditions. Preconditions means what? First, management should accept their responsibility. Before I start the audit, they should first accept their responsibility. They should fulfill their responsibility. That's a precondition for me. Look at the auditor, the cost auditor should understand. First, what he should understand? Objective of the audit, area, nature, scope of the audit, how many auditors were appointed, what is the applicable cost reporting framework, what is the reporting period for which cost audit is being done, and what are the statutory deadlines. These are the things which auditor first should understand before he start working, before even he accept it. Further, management responsibilities, auditor must confirm, he should confirm with the management whether they understand the following responsibilities. Because only when management prepare cost records, only when they prepare cost statement, I can come and audit. If they don't know how to prepare cost records and cost statements, they blindly appointed me, what is the point? So auditor should confirm with the management whether they understand their responsibilities. What are management responsibilities? Maintaining cost records, preparing and presenting cost statements, applying cost accounting policies consistently. They need to give the auditor access to records, books, vouchers. If I ask additional information, they should provide me. If I want to talk to production manager, sales manager, stores manager, unrestricted access to company personnel for audit evidence. And wherever I want, you need to give a representation, declarations, giving proper management representations. These are all responsibilities of management. Agreed or not? 7 marks question directly. What are all management responsibilities? A cost auditor, before proceeding to perform the cost audit, must confirm with the management what are their responsibilities. Give few examples of management responsibilities. 1, their responsibilities to maintain cost records, their responsibilities to prepare cost statement, their responsibilities in applying cost accounting policies. They have to give access to records and documents to the auditor. They have to give unrestricted access to the people. They need to give additional information when I'm asking, and they need to give me representation when I'm asking. These are all responsibilities of management. Further, the auditor and management, both the parties must decide audit fee, and when the fees should be paid to the auditor. Payment schedule should also be prefixed. Auditor receives an engagement letter. Yes or no? Actually, it is not that auditor receives, it's actually auditor give the engagement letter. Company will sign it and send back it to the auditor. So here auditor receives means what? First auditor will give it, then management will sign and then send it back. That's what the meaning here, context. Together, all these items will form part of preconditions for the audit. So what are preconditions? First, I should know my objective. What is the objective and scope of the audit? I should know. Then I should know whether management knows their responsibilities or not. Third, I should receive an engagement letter. I should receive engagement letter means what? Accepted engagement letter. Management should acknowledge the engagement letter. So that letter I should acknowledged engagement letter I should receive. These are all preconditions to start my audit. Understood or not? Straight away, preconditions itself can be asked as a 7 marks question. This is very important. In the entire steps, in the entire steps, the entire 6 steps, this step is most important. 7 marks question. Stages of audit, 3 stages. That is very important. Preconditions topic is very important. Clear? Next. Okay, preconditions are done. Now I have to start the audit. First, what will I do? First, I understand the company. Yes or no? Understanding the company business, correct? What you will understand in company business? You will understand the business. You will understand the corporate structure. You will understand systems. Like what exactly mean? Company profile. What is the nature of activity? Which products the company is manufacturing? What is the size of the company? What products they are manufacturing? Where they are having factories? Who are the owners? Who is the management? What is the organization structure? What is the marketing setup? What is the accounting setup? Understood? Then what is the industry or sector in which this company belongs to? Applicable regulatory, financial reporting, cost reporting frameworks for each industry. Sugar industry, cost reporting frameworks will be there separately. Guidance note on cost accounting for sugar industries will be there. Guidance note on cement industries will be there for cost accounting. There will be so many guidance note on each industry. Next, processes, products, joint products and outsourcing. What processes company is doing? Did the company outsource any activity? What are the subsidiaries and associates? Who are the important staff member in finance department, accounts department, cost department, IT department, admin, production, purchase, sales? What are the company policies on purchases, company policies on sales, pricing, export, import? How company is receiving the inventory, storing the inventory, issuing the inventory, pricing policies? Who are the related parties and are there any transactions? We call them as RPRT, related party and relationships and transactions. RPRT, related party, relationships and transactions. What are the indirect tax structure? Internal controls, internal audit. If at all internal audit is there, what is the scope of internal audit? Is it effective or not? Accounting systems, cost accounting systems and cost accounting policies, information systems, IT structure, IT policy, IT control, and I will also review previous auditor's report. These are all points I will check in order to get an idea about understanding of the entity. Understood? So understanding of the company's business, 7 marks question they can ask. What are the points auditor will look into while understanding? Like in exam they'll give you question. There are 6 steps involved in the cost audit process. One of the important step is understanding the company business. What are the points auditor will understand in a company business? Easily you can write 7 points. Yes or no? Next, that's it. Next, so what are the points you will understand? I will review previous audit report. I will see cost accounting systems followed. I will see normal accounting systems and all. I want to know who are the key persons in the organization. I want to see the subsidiaries and associates. I want to see the related parties and transactions with them. I want to know which industry it belongs to. I will identify which framework it is and basic company profile. What activities, how many factories they have, what is the size of the company, who are the management, what is the ownership structure, what is the organization structure, all that. Easily 7 points you can write. Yes or no? Next. Now you plan the audit. Once you understand everything, now you know how much difficulty involved in cost audit. Now you know how many team members you require, how many days you require. You keep in mind deadline. That's what. Fixed dates. When are you going to start? When are you going to complete? Number of days you need. Which units you want to visit? Which factory you want to visit? Decide how many persons you require, including supervisory persons and review persons, because not everybody will be doing. Some are there for review, some are there for supervise. Identify who is the engagement partner and what are the days and dates he will involve. Overall strategy and plan you draw so that it will be guiding the audit team. Decide materiality, formulate audit procedures, test the controls, test the details, substantive, analytical, get management representation, check management assertions. Yes or no? Next, formulate risk assessment strategies and procedures to assess material misstatement. plan discussions with important people in the organization, discuss with previous auditor, discuss with financial auditor, discuss with internal auditor. Consider preliminary activities, knowledge from previous audit, business knowledge, nature and scope, deadlines, audit direction factors, resources, how many you require. Documentation, document the audit plan and share it with the company. Ensure that compliance is with the guiding manual. In here, no, instead of reading this, you can ignore this and read 101 standard and then write the same points here. If at all in exam the same question comes, because most of the points are similar there. Yes or no? Next, now you execute. What you will execute? I will perform checking. I will perform procedures what I planned. Like what I will perform, yes or no? I will collect evidence. What is the purpose of execution, performing procedure? To collect evidence. Evidence of what? Whether cost statements, cost records, data inside that is correct or not. Is it real or not? So, collect evidence to form opinion by validating relevance and reliability. Get relevant evidence. Get reliable evidence. Checking accuracy and completeness and sufficiency. Verify source of the evidence and consistency. External evidence is more reliable. Okay. Prepare draft observations and discuss with company management. Prepare and submit final audit report. Now look at your documentation. Final stage of the audit, final step of the audit. Document the plan, document all work papers, document all evidences collected, document all draft observations, document final report, and preserve all these documents in a bound folder or files for a prescribed period. How long is the prescribed period? 10 years. Over the chapter. Just step 1 is pending. Easy or not? So quick, no? Because all these terms we understood in depth in standards. Now you see how easy this chapter looks. The same is with audit program chapter. The same you will feel with filing or any other chapters later on also. Next. Now, most important step before you even think about audit is first understand objective of the audit. Like, understand whether audit is only to meet statutory requirement or is management expecting additional outcomes from auditor. Just check that. Where you will understand this, terms of reference, engagement letter. Through engagement letter you understand is management expecting more from us. Okay. So now, what actually the purpose of audit? The audit focuses on ways to reduce cost and optimize spending. Correct? What is the advantage of audit? It will focus on ways to reduce cost. It will check efficiency parameters of unit, utility, department. Yes or no? It will suggest new products or change product mix. We identify profit making and loss making products. We recommend new marketing strategies, marketing expansion, marketing diversions. We conduct complete review of overall business strategy. These are some additional things which management might expect from you. Sir, you are reviewing everything already. Can you give us information on these points also? Company might expect. So what are various? Management might expect additional outcomes. What are additional outcomes which management might expect in addition to cost audit statutorily? Management might expect you to figure out what are the ways to reduce cost. Management might expect from you additionally to know efficiency parameters. They might ask you to suggest new products. They might ask you to identify profit making, loss making. They might ask you to suggest new marketing strategies. They might ask you to do a complete review of the overall business. Over. 20 minutes the chapter is. Easy or not? Yeah, those of you who are watching this chapter directly, no. First to watch the previous chapter, standards chapter, and then come back to this, because in standards we discussed all these points in depth. Correct or not? That's it. So with this audit documentation, audit documentation, audit process and execution chapter is completed. So what are various 3 stages of audit? Planning the audit, executing the audit, conclusion and reporting. What are the 6 steps in particular audit process? First, objective of the audit, preconditions, understanding the business. 4th, planning it, and then 5, executing the audit, and 6th one, documentation. That's it. Are you clear? So with this entire chapter is completed. Easy or not? Okay, that's it. We discussed it with repetition also. In fact, we discussed with repetition also. That's it. So what are all we need to document? We need to document plan and strategy, working papers, evidence collected, draft observation, final report, and all this must be preserved for 10 years. Next, execution. Checks, perform the checks and procedures as you planned. Okay, validate relevance and reliability of evidence you obtained. check accuracy of the evidence you obtained, check the source of the evidence you obtained, how it is consistent with other information, other evidences. Prepare draft observations and submit the final audit report. Next, understanding. What you need to understand? You need to understand company profile, what activities they are in, what size of the company, products they're dealing with, ownership, management. You need to understand the industry, you need to understand the framework, you need to understand the products, processes that they follow, you need to understand who are the important people, you need to understand subsidiaries and associates, you need to understand who are the related parties and what type of transactions they engage in, you need to understand policies of the company, you need to understand inventory management of the company, you need to understand internal audit scope, efficiency and how they are performing, and you need to understand accounting policies, cost accounting policies, review previous auditors report. Easy? Then preconditions. What are preconditions? First, to know, auditor should understand clearly what is the objective of audit, what is the nature and scope of the audit, how many auditors were appointed, applicable framework, reporting period, statutory deadline. Having understood this, know whether management know their responsibilities. What are management responsibilities? Preparing cost records, preparing cost accounting statements, applying accounting policies, giving access to the auditors, all the records, documents, everything, giving auditor additional information, making sure auditor get access to people without any restriction, giving management representations. These are the preconditions. And engagement letter and audit fee has to be decided. Yes or no? Then first one is objective of the audit. You know, sometimes ask management, do they only want me to meet, do they want only for me to meet statutory requirement, or they want additional outcomes? Additional outcomes means what? They may ask me cost optimization methods, they may ask me operational efficiency methods, they may ask me product diversification, they may ask me profit making, loss making product, they may ask me to suggest marketing strategies, they may ask me to review the entire business. Over. Then stages of the audit. Planning stage, 4 things were involved: understand the client, risk assessment, materiality assessment, audit strategy. Perform the audit, detailed testing like test of controls and substantive. Conclusions, evaluate the evidence, draw the conclusion and express the opinion. That's it. Then intro. Okay, introduction. What is the chapter objective? You know, the auditor must be familiar with all the documents collected. The auditor should have a thorough understanding of audit process. The auditor need to know practical steps. Yes or no? The auditor must document. For that we understood document. What are the audit process? Thorough audit process, 3 stages involved. And what are the practical steps? 6 steps involved. So 3 things are the learning objective of this chapter. All the 3 things we understood. That's it. Okay. Fine. So see, within hardly 25 minutes below, we completed the chapter. We understood the discussion, everything. Clear? All this you understood, the overall strategy, overall plan, all the terms that are there in this chapter, every term you know the meaning, because we discussed in depth in 101, 102, 103, 104 standards. That's it. Yes, let's begin. In the previous session, we actually completed this 14th chapter, right? Now let's once quickly revise this chapter and then move to the question bank. After finishing that, we'll go to the next chapter. 15 is completed, no? 1-5. 16th one we completed. After that we directly started with 14. I think 15 we need to start. 14, 15, 16 is one segment. Okay, fine. Then 17th chapter alone is separate segment. Totally we have 4 sections. One is cost audit, management audit. This is one section. Forensic audit and anti-money. These 2 put together one segment, right? Then fine. Yeah. So let's once again revise the audit, the chapter internal control and internal audit. So what is there in this internal control, internal audit? So what is an internal control? I told you already, internal control is something that we see in our day-to-day life. These are nothing but policies and procedures. If at all you check your home at the end, you know, once you're about to sleep, you generally lock your doors. Yes or no? That's a control. Why that control? To prevent theft, safeguarding of assets. Yes or no? And you keep deadlines. Generally in a company, if you see, the controls are various types: preventive controls, detective controls, and in our book they have given input controls. Actually corrective controls is another type. Technically when we think of preventive, detective context, the third context should be corrective, but they deviated from that and gave something called input controls. Okay, so basically controls are 3 types: preventive, detective and corrective. Moreover, internal control objectives are 3 types. What are the objectives of internal control? Financial reporting is one objective, operations is another objective, compliance is another objective. Three objectives are there for internal controls as per COSO framework. So one is operating objectives, financial reporting objectives, compliance objectives. Accordingly, three types of controls a management will implement: financial controls, operating controls, compliance controls. Three types of controls they will implement. Correct? Then internal control has totally 5 components. Internal control system has totally how many? 5 components. What are the 5 components of internal control? 1. Control environment. 2. Risk assessment process. 3. Information systems. 4. Control activities. 5. Monitoring activity. Internal audit is part of monitoring controls, which means internal control is a wider term which includes internal audit as one type of control. Internal audit is a monitoring control. Whether our controls are operating effectively, audit has to be conducted. That audit itself is a control again. So technically, what is meant by a control? It's a process, it's a policy, it's a rule, regulation, instruction, any name, guidelines, any SOP, standard operating practices, any name you can call it as. Internal controls are basically policies and procedures which are executed in day-to-day operations of the entity to achieve entity's overall objectives. What are entity's overall objectives? MOA, AOA, they tell what is the objective of the entity. Yes or no? Nothing but to make more business, to make more money, to grow the wealth of the investors. That's the objective of the business. To achieve these objectives, whatever day-to-day policies, procedures, processes that the company follow, they are internal controls. Correct? Now let's look at. So internal control is not, now what is internal? It's a system of control. It may be financial control or it may be other controls set up by an organization management to achieve business objectives. So internal audit means what? It's a professional activity to ensure effectiveness of internal control system. I told you how internal audit is ensuring effectiveness of internal control by monitoring. Internal controls will be verified by auditors. Whether controls designed, implemented, they are effectively working or not, auditors will check. So accordingly, we will get to know. Then what is the role of control in the business? The role is what? Controls ensure best use of resources, optimum use of resources, and help to escalate, nothing but increase profits by reducing losses and wastages. What are the objectives? 5 objectives. 1. Operational objectives. Yes or no? Protection of assets is also operational objective. Prevention of fraud, accuracy of financial reporting is a financial reporting objective. Adherence to laws means compliance objective. Objectives can be broadly classified into 3: operational, financial reporting, compliance. Now here they gave it even more detail. Operations means what? Operations has to be effective. Operations has to be conducted efficiently. So people have to be used efficiently. Material has to be used efficiently. The output should be effective. The output, ultimate finished good, ultimate the service provided to the third party should be effective. And assets must be protected. Prevention and detection of fraud and error. Accuracy and completeness of financial reporting, and adherence to relevant laws and regulations. Now, what are 5 elements of internal control? Control environment, risk assessment, information and communication, nothing but information systems and communication, control activity, monitoring. Control environment means what? Top management of the company will take a challenge. Okay, they will incorporate something called code of conduct. They've designed code of conduct. They design some training system. So top management will design the policies and procedures, and those policies and procedures are implemented through communicating it and information system. Through IS, information systems and communication, they communicate what policies they want to implement. Control activities means whatever the rule that they implemented, and monitoring is how whatever design implementation, whatever we did, is it working effectively? Is it achieving organization goals or not? So monitoring will be happening. Now, like, then we have something called risk assessment. What is risk assessment? Top management decided there should not be any fraud in our company, internally or externally. Third party should not be affected. Internally, company also should not be affected. So for that, company designed certain procedures, CCTV cameras, all that, everything. Yes or no? So company designed all these procedures and all. So the how they identify threats. See, control has to be designed to prevent a threat. The threat identification process is called as what? Risk assessment. Are you clear? Next. Now the implementation of various elements, all these elements, will you find it in each and every size or in each and every organization? Depends. Yes or no? In a normal grocery shop or a flower vendor, you may not find a formal system like this. You may not find a formal system like this. Okay, now all these activities are taken care by single person in a small, a flower vendor, if you look at. Whereas in a very big company, multiple people will involve in all these activities. For example, information system, IT team will be involved. Yes or no? Who they will design the controls through the computer. For example, you see in DMart, for example, you go to DMart, when you're billing the goods, yes or no? Suppose you picked up some, for example, some floor mats. You picked some floor mats, 10 you picked. You show one, sir, multiply with the 10, sir, in the bill used. You tell them, they won't do that. Sir, system will not accept like that. All the 10 has to be scanned. Okay, all the 10 mats, I know they're all same price, same MRP, but I don't have number entering option. Why there is no such number entering option? Sometimes employee might under number it or over number it. You don't want that risk to happen. Everything has to be automated. This is the rule. So management has already predicted one risk here. What risk here? If at all we let employee to enter the number, they might enter 8, they might enter 12, where customer might be, cheated, or customer might lose the money, or company might lose the money if it is underbilled. Correct? That's why better you don't involve in number typing all that. Scan it. That's it. If a barcode repeatedly comes, it automatically show barcode already repeated. Error will throw. So there is no chance of overbilling. There is no chance of underbilling. Is this a protection of asset of the company indirectly? Is it to increase efficiency and effectiveness of the operation? Yes or no? That's it. So the implementation of element. Now who designed this? Who predicted this threat? At top management, they would have predicted this. Yes or no? Auditors would have predicted it. So in the risk assessment process, they would have identified like this. Okay, numbering is going wrong. Then what they did, in the information system, number column they removed. Employee cannot enter how many number of articles that are there. They removed it. So automatically, risk assessment control is implemented. Now employee has to compulsorily scan. Okay, he scanned it already. Now again it is going outside. At the security checkup, again he will check. These are all control activities. Now whether all the system, whatever designed and implemented, right, is it working as it is? Somebody will come and verify that. Then that is monitoring, and there that is done generally by internal auditors, operational auditors, all that. Clear? Next, so the implementation of these elements depends upon size. All elements apply to every organization, but may vary in complexity. The level at which these elements are implemented, complexity will vary, depends. Okay, for some organizations controls are manual, for another organization controls are automated. Again, automated controls, manual controls, IT dependent controls, so much discussion is there. Next, so what are the objectives of internal control? Direct question. Transaction authorization, examining whether transactions are executed as per management set of rules and regulations, and whether transactions are recorded in the accounting period to which it belongs to, and ensuring that assets are protected from unauthorized access, comparing recorded asset with actual at various time intervals, evaluating efficiency of business performance, and highlighting weakness in all business activities. These are various objectives of internal control, which can be asked as a 4 marks question or 5 marks question. Okay, next. What is internal audit? Internal audit is an independent activity within the company only, but independent. Independent means what? Independent of operations. Okay, independent. Objective means unbiased activity that provides assurance, consulting to add value and improve organizations. Internal auditors, no, they are not like stat auditors, like where they check everything right as per law or not. No, they focus on economy, they focus on efficiency, they focus on effectiveness, they focus on adding value to the organization. Correct? It is not, they don't just check everything as per law, everything as per rules. No, that's not their duty. Their duty is to create value addition to the organization. They provide consultancy to the management, they provide advisor to the management. Understood? Now, so it's an independent objective activity that provide assurance, that provide consultation, that adds value to the organization. It helps achieve organization's objective by evaluating and improving risk management, control, governance processes. So internal auditors focus on 3 elements: risk management, governance, internal controls. So they continuously evaluate risk management systems, they continuously evaluate governance processes, they continuously evaluate internal controls, and recommend management improvements in that, identify deficiencies in that, recommend improvements in that. Understood or not? Now whether all the internal auditors will be doing all these 3? No, It is decided by audit committee. So in companies generally will have internal audit department. Okay, in that internal audit department, chief internal auditor will be there and some sub staff will be there. Okay, chief internal auditor is responsible for all these three, but sub staff, no, they are not responsible for all these three. For example, Infosys has an internal audit department of 300 plus. 10 of them may be looking at risk management, some 10 of them looking at controls related, maybe some 50 to 100 will be looking at control related, another 50 will be looking at risk management related. Able to understand? So the role of the internal auditor, is it on risk management or governance or controls or all the three, but each person's role is decided by organization, top management. Again, audit committee and all will involve. Next, so who internal audit process? The internal auditor is appointed generally by management or board of directors. Yes or no? These internal auditors, what they do, they review and evaluate effectiveness of control. So the internal auditor will review and evaluate effectiveness of controls. For listed entities, internal audit head is appointed by audit committee and our internal auditor will report to the audit committee. The auditor provides reports and recommendations to management. Now what is objective of internal audit? Audit objective, checking. You see, he has to check, ensure, detect, ensure, verify, review. All are review functions only, verify functions only, checking functions only. Yes or no? His function is not to execute, his function is to ensure, verify, review. So internal audit objective, check accuracy of accounting, check compliance with standard accounting practices, detect and prevent fraud and error, ensure transactions are approved, or whatever transactions carried out, see whether it is approved or not, and verify liabilities are incurred only for business purpose and not for any personal benefits of the management, and review internal control system and report any deviations and non-compliances. Clear? So they may ask you in exam directly, what is internal audit? 7 marks question. Write about internal audit and what are its objectives. Right away 7 marks question they can ask. Now what are the key differences? Definition: controls are nothing but methods and procedures implemented by management. They focus on day-to-day operation. Internal controls are nothing but checks, yes or no, which are performed simultaneously while the transaction is being carried out. And system, a combination of internal check and internal audit system designed. So internal control is a combination of internal check and internal audit. Remember, controls include audit, whereas internal audit is designed by top management to check activities and ensure compliance. Internal audit basically means what? It's a review function. Review existence and effectiveness of controls, identify gaps in the controls, suggest corrective actions. They focus on detecting fraud, ensuring effectiveness of controls. Internal audit is generally performed after the work has been completed. Next, objective. The primary objective of control is what? Control's objective is what? They have to follow management policies. Whereas internal audit primary objective is what? To identify frauds, to check to check effectiveness of controls, whether controls are working effectively. That's the duty of auditor. Internal control objective is what? Whatever management rules are there, they have to be followed. Yes or no? Scope, broader in scope and includes internal audit. Narrow in scope, where it is primarily focused on reviewing the controls, reviewing the risk management, reviewing the governance processes. Easy. Next. Now again, internal control, depth, in depth. So first topic is a brief introduction to what is internal control, what is internal audit, what is the difference between internal control and internal audit. Now a deep dive into what is meant by internal control. That's why you see the CMN study material, this 14th chapter, 14.0 introduction, 14.1 or 14.2 internal control, then internal audit, then conclusions. That's it. Clear? Now internal control, more in-depth discussion. So internal controls are nothing but steps taken by organization to reduce risks. In which areas? In financial reporting, in operations and in legal compliance. These controls, they help strengthen the systems and processes and prevent and detect errors and irregularities. So now this internal control, they have various control activities. What are control activities? Actual mitigation actions. Control activity is something but actual steps that are taken to ensure nothing happens wrong. So that is actually control. Security guard is checking. That's a control activity. Billing system, the person who has to scan each and every, that's a control activity. Are you getting it? Now, actual mitigation actions like review, approvals, physical verification, safeguarding of duty, safeguarding of assets, all that. Segregation of duties, all that. Types of controls, there are internal financial controls, operating controls, and I also told third category, compliance controls. There are 3 types of controls. Yes or no? By mode of operations, internal controls can be operated manually or through IT. If it is through IT, then we call them as IT controls. IT controls are again two types: IT general controls, IT application controls. Next, coverage. Internal controls are at two broad levels: entity level controls, process level controls. For example, code of conduct is a policy that top management has to decide, keeping in mind entire organization as a whole. Okay. Process level control in production, how the procedure should happen, how the production process should happen. Production is the process here. So at production level, some controls, some rules has to be implemented. For example, DMart you take as a whole, every DMart should have these elements. That is entity level control. Within in a particular DMart in Chennai, in Hyderabad, in Guntur, so and so DMart, their special controls might be there. That's a process level control. Are you clear, all of you? Now, there are various frameworks, just like for accounting, how we have frameworks. For audit, we have frameworks. Same way, for internal controls also frameworks is there. One of the example of framework is COSO is one framework, COBIT is one framework, COCO is another framework, Sarbanes-Oxley Act is also one of the framework. These are all various frameworks for internal controls. Understood? These are some frameworks for internal. In India, the popular framework is Guidance Note on IFC. Okay, which is issued by Chartered Accountants of Institute. Okay, so that's another framework. So this is a framework for internal control. Frameworks are nothing but what? These are nothing. See, accounting standard is nothing but what? Accounting standard is a benchmark. That's a benchmark how accounts has to be prepared. Same way, internal control framework. In accounting framework, no, we call them as financial reporting frameworks. We call them as what? Financial reporting frameworks. Financial reporting frameworks are benchmarks in financial reporting according to which a company has to prepare financial statements. Correct? Same way, internal control framework is a benchmark system based on some criteria used by management or internal auditors to assess design of the system, adequacy of the system, effectiveness of the system. So benchmark is nothing but based on some criteria: COSO criteria, guidance note criteria, COCO criteria, some criteria. Understood? Next, responsibilities under Companies Act. Obviously, who is responsible for entire internal control system? Board of Directors is responsible. They are accountable to shareholders, so they have to establish a dedicated control function which will benefit more than the cost. Next, importance of control environment. See, ultimately, effectiveness of internal control, effectiveness of people, discipline among the people is ultimately decided or influenced by the top management, the culture. So the strong control culture is crucial. Must embed a commitment to robust controls throughout the organization. Internal control procedures, key procedures, what are they? Physical control over assets, like physical controls. For example, CCTV cameras were there. Factory gate, everything is locked. Office doors, everything is locked. Sensors were there. Yes or no? If some ID card is required, access cards are required to enter into the location. These are all physical controls. Authorizations and approvals. Suppose a company has to pay some money to third party, somebody has to authorize it. Only then the bank will process the check. Next, segregation of duty. If at all, you just go to a bank, you will find SOD, segregation of duty. You will find, you go to bank. Suppose you want to get a gold loan, there will be a dedicated person for that. You want to withdraw cash, dedicated person for that. You want to do some RTGS, fund transfer, dedicated person will be there for that. Yes or no? Management designed controls, effective operations control. So these are all various procedures: operational controls, management designed controls, segregation of duties, approvals, physical controls. All these are various control types. Next, internal audit. Internal audit evaluates effectiveness of controls and is a management responsible to ensure compliance with the set of standards. It provides independent assurance. Internal auditors provides assurance on what and all? They provide assurance on risk management, governance and internal control. And if you see, there is a standard called SIA 210. According to that, internal audit function is something which is led by chief internal auditor or an authorized person who works under the terms of the engagement. What are the core activities of internal auditor? Directly 5 marks question can come. What are the core activities? Internal audit involves what at all? It involves, they will develop a plan, they will have a scope coverage, and they will follow some methodology. They monitor and oversee audit assignments, manage and train audit staff, engage extra experts if required, maintain communication with key shareholders, Key stakeholders, not shareholders, stakeholders, establish a quality improvement program. So these are the brief activities. They plan the audit, they monitor and oversee audit assignments, findings, everything. They manage and train the staff and resources required. They engage third parties. They maintain communication with important people in the organization, and they establish quality improvement program. Responsibility: the internal auditor must ensure that internal controls are properly designed, properly implemented, properly operated. He has to ensure that everything is properly designed, everything. If design gap is there, inform. If efficiency is missing, inform the top management. Make sure it is rectified. Where gaps are found, improvement recommendations shall be provided. Next, if providing an independent opinion, on controls, the auditor must follow nature of assurance SIA 110 and base findings on well understood internal control framework. If at all internal auditor has a duty to provide opinion on controls also. For example, we have under 143 subsection 3 clause number I, stat auditor has to express opinion on operating effectiveness of internal financial controls. If at all internal auditor also has a duty to express opinion, then he should keep in mind some established framework and accordingly verify the controls. When we have to give opinion on IFC, as per 143, we follow guidance note on IFC. This framework we follow. We check this guidance note satisfied by the company or not, and if so, then we give a positive opinion on controls. Clear? Next, so internal auditors, they review key risk areas. What are all the high risky areas, where they check how well controls handle those risks. If crystallizes means what? If at all theft possibility is there, if somebody tried to theft inventory, controls are established. For example, inventory, go down is high risk area. So in the go down, if somebody tried to theft, steal something, so how controls are responding? Help management rethink, redesign and improve controls. Internal audit ensure compliance with external regulations, compliance with internal performance standards, compliance with environmental and service standards. These are all compliance controls. Compliance means what? Satisfy laws and regulations outside, satisfy rules and regulations inside. Understood? And environmental and safety standards, all that. Next, COSO framework. According to COSO framework only, we have totally 5 components: control environment, risk assessment, control activity, information system and monitoring. Now detailed discussion. Control environment, this is foundation for internal control. Correct? Control environment is nothing but a foundation relying on support from everyone in the organization. It starts with management and board commitment on internal controls. Board of directors commitment must be there. Only that is control environment. Key questions: is everyone aware of policies and procedures? As per control environment, what are its key questions? Does everyone know policies and procedures? How people know? Through code of conduct. Management has to design something called code of conduct and publish it. So every employee upon joining first will read the code of conduct. Are ethical values promoted and rewarded? Do staff understand and receive training on how control activities are performed? Then risk assessment is the second step, a primary responsibility of internal auditor. They focus on identifying and evaluating risks. Internal auditors should also identify and evaluate risks. This is in addition to entities risk assessment process. Define control activities. They are defined by specific control activities adopted in organization. Auditor test these activities to evaluate their effectiveness. Security guard is there. Is it working correctly or not? Next, information. Monitors the quality of information system that support financial operation compliance reporting. Look at the systems, look at the data exchange, how it is happening between the systems. Next, ongoing monitoring, including daily operational activities and periodical reviews through internal audit. Monitoring is nothing but what? Internal audit. Next, internal control review objectives. What are the internal control review? What are the internal control review objectives? What are the objectives? Operational objective, reporting objective and compliance objective. Operating objectives focus on what? Business performance, physical safeguarding, education, training and coaching of employees, review and approval, segregation of duty. Reporting objectives means what? Authorization, review and approval of transactions, reconciliation and verification of records, password protection, segregation of duty, performance reviews. Compliance objectives means what? Verification, performance reviews, education and training and policies, procedures, manual. You know what? Performance review, education and training, policies, these 3 you can write as a common point in operations, financial and compliance. That's it. Now, internal control audit objectives. So internal control we need to audit, right? What we need to audit in internal controls? We need to audit certain assertions. So transaction related audit objectives, whether transaction really occurred, whether all the transactions are recorded, completeness, whether they are recorded at correct amount, whether they are correctly classified, yes or no, or is it correctly, authorizations are dated and recorded correctly, and reporting. Next, purpose. The control of the internal control audit is not only to identify problems. As an auditor, internal controls, when I'm auditing, it's not to identify problem alone. It is to discover improvement opportunity and help implement necessary changes. Scope of internal control. What is the scope of internal control? Internal control covers all: financial, operational, administrative, compliance. Yes or no? It is recognized as fundamental element of modern auditing. Only when controls are there, auditing can happen. Next, it goes beyond financial and includes quality control, work standard, budgetary controls, periodic reporting, policy review, and quantitative measures. Direct question can come: scope of internal control. So first of all, they give a meaning. Internal control is essential for management, efficient and effective management of organization. It plays an important role in achieving long-term success. First, they give meaning. So control's objective is what? To manage the risk, to protect data and assets, and ensure operations are reliable. So internal control covers everything: financial, operation, compliance. Yes or no? Now it goes beyond financial. It includes quality control, it includes work standard, it includes budgetary, it includes periodic reporting, it includes policy review and appraisal, it includes quantitative measures. Now in stat audit, no, main focus is on financial and accounting controls, whereas in normal operational audit, all types of controls will be focused on. So scope of control, scope of internal control is decided by type of audit also. In a stat audit, financial controls mainly they will focus on, whereas in operational audit, we focus on every control. Next, types of internal control: operational, financial, compliance. Administrative, they said fourth one, which is actually part of operational. Administrative, they are related to managerial decisions and supporting records. Record keeping of salesmen contracts with clients, example. Operational control, implemented via management accounting techniques, budgetary control, all that. Financial, concerned with asset safeguarding, prevention and detection of errors like accounting process and financial reporting. Compliance, it related to compliance with laws and regulations, including technology, IP related. Then structure of internal control. Structure, there is no standard structure that suits every organization. There is no one size fits all systems. It varies across organizations based upon several internal and external factors. What factors influence the structure of control? Factors are type of the business, size of the business, infrastructure, level of infrastructure, more of IT dependent, more of manual dependent, human resources involved, all that. Now, what are the factors to be considered while designing internal control? 7 marks question straight away can come. Segregation, there should be a proper segregation of duty. No single person should handle entire transaction. Authorization must be different. Delivery by somebody, accounting should be by somebody, finance related dealing by somebody. Rotation must be there, and people who are performing must have competence and integrity. There must be appropriate levels will be there. Accountability must be brought. There should be resources in the organization to ensure the controls are correct. Supervision and updates. So factors to consider while designing control systems. Again, types of controls, not that important. Preventive, detective and input, but not that important. Benefits, it's an early warning system, fraud prevention, and it avoids issues and fines in future. Internal control review method, narrative record, checklist and questionnaire and flowchart. I told you, checklist means set of questions where auditor himself go and inquire, look into the data, and then he himself fill it and then come back. Questionnaire means set of questions we give to the client will fill and give us, then we'll verify. Next. Then responsibility for internal control under Companies Act. Under CARO, clause number 14 is there, which talks about auditor has to report on internal audit. Actually, it's not internal control. Okay. Audit committee must review internal controls. Audit committee briefs the board of directors, and in ultimate responsibilities with the board of directors to ensure effective internal controls are in place. Next, evaluation. The auditors work largely depends on how strong or weak the internal controls, how in-depth the auditors will be performing, how long audit will take. It depends upon the strength of the internal control. Internal controls are, if it is strong, audit can be quickly completed. If internal controls are weak, audit will be exhaustive. Due to limited time, auditor decides how deeply to check routine transaction. Generally, they don't check routine transaction if controls are effective. If controls are weak, they check routine transactions also. Further, audit report must state as per clause number 14 whether there is an adequate internal audit system. Actually here it is internal audit system based on size and nature of the business, whether internal audit reports were considered during the audit, during the stat audit. Under Companies Act, audit committee must be there for listed entities and public companies with paid up capital more than 10 crore, turnover more than or equal to 100 crore, loans, debentures, deposits more than or equal to 50 crore. In law, I think you have this audit committee discussion. Directors topic, yes or no? Directors have to form various committees, risk management committee, audit committee, so many have you? Yeah, next. Powers of audit committee. Audit committee can call for auditors' comments on internal control. They can discuss issues with auditors. They investigate activities. Role of audit committee. They evaluate IFC. They review performance of stat auditors and internal auditors. They review internal audit function, structure and frequency. They discuss findings. They investigate how frauds and irregularities how they reported to board of directors. They discuss before audit commences on nature and scope of the audit and discuss areas of concerns post audit. So they can discuss with the auditors before the audit, before the auditor started the audit, as well as after auditor completed the audit, and they review performance of the auditors also. Audit committee role. I told you this itself can be asked as a 4 marks question. Next, auditor gain insights using internal control questionnaire and flowcharts. Generally for questionnaire, no, the answers are like what? Yes, no, not applicable, like that. Then internal control and the auditor, COSO framework is sponsored by 5 academies totally. Yes or no? Institute of Internal Auditor, American Institute of CBA, Financial Executive Institute, American Accounting Association, Institute of Management. As per COSO, what is internal control? It's a process initiated by board of directors, management, employee to give reasonable assurance of achieving objectives. What objectives? 3 objectives: financial reporting, legal and regulatory compliance, operational objectives. As per COSO, we totally have how many components? 5 components: control environment, risk assessment, control activity, information communication and monitoring. That's it. So almost over. Then what is the primary objective of internal control? Same objectives you can write. In the intro we saw no objectives, that same answer you can write. Role of internal auditor not required, this is not required. Next, internal audit evolution. How internal audit evolved over a period of time. In ancient time, in Arthashastra, Chanakya described regarding controls, periodic verifications, all that, and he also spoke about 40 types of embezzlements. Next, as companies are growing, corporations are growing with multiple locations where decentralized audits are required, internal auditors are hired to protect assets and detect fraud. 2002 Sarbanes-Oxley Act, which is one of the basis for corporate governance. CG means here corporate governance. It mandated audit committee. It mandated assessment of internal control effectiveness and modern internal audit. Internal audit is mainly now today looked as independent assurance and consulting activity related to risk management, governance and internal controls. They give insights into culture, compliance, procedures, all that. So what is the necessity of internal audit? Internal audit necessity objectives are simple: identify weakness and controls, give management recommendations, detect errors and frauds, suggest corrective actions, timely detection of resources misuse, prevent unnecessary expense, improve processes workflows, assist external auditors reducing their effort and time. I told you that time 610 standard is also there. Then keeps operating staff alert, ensuring books are up to date, provides independent review of operations and business process within the company, how operations are going on, how business processes, independently somebody review within the company only. That's it. Who can be internal auditor? Anybody. An outsider can be, or an employee. What should be the qualification of internal auditor? Anything. There is no compulsion that he must be CA, he must be CMA. No, any qualification. Internal auditor can have any qualification. The Companies Act 138 section deals with internal audit. 138 section deals with what? Internal audit. That's it. This revision is also done. 35 minutes it took. Okay. If you do a deep revision, it will take 1.5 to 2 hours maximum, where you can remember very well. 1.5 to 2 hours if you spend on this chapter, you remember pakka. Clear? That's it. So now we'll just pause for 2 minutes, then we'll start immediately question bank. Yes. So let's quickly revise this entire 15th chapter. Look, we completed internal audit, operational audit, entire discussion. Now before we solve question bank, we'll first quickly revise this entire topic. So now In this, there are 6 subtopics, right? What is internal audit, what is operational audit, internal audit under Companies Act, COSO framework, and we have at last something like some different, internal audit, operational audit differences. We have documentation related discussion, so much. Okay, now first let us quickly revise internal audit under Companies Act. Directly this entire A category not required, I already told. Now next look at, now point number B. So compulsory requirement, section 138 of the Companies Act. As per Companies Accounts Rules 2014, they require certain companies to appoint internal auditor or a firm of internal auditor. Like, what are the companies? Every listed company must have an internal auditor, and every private limited company which satisfies 2 criteria: turnover of 200 crore or more in the preceding financial year, outstanding loans or borrowings from exceeding 100 crore or more in the preceding financial year. Whereas for a public company, all these 2 criteria apply, and 2 more criteria are also given. What are the 2 more criteria? Capital criteria 50 crore or more, deposits accepted criteria 25 crore or more. All these limits you must see based on preceding financial year. Next, internal auditor may or may not be employed. They can be CA, or they may be CMA, or they may be some other qualification. But remember, for producer companies, yes or no, internal auditor must be a chartered accountant. We have given here. For producer companies, as per section 378 ZF, yes or no, so the internal auditor must be a chartered accountant. For other companies, CA or CMA or some other professional can be appointed. Now who will like, what is the role of internal auditor? Internal auditor role is decided by audit committee board and in consultation with internal auditor, where the scope, functioning, periodicity, methodology, everything will be decided. Then now procedure for appointment, we striked off because in the filing formalities it is already covered once again. Now once an internal auditor is appointed in the board meeting through board resolution, MGT 14 form has to be filed within 30 days of the board meeting. This MGT 14 filing requirement is exempted for private companies. Okay, next. Now obviously, who will appoint the auditor? Internal auditor, board of directors through board resolution. Statutory auditor cannot be internal auditor. Cost auditor cannot be internal auditor. We know that. Audit committee and board, after consulting with internal auditor, decides the scope, functioning, periodicity, methodology of the internal auditor. Then powers and duties. Companies Act, they do not specifically mention any powers and duties of internal auditor. The scope of internal auditor, functioning, periodicity, everything is decided by audit committee or board of directors after consulting with the internal auditor's head. Yes or no? Next up, what is the punishment for non-compliance? If at all the company or internal auditor failed to comply with 138(450), they are punishable with a fine of 10,000 rupees, and for continuing offense, they are liable for 1,000 rupees per day penalty. Maximum penalty cannot exceed 2 lakhs for the company, and maximum penalty cannot exceed 50,000 for the officer. Next, what is the procedure? First, get a consent letter from the internal auditor whom you are going to appoint, stating that he is eligible and not disqualified. Okay. 2, give a 7 days notice for conducting board meeting. Pass board resolution. Inform the appointed auditor that he was appointed. File a form. Then send intimation to the appointed internal auditor. Like, once you file MGT 14, that acknowledgement and all forwarded to him, then he will come and do the work. Are you clear? Now remember, here internal auditor, who is a third party firm when we appoint. Suppose if at all we are recruiting as an employee, MGT 14 form not required. This is one, like, it's nowhere mentioned here clearly, but if at all we are recruiting as an employee, do you need to file MGT 14 whenever you recruit an employee? No need. So today, most of the big companies, internal auditors are employees. They are not outside firms. Generally, this MGT 14 board resolution at all is for when an outside auditor is specifically appointed. Next. Internal auditor cannot be appointed by board by simple circulation. Statutory auditors cannot be internal auditor. Cost auditor cannot be internal auditor. That's it. Then we have seen CARO related 2020 provision, and in CARO we know that there is a clause number 14, which has 2 subclauses. 1, the statutory auditor has to report whether the company has internal audit system that commensurates with the nature and size of the company. 2, whether the internal auditor's reports were considered by statutory auditor while performing his duty or not. That's it. Then now, so internal control means what? Policies and procedures established by management to ensure efficient business operations, maintain accurate financial records, all that. Next, if at all any major weakness is there, you need to report it. Major weakness means what? It is not defined anywhere, but whether it is purely auditor's judgment. depends upon this weakness exposure level. So what is the level of transaction material misstatement happens, significant risk is there or not, that decides whether it's a material weakness or not. And I told you there is a standard called 265, there we call it as deficiency or significant deficiency. Next, so auditor must check adequacy of internal controls like adequacy of segregation of duty, adequacy of documentation, adequacy of asset recording, adequacy of timely recording of transaction, restriction of access to authorized persons only, and efficient management systems. And if at all there is a continuing failure occurs, when identified weaknesses and they are not yet corrected, okay, when major weaknesses are reported at audit planning, they are not addressed by management, we call them as continuous failure. What is a continuous failure? Major weaknesses remain uncorrected even in the subsequent year. Major weaknesses reported at planning which are not even addressed. Yes or no? This is called as what? Continuing failure. Then what are specimen reporting? Like internal auditor, what are the points that he need to consider before he report it? First, he need to review operating cycle, revenue cycle, internal audit reports, everything, document and report inadequacies, review board meetings, audit committee meetings, all that. If weaknesses are there, report them, and corrective steps also report them. Consider the impact of weakness on audit approach and overall financial reporting ability. By the way, this is something not internal auditor has to do, this is something external auditor has to do. So this is for external auditor. When he is reporting under CARO, under clause number 14, external auditor shall consider internal audit report, look at the weaknesses, look at board meeting minutes, look at the internal auditor's report also, look at internal reports. So all this external auditor has to consider before he comment under CARO 2020. That's it. Then CARO applicability. CARO is applicable from financial year commencing on 21-22 onwards. Okay, now CARO is applicable to all the companies including foreign companies except 1% company, small company, private limited company subject to 4 conditions, and banking company, insurance company. Yes or no? Now section 8 company. So private limited company subject to what? 4 conditions. Not a subsidiary or holding of public company. Paid up capital and reserves and surplus shall not exceed 1 crore on balance sheet date. Aggregate loans and borrowings from banks and FIs shall not exceed 1 crore at any point of time during the year. Turnover calculated as per schedule 3 shall not exceed 10 crore. Yes or no? And I told you, if a particular private company falls under small company definition and satisfies small company limits, it is treated as a small company, and accordingly CARO will not apply. Yes or no? Next. So what is the beginning page number? And next. It's okay, we'll go with the fourth topic, role of CMAs in internal and operational audit. First of all, let us see what exactly is operational audit. So what is operational audit? Operational audit is one of the three major functions of internal audit. What are the 2 other functions apart from operations? Financial and compliance. Yes or no? So internal auditor will mainly plays a supplementary role in financial and compliance audit, but operational audit is primary responsibility of the internal auditor. Maybe in a legal regulations, financial things, internal auditor may only give a supplementary role. He may not be in-depth involved in that, but internal auditor in-depth will involve in which areas? Operational areas. Next. Operational audit objective is to improve efficiency and effectiveness of functions within the organization. Operational audit helps perform tasks more economically, all that. Then operational audit covers both production and service centers. It evaluates how management is performing and efficiency. Just a minute. Yes. So historically, operational audits are conducted using questionnaires, interviews, all that. Now financial audits determine the financial status of the company, whereas operational audit determines why the company reached that particular state. It may be profitable state or non-profitable state, whatever. So operational audit evaluates 4 functions of the management. In operational audit, what we evaluate? 4 functions: planning, how management is planning, how they are organizing, how they are directing, and how they are controlling various operations. Next. Operational audits can be functional reviews. At a functional level also, operational audit can review, such as purchase department versus overall procurement operation in coordinating with purchase, production and market forecasting. So when you're doing some market or production product forecasting or market forecasting, you may review purchase departments, you may look at procurements department, all that. Next. So what is internal and operational audit? Comparison. Internal audit It is purely compliance objective. It focuses on financial accounts. It is purely audit oriented, transaction based, focus on policies, budgeting, monitoring by cost center, policies, transactions, and compliances. Whereas operational is purely a risk based approach, risk identification, process improvement. It focuses on business operations. It is completely process based. It focuses on risk management. It brings accountability for performance improvement, goals, strategies, and risk management. Risk management is main motive in operational audit, whereas in internal audit it may not be risk management completely primarily, yes or no, but you see internal audit includes operational audit. Operational audit one of the subdomain of internal audit, correct? One of the subdomain of internal audit is operational audit, that's it. But if at all, if somebody asks you internal audit traditionally, how it mean? Traditionally internal audit means financial perspective. Slowly now in the modern time, internal audit is predominantly focusing on operations. There is no point of verifying books, records, vouchers and all. There is no point. Everything will tally. At the end of the day, if you want to add value to the organization, focus on operations, how the operations are carried out. Are they effectively carried out? Are they efficiently carried out? So internal auditors focus is shifting traditionally from financial to modern operations. Thereby operational audit became primary responsibility of the internal auditors. Understood? Next. COSO framework, committee of sponsoring organization of the Tradeway Commission. Okay, that particular Tradeway Commission, that commission, nothing but the COSO body, they have released internal control framework. Okay, and as per that internal control framework, they have totally 5 components of internal control: control environment, risk assessment, information system, control activity, monitoring activity. Like this 5 activities were identified. Now as per them, what is an internal control? Internal control is nothing but a process which is implemented by management to provide reasonable assurance in achieving the following objectives. Like what are they? Efficiency and effectiveness of operation, that is called operational objective. Reliability of financial information, that is called financial objective. Compliance with laws and regulations, called compliance objective. So operational audit, no, what it focuses on? It focuses on efficiency and effectiveness. So reasons for why we perform operational audit: in order to comply with policies, to know whether are there any excessive sales return, excessive product mix, excessive shutdown time, all that. Now what are the steps in conducting operational audit? Now here, no, actually this third point and next point you can together call it as a single 7 marks question. What is operational audit? What are the steps involved in operational audit? Steps are what? First, to know, establish the scope of the audit. Production you need to do operation audit. Purchases, employee cost, where you need to do operation audit. First establish the scope. Then understand the company's operations. Review main records, related records like organization charts, policies, performance reports, all that. Identify critical areas in that operation. Okay, then report it. What you need to report? Report must be fact based. Report must be informative. Report must be in a timely manner. It must be sent to appropriate management levels. That's it. Next. Then we have something called audit engagement letter. Engagement letter is a formal document, correct? Which highlights scope of the audit, terms and conditions, yes or no, between auditor and client. The main objective is to minimize misunderstanding regarding the above terms, correct? Who receives it? It is generally addressed to the audit committee or board of directors, yes or no? And the letter is sent in case of all new clients. And what about existing clients? In case where there is a changes in terms to the existing clients, or if auditor believes management may not understand the terms, that time also we will send. An engagement letter should be sent before the audit begins to help avoid misunderstandings. The objective and scope of audit are determined by law, procurement law or pronouncements, or the client. Okay, so engagement letter will provide clarity of terms and conditions. That's it. What engagement letter includes? It will have an introduction. It will talk about objective of the audit. It will talk about the proposed timetable. It will also talk about who are going to be part of the audit. So these are the 4 things which audit engagement letter generally talks about. And in initial, before starting the audit, like how auditor will start the audit, internal or operational. Before starting the audit, first we will meet the client to discuss about what are their objectives, and I will get their input. Ultimately, we need to perform efficient and effective audit. So the respective staff need to provide necessary documents, and then all the documents will be provided. I will review, then I will draft my observations. Okay, then I will discuss draft observations with concerned department head. Then I will finalize the observations. Then I will give final audit report. Yes or no? See, ultimately, operational audit or internal audit, their objective is not fault finding. Their objective is to help departments to achieve their objectives by providing information on where they are lacking, where they are ineffective, all that. That's it. Then we have audit working papers, all that. Okay, continuous final audit, I'll come back to it. Working papers, audit working papers. Audit working papers are nothing but a proper records, formal records created, maintained by auditor. What this contains? These documents contains procedures performed, evidence gathered, conclusions reached. Audit working paper, no, it will help us to support findings. It demonstrates compliance with law. What are all it includes? Trial balances, testing documents, analytical procedure, what are all information that you gathered in audit. And it is retained within audit file as confidential document. It is accessible only to regulator and internal external reviewers if at all required. And standardized format will be there as per some standards. So is there any standardized format of audit documentation? Some guidelines were there. There is no established standard like that. Organizing for easy review and cross-referencing timeline you must create throughout the audit process, not after the end. You must do while you're doing the audit. It is finalized once audit field work is completed. Audit field work means what? Going to the client premises, some 20-30 days we finish the work and come back to our office for finalizing the accounts, finalizing the audit report, all that. So at the time of finalization we assemble it. Okay, next, it reflects audit findings at specific points in time. What are all specific issues that you found? They are all reflected in working papers. Now these working papers are two types: permanent audit file, current audit file. Permanent audit file contains information about the client. What is he, what background, what are bylaws, all that, what are previous auditors, previous financials, previous audit reports, all that. Whereas current audit file is year specific. Current audit file is for every year. For the same client we maintain separate current audit file for every year. Yes or no? Like correspondence regarding every year appointment, extract of board meeting minutes of every year, management letters, transaction balance analysis, audit program of respective years, conclusions regarding the audit, cross referencing, adjustments, reconciliations, all these are related to year on year specific. Then ownership. Who are the owners? It is property of the auditor. It is his wish whether to provide a portion of it or extract to somebody. It is his wish completely, but he should maintain confidentiality. Now these papers must be kept in safe custody and handled confidentially for a period long enough to meet legal, professional and record retention requirements. How long you have to retain? So long that whatever is required for legal and professional compliances, all that. And we have seen cost auditor has to retain working papers for 10 years as per CAS 102. Next, how long they should be preserved? It depends upon the client agreement. It depends upon the firm policies. It also depends upon the complexity and significance of the work carried out. It also depends upon legal requirements. And if at all litigation is there, you may have to keep it until the litigation gets completed. Next, advantages. It's an evidence. It's an evidence that working papers provide evidence that the audit was conducted as per skill care and as per standards. You know, it serves as a valuable guide for future audits. Working papers help the auditor demonstrate compliance with law. They serve as training tool for the new auditors, showing audit process, how they were documented, all the transferring knowledge. Well prepared working papers ensure a smoother external review. If somebody want to check whether you worked correctly or not, they may check your working papers and know whether you correctly worked or not. Next, and working papers document every adjustments and reconciliations made, enhancing reliability of financial statements. In the financials, no, original financials are there, final financials are there. So what are all changes for the working papers? Might contain data. Working papers might contain reasons for that. Then audit notebook. Audit notebook is nothing but, you know, audit is conducted by audit partner and team members. Team members, no, they will be allocated with various works. When they're doing that work, whatever queries, observations, ideas which they got, they can record it in a notebook or Excel sheet, and that notebook or Excel sheet is called as audit notebook. Remember, Excel sheet is also called as spreadsheet. That is another way, another name for Excel sheet, MS Excel. Okay, next. So audit notebook is a tool used by auditor to record his thoughts, observations, key information that he got during the audit. So it serves as a permanent record for each audit. Again, I'm telling you, audit notebook can be part of permanent audit file. It can also be part of current audit file. The audit notebook must be maintained clearly, completely, systematically with a separate notebook for each and every client. Next, audit notebook typically includes what are all? Various documents that you are obtaining from the company, various observations that you are identifying, all that you will note it down. Next, retention period, same provision whatever we have seen for working papers. Advantages, same provision whatever we have discussed for working papers. No need to discuss that, correct? Next, then what is a continuous audit and final audit? Final audit is something where audit is done after financial year ends. Continuous audit is something where audit is done throughout the year. This is recommended when the controls are weak, or when high volume of transactions are there, or final accounts need to be presented quickly after year end. Then better do audit while books of accounts are prepared, so it is easy for you to finalize the audit report at the end of the year. That's it. So continuous audit is a detailed examination of transaction throughout the year or at regular intervals. It requires ongoing engagement of audit staff at client place. At client place, no, continuously our audit staff will be there. That's called continuous audit. Easy. Next, what is an audit program? Audit program is a detailed plan that specifies procedures to verify each item. Purchases, how to verify? Verify purchase order, verify goods received note, verify GRN, verify inspection letter, verify quality letter, quality approval check. Yes or no? Verify quantity, verify so and so, verify so and so. Within purchases, what points you should verify? If I give that steps, no, that's called audit program. Yes or no? It serves as a guide for organizing and distributing the audit work and helps check for any omissions during the audit process. Factors in considering audit program. Previous audit observations. When you're developing audit program now, look at previous audit observations. Look at checklist in past audits to identify where to focus on. New changes in laws and regulations you look at. Special areas instructed by top management. Consider all this and then accordingly develop the program. Your program should be addressing management needs. Your program should address all the issues that arise in the last audits. Your program should address all key areas. So in that way, so when you're developing audit program, these are all points you should consider. Next, so internal audit program. What are all requirements in an internal audit program? First, objective of each area. Production, when you're doing internal audit of production, what is the objective? Identify that wastages are as per standards set. It should be less than or equal to standards. Accordingly, you should design questions to be asked. Staff responsible for each activity, time allocated for each activity, detailed instructions for staff. These are all various requirements of internal audit program. Next, advantages. It's a ready checklist for what to be done, and audit work can be properly allocated to team. Work can be easily trackable. Okay, how much work is completed, all that. It helps both audit assistants and principals to discharge their responsibility. It ensures uniformity in audit procedures. It serves as a basis for planning audits in the subsequent year. This can be used as an evidence in case if auditor was charged against negligence, like you didn't do audit properly. I will show my program, I will show my working papers, and I will come out without any punishment. Next, disadvantages. Some team members, they may lose interest. Array, mechanical it is here, like that. Then an audit program may be unnecessary for small entities. While program fixed responsibility, some inefficient people since a query is not listed in the program, they may ignore it, saying whatever you gave me, I followed it. Then rigid program cannot be applied universally for all businesses. So these advantages can be addressed by consulting audit team by modifying program based on experience gained in the audit. That's it. Audit program topic is also over. So operational audit, deeming framework, we call it as. What is the objective of operational audit? Deeming framework. Objective: detect, evaluate, measure, improve, nurture, govern. Yes or no? Advantages and disadvantages of operational audit. Operational audit provide objective, means unbiased opinion, that lead to faster production, reduce turnaround time, highlight process inefficiencies, helps in cost reduction. Important steps: define the scope of the work, knowledge of the client, evaluate the controls, determine the audit procedure based on risk, document, forward the opinion, issue the audit report. What are the steps in operational audit? We have seen one more question later. That also you can write alternative answer. Okay, next. That's it. With this entire revision has been completed. 25 minutes hardly. If you do a detailed revision, maximum 1.5 hours. Detailed revision takes 1.5 hours, not more than that. Correct? That's it. So now we'll just I'll stop this video. In the next video we will discuss question bank. Okay, so let's do a quick revision of IS systems and security audit, information systems security audit. So information system and technology, what is the objective? So advancement in information systems and technology benefits businesses and also brings challenges like hackers, malware, virus, cybercrime, all that. So regular follow-up is necessary for the information system. What is information system security audit? Information security audit means what? It's an independent review of system records, system activities, system documents. What is the objective of this audit? For improving information security, preventing poor security designs, optimizing security safeguards and processes. So audit objective is optimizing also there. Optimizing security safeguards, preventing poor security designs, and improving information security. What is a security framework? Security framework is nothing but set of policies and procedures. Policies and procedures are documented. They may be software, they may be sources that discusses, advises that discusses on topics related to information security, information system security, especially in planning, managing, auditing of overall information security practices. Security of an information system is a continuous process which require regular follow-ups, and audits are still in their early stages. A simple framework is needed to guide this process. Next, so what is IT security audit? IT security audit is nothing but a comprehensive examination and assessment of enterprise information security system to identify weak spots, vulnerabilities in IT infrastructure. So identify spots, weak spots and vulnerabilities, and verify security controls and ensure regulatory compliance. Identify weak spots, ensure security control, and also comply with regulatory guidelines. These are the three objectives of IT security audit. Next, purpose of this audit is what? It helps organization to achieve security and compliance goals. So this IT security audit enables verification of security status of company's infrastructure like hardware, software, services, networks, data, all that, data centers, all that. So what are the questions the auditor has to check? Are there any weak spots and vulnerabilities? Are there any unnecessary tools and processes? Can the organization recover from data breach and system outage? What action should be taken to address security flaws? All these points auditor focuses on. This itself I told you, purpose of what is IT security audit and what are the key questions to be answered. So like that a 4 marks question can be asked. IT security audit, another objective is compliance with security law, data security laws. Ensure that IS systems meet standards for collecting, using, retaining, destroying data as required by national and international regulators. So typically this is called as a compliance audit, which is conducted by a certified security auditor from a regulatory agency or an independent third party vendor through internal audits can also be performed. What are the 5 steps involved in IT security audit? IT security audit, remember, at last we have seen one more audit, IS audit, information system security auditor. There we saw 5 steps: planning the audit, test of control, test of transaction, test of balances, and last one, reporting. Here you see, define the objective, plan the audit, perform the audit, report the results, take action or deviation. This is IT security audit. Okay. Defining the objective. First, auditor has to list out the goals of the audit. Ensure it is matching with the company objectives. Now, key questions. Which systems to be tested? Do audit digital infrastructure or only physical equipment? Is disaster recovery in the company a concern? What are the specific risks involved? Does the audit need to prove compliance with a specific regulation? So what are the objectives of this IT security audit? IT security audit, what are the objectives? So is the audit is to check compliance with the regulatory framework, or is the audit to identify disaster recovery, or we need to audit entire infrastructure? What all that? Planning. Create a well organized plan. Include roles and responsibilities, schedule of the audit, methodology. Tools for monitoring, reporting, and data classification must be identified. Address logistical challenges like downtime required in audits, all that. Ensure all team members have common understanding of the process. Now perform the audit. How do you perform the audit? The following the plan and methodologies agreed upon during the planning phase. What exactly you do in performing the audit? Scanning the IT resources, assessing network security, data access levels, user access rights, physically inspecting data centers for disaster recovery risks, interviewing non-IT people to know their knowledge of security concerns and adherence to security policies so that loopholes can be addressed. Report. Compile a formal audit report for the management or for the regulatory body. The report should include list of security risks and vulnerabilities identified by the auditor, recommendations to mitigate, and management has to take necessary action. Implement recommendations from the audit report like remediation procedure to fix flaws in the security system, employee training, adopt best practices, or acquire new technology to strengthen the system. Now, what is the difference between security audit and risk assessment? Security audit is performed on existing IT infrastructure to test and evaluate current security controls and operations, scheduled at regular intervals as a best practice to continuously monitor and improve security position of the company. What security audit objective is to identify flaws in the current system. Security audit requires compliance to the best practices to ensure effectiveness. Then on the other hand, there is something called risk assessment. Risk assessment is generally conducted at initiation of IT project, or whenever threats are identified, or whenever environmental changes happen. Risk assessment we do. When risk assessment we do, especially whenever, because there is a rise in ransomware attacks, because there is a significant shift is to work from home, remote working. So the risk assessment is regularly performed even in a matured security environment to identify new risks, to reevaluate existing risks. It is objective of security or objective of risk assessment is to design IT infrastructure based upon known risks, focus on external threat and their potential impact on the IT infrastructure. Next, other things to consider. It's not required, not that important. Okay, next. Now, what is a compliance and security framework? Especially in a bank, cyber security is essential for banking sector due to major reliance on electronic platforms and online transactions. RBI expects banks to assess their cyber security preparedness and follow a top-down approach in information security governance, starting from operating board to ITIS committees and lower levels in the hierarchy. So what is RBI expectation from bank? Bank has to report to the RBI. Which department? Cyber Security Information Technology Examination Cell of Department of Banking Supervision. So to that department of RBI, bank has to provide the following details. What details? Gap analysis against cyber security resilience framework. RBI has given cyber security resilience framework rules and regulations and what the bank has implemented. What gap is there in the implementation? Information security controls implemented by the bank and with their effectiveness. Plan of action to mitigate the risks identified. Role of Chief Information Security Officer, that and all has to be reported to RBI. Now, how RBI audit is performed for banks? RBI audit involves in-depth technical assessment, information security process audit, applicability of cyber security controls, checking evidence on logs on server, checking compliance with RBI technical requirements. Finally, RBI audit report will be there. In that audit report, what points they will include? Gap analysis report will be there. What recommendations on who need to do what? So wherever applicable, the report will specifically explain actions and who are the team members in the bank responsible for. Next. So various RBI cyber security framework domains. What are RBI cyber security framework domains? So RBI provides clear guidelines for controls implementation for baseline cyber security framework. Baseline cyber security means what? Level 1. This is level 1. Level 1 deals with baseline cyber security controls. What are baseline cyber security controls? There must be inventory management of business. There must be IT assets. There must be patch management. There must be vendor risk management. There must be audit log settings. There must be environmental controls. There must be network management and security. There must be anti-phishing control. There must be user employee awareness. There must be customer education awareness, secure configuration, secure mail and messaging system. So these all parts of baseline controls. RBI provides clear guidelines for controls implementation for baseline cyber security framework. Baseline cyber security framework is something which every bank has to implement. Level 1, you see level 1 below it is there. Level 1, what are they? Baseline cyber security and resilience requirement. What are baseline cyber security resilience requirement? Above we have given the list. And vendor and outsourcing risk, vendor management or outsourcing risk management. These all comes under level 1. Level 2 banks, they must implement additionally secure configuration, network management security, application security, life cycle, user access control, anti-phishing, incident response management, all that. You know what? Whether it is level 1, level 2, level 3, level 4, you write these points only. You will get the same marks. Level 1, level 2, level 3, level 4. What is level 1, level 2, level 3? All that level based cyber security requirements by RBI. Level based cyber security requirements. Now level 4 alone we have extra point. Some banks, which are very huge banks, they need to have a CSOC. CSOC means what? Cyber Security Operations Center. Okay, these banks must participate in cyber drills. They must have an IT strategy and policy. They must have an IT governance framework. They must have a chief information security officer, information security committee, audit committee of board of directors. Next, what is cyber security? What is cyber forensics? In the first 3 topics only bit vague and tough. From here it is easy, this chapter. What is cyber security? Cyber security is a defensive measure to protect against cyber attacks. Cyber security, what skills are required? Wide range of IT skills, including skills in programming, operating system and networking. Cyber security objective is to build a network of system that is impossible to breach, ensuring protection of information. So it is primarily preventative, aiming to stop cyber incident before it occurs. Like roles like ethical hackers use offensive skills to test network and improve them. So what are all it covers? It covers many protocols that are used in real world. It includes user permission, file transfer protocol, frequently changing passwords, all that. Everyone in organization must practice safe computer usage. Remember, this was asked in some December 23 or June 24 exam for 7 marks. Cyber security means what? I think recent exam, sorry, June 25 they asked cyber security means what. Correct? This answer only. Next, what is computer forensic? Computer forensic is about recovering the data from device, often uncovering deleted criminal activity. It is reactionary. It takes place generally after incident has occurred. Next, it assists in investigation. Computer forensics helps recover lost data in case of individuals and companies. It uses programming skills, hardware skills, software knowledge to recover the data. It is helpful in criminal investigation. In criminal investigation, computer forensic specialists, they recover. Uncover means recover. Identify data to present as an evidence in the court by following protocols to preserve the suspect's right. Similar processes are used to recover lost data, but court admissible evidence protocols may not be needed. So even normal cases also, even though not as per the court, not in the court, even otherwise also cyber computer forensics helps might be required. Next, if data is lost as a result of cyber crime, the cyber computer forensic expert may recover the data and also identify the perpetrator. So cyber security focus on prevention, whereas computer forensic focus on recovery of data and reaction to the incident. Cyber security prevent cyber crimes from happening, whereas computer forensics recover the data after an attack. Cyber security, think of cyber security professionals act as a security company protecting assets. Cyber security means what? Computer professional, cyber security professional, they act as a security. They act as a security protecting the assets. Whereas computer forensic, no, they think of computer forensic experts as investigators. They act as an investigator. Here they act as a security people. Understood? Next, objectives of cyber security: protect the data, protect the program, protect the network from attacks. Computer forensic help recover lost data, uncover evidence from criminal activity. That's it. What are the specializations available in cyber security and computer forensic? Specialization is what are all there? Cyber security, computer forensic, data recovery specialist. These are the 3 specializations. Each of these are 3 different domains. Okay, that's not required much. Then IT audit in banking sector. So one of the major objectives is what? Safeguarding information system assets and resources. Safeguarding information system assets and resources. What are information system assets? Hardware, software, facility, personnel knowledge, data files, system documentation, all that. These must be secured via internal controls to prevent damage to hardware, theft, deletion or alteration of software, misuse of supplies like negotiable forms. IT infrastructure means what? Physical installation, system software, IS process. So the auditor must review physical security of facility, system software security, adequacy of control. So protection is needed from what and all? Fire, flood, power failure, malicious attacks. What are all the safeguards? Fire prevention system, fire detection system, water damage control, uninterrupted power supply, all that. Another objective of IS audit. IS audit, another objective is what? Data integrity. This one also asked December 24 exam. Yes or no? So desired data features accuracy, confidentiality, completeness, up-to-date status, reliability, availability, timeliness, and effectiveness. And another objective of IS audit is maintaining system effectiveness. System effectiveness means what? Output is more than budgeted output actual. If the percentage is more than 100, system is effective. Okay. So the IS auditor evaluates the extent to which information systems support organization objectives. In this company, how far technology plays a major role in achieving the company objectives. Today, almost every company, technology is the only player which achieves the company objective. So an effective system plays a vital role in achieving organizational objective. So accordingly, IS auditor looks at to what extent IS information systems are achieving the company's objective. So major goals of computerization. What is the goal of computerization? System should enhance user productivity. Correct? System should increase accuracy of information and reduce retrieval time. System must be user friendly and regularly used and ensure user satisfaction. System hardware or software should be periodically upgraded. Benefits derived must exceed total cost of procuring, implementing, operating, and maintaining the system. Correct? So task accomplishment, quality, operational effectiveness, technical effectiveness, economical effectiveness. These are 5 types of effectiveness is what expected from computerization. And efficiency, system efficiency. System efficiency. See that. Remember, information systems, no, they use resources like manpower, missions, all that, which are scarce and costly. So efficient IS must be achieved. Efficient information systems must achieve desired objectives using minimum resources. Need for efficiency assessment, especially it is needed, especially when it is needed. If full capacity, if a system is operating at full capacity, efficiency analysis become critical. IS auditor must assess whether capacity is exhausted or resource allocation causing bottlenecks. So recommendations: evaluate hardware, software, all these capabilities versus workload. Verify application software performs how it is performing in real world. Ensure that IS supports management planning, all that. So essentials for system efficiency. Organizations must obtain maximum output with minimum input. Efficiency depends upon optimal use of hardware or software, regular upgrades. Automation should deliver planned results with less consumption of computer hardware, all that. Then there are other objectives. Other objectives are what? Other objectives and scope of IS audit, what? Risk identification is one of the objective. Checking compliance to policies is another objective. Security policies are complied or not, we need to check. Minimizing computer crimes is another objective. Security improvements. Audit act as an advisor. Auditor must comply with standards and ethics. Next, what are information system audit approach? Here we check output data documents against input data without examining the processing. Correct? Audit around the computer. It emphasizes on procedural controls rather than computer controls. When this approach is used, lack of technical expertise. Suitable when auditor lack technical skills. High reliance on users than the computer. It is adopted when user controls are relied upon, safeguarding features, maintain data integrity, achieve effectiveness and efficiency. Usage of simple audit system. Usage of simple systems with audit trail feature. Okay, if at all company is using simple system with audit trail feature, we directly go with audit around the computer. Application system is simple with straightforward. Clear audit trail exists. System has a low inherent risk. Inputs are processed in batch mode. System is constant and rarely modified. That too, when a system uses well-designed package, software is from a reputed vendor and appears error free. No unauthorized modifications are made by organization. Adequate control exists over source code. In all these cases, I use audit around the computer. Limitations. It does not assess system adaptability for the changing user rules. Unsuitable for complex system. Provides no insight into processing logic. How system is processing, we don't know at all in audit around the computer. Next, audit through the computer. In this system, this approach requires knowledge of operating system, knowledge of hardware used, technical expertise in system development. Compliance and substantive tests are performed on the computer system, software and data. Auditor use this approach to test the logic and controls and records within the system. So through this particular approach increases auditor's confidence in the reliability and applicability of evidence and information collected. This approach is time consuming, require deep understanding of systems. Auditing with the computers. Auditing with the computers means what? Computer system and programs are used. So we take a computer and program to they are used as tools in audit process. Substantive tests are performed using computer and its program. So in audit with the computer, I take the help of computer and audit the computer. Okay, next. Data from audit system is retrieved in an independent environment. This is used when large volume of data is there and direct examination is difficult. Logic of system is complex. Substantial gaps in visible audit trial. That's it. Some software tools that are used in audit. CAT. CAT is an efficient way to audit system generated files. It evaluates internal controls of an accounting system. This is used where information is available only on electronic media. CATs should be documented separately from other working papers. General audit software. This is widely used audit technique in IS audit. Audit command language is an example of general audit software. So what is the advantages of ACL? It creates reports in your flexible way. Audits are independent of technical expertise. They don't need to have a technical expertise to audit the computer. With CAT they can use it. Increases auditor confidence, helps gain control. Not useful at application level. Overall system management level you can use CAT. Now what is information system audit methodology? 5 steps are involved. Correct? What are the 5 steps involved? Planning, test of control, test of transaction, test of balance, and completion. Planning. Plan the audit to meet objectives efficiently. Understand the client processes and goals. Collect background information. Perform risk analysis to identify high risk systems and extent of detailed testing and analysis required by considering. So perform risk analysis to identify high risk system. Perform risk analysis to decide extent of testing. Risk analysis will tell you to what extent you need to test the system. So by analyzing criticality of the data, by analyzing the volume of transactions. Next, test of controls. Evaluate whether controls are working effectively. Controls. In an IS audit, controls we test to know whether the system is working effectively. Test management controls and application controls. Evaluate. The following points auditor will evaluate when he's testing the controls. Identify controls to minimize unlawful events. Ensure identified controls are implemented. Verify physical existence of these controls. Check if controls are adequate to cover all the threats. Ensure proper documentation to make them effective. Ensure continuous maintenance of controls. Regular monitoring using supervision, surprise check, inspection, all that. Test of transaction. Evaluate the accuracy and integrity of financial transaction. Why I test transaction? To know whether the transaction is integrity, means genuine or not. Use test like journal entry tracing to source document. Examine the price list. Testing computational accuracy. Review transaction loss. All these comes under substantive testing, transaction testing. CATs are useful for these kinds of tests. Test of balances. Test of balances. Evaluate asset safeguarding, data integrity, system effectiveness. Typical test includes confirmation from debtors, inventory verification, recalculation, all that. With regard to system effectiveness, use general audit software, all that. Finally complete. The final stage of IS audit is completion stage. Okay. So forms opinion and present the findings. Discuss preliminary conclusions and all with the auditee and preliminary recommendations with authorized persons. Draft the audit report, okay, and reflect exit conference material so that you can discuss and get the feedback. After receiving the client feedback response, final report you will prepare. And remember, working papers must be organized, clearly written, covering all audit areas. That's it. Structure. What is the structure of audit report? IS audit report. There will be introduction to the audit objective. You will define the scope. You will talk about the approach. You will talk about critical findings. You talk about the evidence for your findings. You talk about consequences of weaknesses. You talk about client response, and you give recommendations. These are all the typical elements of IS audit report. Then subsystem factoring. What is the factoring process? It's breaking a complex system into smaller system to make it easier to understand and evaluate. Yes or no? The process ends when the system is simplified enough for evaluation. To break down a complex system into easily understandable subsystem. What is the objective of factoring? What is the objective? Why we do factoring? Factoring is done to break down a complicated system into easily understandable subsystems, making audit process more manageable. What is the task for IS auditor? Evaluate the effectiveness of controls in each subsystem. Why we do factoring? To know which subsystem is effective or not. Assess implications of each subsystem reliability, how it impacts overall effectiveness. If each system is effective, overall system is also effective. So systems to factor. Two main systems are needed to factor. Okay, management system, application system. Management system. Various subsystems will be there in management system. information system management, system development management, programming management, quality assurance management, data administration, security administration, operations management. Application system, 6 items were there: boundary subsystems, input subsystem, communication, processing, database, output subsystem. Then broad framework for conducting IS audit. The IS auditor, no, safeguarding of assets is one of the most important thing as a part of IS audit. In that we need to cover major items: safeguarding of assets, major items, environmental security, UPS, electric lines, data cabling, fire protection, insurance, AMC, and logical security. Logical security means what? IS auditor must verify secrecy and control should be there over credentials. IS auditor must verify allocation of access rights based on the user rules. IS auditor must verify creation and termination of users list. IS auditor must verify presence of user lock in the status reports. IS auditor must verify presence of dummy user IDs. Next, data integrity. Data integrity is most critical resource in computer environment. IS auditor must assess compliance with data standards. He has to verify the extent to which data integrity is maintained. So what are the considerations in data integrity? Input controls, processing controls, patch program, yes or no? And purging of data files, data backup, restoration. Next, business continuity planning. BCP ensures continuity of operations, especially during disruptions because of minor issues or major issues. Role: what IS auditor has to do? Verify existence of BCP. Operability means feasibility of BCP. Evaluate awareness of the staff regarding emergency execution and effectiveness of plan. Ensure BCP is regularly tested to validate its functionality. Recovery objectives: short term, most essential systems; medium term, temporary operations of core systems; long term, complete recovery. Recovery methods: cold site, warm site, and hot site. Elements of various components of BCP. What are the components? First, there must be defined responsibilities for recovery process. Who are all responsible for recovery? Procedures must be printed on the BCP document. Procedures for reproducing restoring the data. Procedures for backup location. Procedure for recovery priorities. All that. Sources for replacement. Replacement hardware, replacement software. Setup for alternative data communication report. Output reports. You know, there is a principle called GIGO. Okay. So GIGO you can say. Garbage is when you input garbage, you get output which is also garbage. So purpose of output report. Why output reports relied upon by auditor? To know accuracy of input and processing. So output reports are checked by auditor to know accuracy of input and processing. Verify application programs meet organization needs. Detect software bugs. So audit trail report should be used to know audit trail report should capture the user ID of data entry and authorizing officials. Audit trail report should track additions, modifications, deletions. Audit trail report should provide evidence of unauthorized access. These are the features of audit trail. Audit trail report is an output report which will provide this information. Next. So IS auditor should verify whether audit trail reports are generated regularly, whether these reports are reviewed by proper official. Exceptional reports must be examined. All that. Version: data integrity depends on software version. Use of authorized licensed versions ensure accurate processing. Use of non-standardized poses a threat to system integrity. So IS auditor should ensure only licensed operating systems and application softwares are used in the company. Ensure complete list of all loaded programs is maintained in verification. Next, virus protection. A computer virus is a self-replicating program that may corrupt or destroy data irretrievably. Many remain dormant and active on specific dates. Antivirus software protects against known viruses and malicious programs. So IS auditor should verify antivirus definitions are regularly updated, and external media are scanned before use. System effectiveness, not required. System organization and management. Efficiency in computerization operation is linked to performance of people. Yes or no? In a computerized environment, efficiency can be achieved only when people are performing in terms of accuracy, timeliness, completeness, all that. So people must deliver high output both quantitatively, qualitatively. Proper placement of staff must be there based on their skill, knowledge, experience is critical. So IS auditor should verify whether company is effectively utilizing personnel. Existence of segregation of duty. IS auditor should verify implementation of dual control over critical operation. IS auditor should verify design of a system administrator with suitable backup arrangement. IS auditor should verify records of various duties, job rotations, all that. That's it. Repeat it twice or thrice at least, only then you remember, otherwise it's tough. Clear? That's it. With this we completed information security system audit or information system security audit. That's it. Half an hour it took. So we have completed the entire discussion of forensic audit, all the concepts, right? So now, forensic audit, all the concepts have been completed. We'll do a quick revision once. Okay, once we do a quick revision, immediately we'll go and solve the question bank. So what is the beginning page number? And in this already ethics revision we did, but if possible we'll do now once again cumulatively. Okay, so what is the page number? Yeah, so 378. Yeah, got it. So forensic audit we already completed, and I told you this introduction you can leave it. Okay, common areas of forensic audit, introduction, because it came again subsequently. So what are the common areas of forensic audit? Forensic audit happens in fraud areas generally, and fraud areas are broadly classified into three types: corruption, misappropriation of assets, fraudulent financial statements or fraudulent financial reporting. Okay, now corruption means where some activities will be happening for personal gain, okay, at the expense of the company. So common types of corruption is what? Bribery, where money or gifts are offered to an employee to influence a situation, or extortion, opposite of bribery, where money is demanded in return for securing an outcome for a third party by the company employee. And third one is conflict of interest, where someone uses their position for personal benefit even though it is harming the company. Next, misappropriation of asset, cash theft, fraudulent disbursement, inventory fraud, misuse of assets. Okay, cash theft means stealing physical cash. Fraudulent disbursements means making company funds to make fake payments, dummy purchases, dummy employee cost. Inventory fraud, theft of inventory or physical goods from the company. Misuse, employee using company property for personal reasons unauthorizedly. So these are all types of misappropriation. And third type of area where forensic audit is required is fraudulent financial reporting, also called as financial statement fraud, also called as manipulation of accounts. This is also called as what? Manipulation of accounts and records. Now here what they do, omitting the transaction. Okay, this is also called as fraudulent financial reporting, making false financial statements which misleads others. So like leaving important transactions and balances to hide the information, incorrect use of financial reporting standards, misapplying standards, wrongly applying the standards to manipulate financial results. Example, hiding liabilities to make the company financially stronger, or treating a real liability as a contingent liability so that position of the company appear stronger. Next, now, so a forensic audit is what then? Forensic audit is a review of financial records to find facts which can be used in the court of the law. It is a specialized field within the accounting which involves both audit expertise and knowledge of the legal framework around the company. Now, in forensic audit, we typically do investigation of fraud, embezzlement, financial crimes. Forensic audit can also involve some non-fraud situations. For example, a customer bankrupt in a bank loan. Bank want to know exactly what is the reason for bankruptcy. Is it intentional? Is it a real bankruptcy, or is it a drama? So for that reason, for forensic audit might be appointed. Divorce cases, to decide the compensation alimony, a forensic audit might be decided. So forensic audits are ultimately used, to detect illegal actions in the financial records. They help either confirm the suspiciousness of fraud, or they may dispose it, like in the sense there is no such fraud and all. Okay. Unlike a regular audit where the focus is on compliance, forensic audit aims to provide evidence which can be used in court of the law and legal proceedings. Forensic audit is typically an investigation process. What is an investigation? Investigation means gathering evidence, reporting. Correct? The audit could lead to an appearance in the court of the auditor to explain their findings. So what are the reasons for conducting forensic audit? It is ultimately to identify fraud and help lawyers in the court. So forensic audit involves planning, gathering evidence and reporting. Now, what are the steps? Forensic audit follows the following specific steps in an unbiased way. First, accept the investigation, plan the investigation, gather the evidence, report it, and if required, court proceedings. Correct? These are the 5 steps that are involved in forensic audit. Accept. What are the points that you should consider? Accept only after assessment. Okay, only after assessment, and that too you should check whether you have necessary skills and knowledge. Only then you accept it. Further, accept it only after risk assessment. Planning. Determine what is the goal of the audit. Identify the fraud type for which the company is approaching you. The investigation should include identifying the fraudster, identifying the amount loss, evidence to be gathered, and provide a preventive advice. Now, generally, a fraud happens because of 3 elements involved. A fraud happens only when these 3 elements involved, and those 3 elements are called as a fraud triangle. What is fraud triangle? Pressure, opportunity, realization or rationalization. Yes or no? So these 3 elements are required. If any one element fail, fraud will not happen in that circumstance. So in a particular circumstance, if a fraud has to happen, either pressure must be there, opportunity must be there, or rationalization of an act must be there. Yes or no? Generally, opportunity is one which we can control to some extent, because this is in the hands of the company. By implementing strict internal controls, a company can control opportunity. Correct? Next, now pressure means what? An employee is continuously having pressure from the top management to achieve sales target. So he may manipulate sales records to show target is achieved so that he'll get a bonus. Yes or no? Or employee is having personal financial loss, so he's facing a difficult financial situation and he's only dealing with cash transactions of the company. He's only dealing with customers recovery process, all that. Opportunity is there for him, and if at all his attitude supports to do a fraud, naturally the fraud will happen. So a fraud triangle conveys 3 elements which will enable the fraud. Correct? Next, now the third step in forensic audit is gathering the evidence. How do you gather the evidence? Public documents review. Whatever company public records are there, right? Books of accounts, financial statements, all that public records, meeting copies, all that. Review the public records. Detailed interview with people, company information, background check. So detailed interview to gather facts. Collect information from confidential sources that can provide valuable insights. Do use surveillance devices like physical surveillance or electronic surveillance. Undercover operations in an extreme rare scenario. Yes or no? And analyze the evidence gathered. Only proper analysis of evidence can identify guilty party. It also reveals how much amount of fraud is committed in the business. This analysis shows how to secure the company against financial scams in future. It supports adoption of strict measures to prevent such incidents in the future date. Correct? Then the fourth step is what? Reporting. Whenever you're reporting, what you should report? First, a summary of the fraud found report. List the evidence that you collected to support your fraud case. Loss, how much cost the company, and tell them how the fraud was arranged, how the fraud was carried out. In spite the company has these many controls and systems, how the fraudster did the fraud and how to prevent this fraud in the future. Yes or no? Suggestions for improving the ways to prevent this fraud. Then finally, sometimes auditors may be called upon to present findings of the forensic audit in the court of the law. They need to explain complex details in an easy understandable manner for the judge or jury. That's it. So these are the steps involved in forensic audit. Correct? Next. Now, forensic audit procedures. What are forensic audit procedures? Forensic audit is more about investigation and evidence collection. It requires professional skepticism and a scientific approach to discover the fraud. Here the auditor focuses on detecting material misstatement in financial transactions. And the fraud triangle is a tool to identify. So we try to identify, how do we detect the fraud? We try to apply fraud triangle logic. Are there anybody facing pressures? Are employees having any opportunity to commit a fraud? Is there any employee whose attitude supports for him to commit a fraud? I will try to identify these symptoms. So fraud triangle itself will be used by me. So what prompt him to do the fraud? That prompts only will use. Next. So what is the investigative methodology? We saw a brief 5 steps, right? Now little detailed steps, 9 steps were given. No detailed explanation is given, but a brief 9 steps were given. First, accept the engagement. Evaluate allegations, all that which the company is telling you. Do a due diligence. Do preliminary investigation. Check prediction. Okay? Assuming litigation is already there. begin external investigation, gather evidence, prepare report, court proceedings. Clear? Forensic Audit Office focuses on asset misappropriation, corruption, extortion, financial statement fraud, and conflict of interest. Next, business frauds. Business frauds is also called as corporate frauds, which involves illegal, unethical, deceptive actions by a company or by an employee acting on its behalf. These fraud schemes are often complex and may take months or years to detect. When a company when it is especially committed by top executive, the fraud can reach billions of dollars in scales. Here victims are whom? Everybody, stakeholders. It can be consumer, client, creditor, investor, business, or even the company or even its employees. Once exposed, the company is often left with ruins and may be forced into bankruptcy. Many schemes involving accounting manipulation, inflating profits, all that will be very hard to difficult. Much of illegal obtained money is usually never recovered as it is spent long time before. Okay, next. Why do corporate frauds happen? Not required. Okay, why do corporate frauds happen? Not required. Then fraud risk management. What is meant by fraud? Various types of frauds. Okay, now fraud is a deliberate act, intentional act, or sometimes it is failure to act intentionally. Deliberate act or a deliberate failure to act, both. Okay, to obtain an unauthorized benefit using deception, false suggestion, suppression of the truth. It also includes depriving someone that they are entitled to, or depriving an institution of a benefit that they are entitled to. Now, common examples: embezzlement, stealing or misusing assets; forgery, falsifying documents to deceive others; unauthorized manipulation of computer files; false reporting of financial information; misuse of company resources like funds, equipment, supply, service, inventory, all that; receiving payments for goods which are not delivered and services which is not performed; receiving wages or benefits without fulfilling the required work; dummy workers, all that; ethics violation, where personal interest influence professional decisions leading to unfair or unbiased actions. You're taking decision which favors you, not which favors the company. Fraud triangle. Now, fraud triangle means what? There are three elements. In order to conclude a fraud, in order to know that a fraud happened or not, there are three elements has to be seen at. Yes or no? One is opportunity, pressures, and third one, rationalization of the attitude. Opportunity. What is an opportunity? Fraud is often possible by exploiting weaknesses in the internal control. In the company, some process is not established, and that's a loophole, and employees got to know that, and they're exploiting that and making a personal gain out of it. Like lack of supervision on the employee action, no segregation of duty, no lack of approval process in the for transactions, various transactions, inadequate system of controls that can be exploited. Pressure or motivation to commit a fraud can arise from financial problems of the employee, the addictions that he has, employees, unrealistic goals that top management set for the lower management. Unrealistic goals create pressure on them. So because of unrealistic goal, what will happen? They might manipulate the accounting records, they might inflate the sales artificially. Yes or no? Next, rationalization. Justifying for the pay, like I need this money and will pay it back when I get my paycheck. So on that logic also, employees, especially cashiers, might use company cash temporarily. I didn't get a raise, the company owes me. This could be another attitude reason why an employee commit a fraud. Next, so how to prevent the fraud? Break the triangle. Either opportunity you break it or pressures you break it. So the key to fraud prevention is breaking the fraud triangle by removing any one of its element, so that fraud will not happen, fraud will not materialize. Opportunity is the most actionable element to address through internal controls. Opportunity is something that you can control. Now, how do I know that a fraud happened? Generally, will there be any indicators of fraud? Yes, indicators are called as symptoms, which are also called as red flags. Yes or no? So what is a red flags? Red flags is a warning sign that suggests fraud risk. Okay, multiple red flags combined with weak internal control indicates higher risk. So the internal auditor department should be contacted. Please take the help of internal audit department if several red flags are noticed. Now these red flags are again two types: employee red flags and management red flags. Employee red flags means, normal employee red flags. Look at the employee behavior: sudden expensive lifestyle changes, They have a significant personal debt or credit issues. Behavioral shifts like stress, addiction, fear of losing job, all that. High change in employees, higher frequent changing of employees, high turnover ratio, especially in key vulnerable areas like inventory, cash, all that. No segregation of duties. Employee reluctant to take a vacation or sick leave. Next, management fraud. Frequent override of controls. Decision making dominated by one individual or small group. They can easily do a fraud. Top management fraud. Policies and procedures which a company has to follow are not documented. Weak control environment. Inexperienced or lax accounting staff. Decentralization without monitoring. Too many errant transactions. Okay. High employee turnover and low morale. Refusal to use serial number documents. Photocopies or missing documents. Reluctant to share information. And frequent changes of external auditor. Company assets are sold below market value. All these are various top management frauds. Clear? Any 7 points in that? Next. Now, are there any developments in India with respect to fraud prevention? Yes, under Companies Act, there is a definition given for 447. There is a definition given for fraud under 447. So as per that, what is a fraud? Fraud is an act or an omission or a concealment or abuse of position with an intention to deceive or gain undue advantage, harming the company shareholder, creditors or others. It doesn't require for you to have a gain or loss. You may get a gain out of the fraud transaction, or sometimes you will suffer loss also. It doesn't matter. Next. So even in judicial examination of fraud, there are two principles: deceit and injury. Who deceived? Who suffered? Sometimes even there is no suffering. You deceived, right? That itself is enough for making you punishment. Understood? So in that, in that particular case, what they are explaining, that fraud involves both the deceit and injury. Even if the deceiver benefits without causing loss to somebody, the second condition of the second condition of fraud is satisfied. Nothing but fraud, you are treated as fraud. Next. Factors for deciding punishment, like under 447 there is a punishment, right? How much is the punishment? If the fraud amount is for an amount 10 lakhs or 1% of whichever is lower, then imprisonment is for 6 months to 10 years, and fine is up to 3 times of the fraud. Suppose if the fraud involves public interest, or if the fraud amount is more than 10 lakh, then automatically minimum imprisonment is 3 years. Regarding this, we have already seen in depth in cost auditor topic. Okay, so for this, refer cost auditor provision. Refer cost audit provision for this. You can write here. Refer third chapter. Third chapter. If at all you remember the page number also, please write that page number also. So you can easily open and then revise. Third chapter page number is what? 447. Third chapter, at the end you will get it. Before professional ethics, I guess. You just go before fourth chapter. 447, what's the page number? Look at. $50. 50. Okay. So page number 50. There 447 fraud punishment is explained in depth. Okay. So that's it. Now, how much punishment should be levied? Because they said 6 months minimum up to 10 years and 3 times of the fraud amount, the penalty amount. Like how much you will decide? It depends upon these factors: size of the company, nature of the business, how much injury caused to the public interest, nature of default and repetition of the default. So before levying a punishment, these factors will be considered by the courts. Okay, under as per 446A section, how much punishment should be levied under 447? The court will take into account these factors. Next. That's it. The remaining are not required. That's it. 3, 4, 5, 6. Next. Now, what do you mean by financial forensics and forensic audit techniques? Financial forensics is nothing but which combines accounting and investigation. Forensic is a process of investigation. Financial is accounting. So financial forensics means what? Accounting and investigation to discover and gather evidence for financial crime. It helps prevent the fraud, recover the asset, assess investment opportunities. Forensic analysts evaluate businesses to determine their value and also find the potential fraud. Common cases of financial forensics, where and all financial forensics will be commonly used. Financial theft, when someone steals company money from the organization, like an employee taking money, forensic analysts study documents and all. Securities fraud, false information is given to investors to manipulate stock prices. Here what forensic analysts will do, they will look at stock transactions and communication records to find evidence. Money laundering, making illegally obtained money appear legal. Here what analyst will look at, he will look at suspicious transactions, shell companies created and documented, all that. And corporate valuation dispute, they will analyze business to determine its true value, particularly in mergers and acquisition. So here forensic analysts help to ensure fair price is paid and there is no hidden financial liability. Tax evasion, when a company or individual avoids paying tax, like hiding profits in shell corporations, these analysts will study financial statements, transaction, tax documents to uncover the earnings. So what is financial forensic, what happens in a company, and how these people help? Briefly they just spoke. What are the what are forensic accounting techniques? What are various forensic accounting techniques? They do a detailed analysis of business records. They apply investigative skills to find discrepancy and illegal activity. Detailed evaluation and applying of investigative skills, these are the two techniques which forensic professionals apply. So this is what the concept of financial forensics. Understood? Next, what should be the quality of a forensic accountant? He must be having a logical mind. He must carefully observe even small discrepancies in the records and transaction. He must have a strong sense of ethics and integrity, and he always questions everything. He will not believe everything blindly, yes or no. He always curious. He will respond quickly and adapt during investigation. Spontaneity, that's called. He has a solid understanding of accounting transactions and impact. Now, what are investigative techniques for forensic accounting? We already saw. Gathering evidence. How do gather the evidence? Public documents and background checks. Verify public records, filings by the company, legal available data. Conduct a background check to understand past dealings of the company. Use interviews to turn unwilling individuals into a source of valuable information. So prepare questions carefully. You have to ask people, right? So prepare questions carefully. Assess gravity of the situation, like assess the severity, and capture every detail to reveal magnitude of the fraud. How much is the size of the fraud? Do a proper interview. Also rely on confidential informants or informers. Protect their identity. Maintain multiple sources for accurate results. Study evidence gathered to identify the guilty party. Okay, measure the extent of fraud. Check the company security, how much is there against the scam, and recommend remedial measures. Monitor physically, electronically, a traditional but effective way to identify fraud. Their phones, their mails, everything you just verify, screen it. An extreme measure is going underground. Okay, going underground is a last resort. A small mistake can alert offender and cause them to escape the situation. Detection and review financial records to detect manipulation. Fraudulent details often surface in financial statements. That's it. So these are all various investigative techniques in forensic accounting. Directly a 7 marks question. Investigative techniques in forensic accounting. Next, ethical consideration. Remember, we have already seen this. Ethical consideration. So what is ethical? There are a lot of ethical issues that arise in business and challenges business owners to manage. Even though law is there to hold workers accountable, these laws are not generally enough to prevent unethical behavior. How to prevent unethical behavior? Companies have to incorporate the ethical culture in the company. So no, ethical standards has to be established. The leadership has to be ethical. Now, what are the key issues in ethical issues? Fundamental ethical issues in business, like promoting integrity and trust, addressing diversity, empathy, compliance, governance, all that. Now, one of the ethical principle is harassment and discrimination in the workplace. Harassment and discrimination in the workplace is another ethical issue that a business generally faces. What is impact? It can cause serious financial reputational damage to a business. Businesses must comply with anti-discrimination laws. For example, in US there is a law called Equal Employment Opportunity Commission. So okay, this defines protected areas. What are various protected areas as per them? Types of discrimination and harassment. What? Discrimination based on age, based on disability, based on equal pay, based on pregnancy, based on race, based on religion, based on sex and gender. Next, health and safety in workplace is also another important thing. Employees have right to safe working conditions. Okay, next, now there are 10 top OSHA violations. You know what are the 10 top OSHA violations? Fall protection must be there, hazardous communication, scaffolding, respiratory protection, powered industrial trucks, ladders must be used, electrical wiring methods, machine guarding, electrical general. These are all 10 principles. Yes or no? Beyond physical safety, not only physical, you should also address psychological needs of the employees, mental health of the employees, rise of work related stress, mental health concerns, job insecurity, high demands, low autonomy, all that, sedentary lifestyle, heavy alcohol use, all that. Now, what are major ethical issues in business? Okay, whistleblowing and social media. Like, social media posts may lead to disrupt loyalty versus free expression. Complaints are not punishable unless they harm the business. Whistleblowers must be protected when exposing violations. You know, clear social media policies will reduce ambiguity. Accounting practices. Another ethical issue in business is accounting practices. Accurate bookkeeping is mandatory. Unethical practices mislead shareholder, which leads to financial loss, reputational damage, all that. Another ethical issue is non-disclosure. There is a risk of employees stealing client data. Use of NDA, non-disclosure, with financial penalties will deter violation. Then technology and privacy. Employer has to monitor emails, keystrokes, internet use can cross privacy violation if not transparent. If at all employee activities are not transparent, you can leave privacy logic, all that, and check the employee thoroughly. Ethical monitoring requires disclosure and focus on productivity. Now, what about auditors and professional ethics? Auditors also must follow fundamental principles of professional ethics like integrity, objectivity, competence, and due care. Even though they have so many ethical principles, there are some threats to them. And what are the threats? We have next in-depth discussion. Now, what are general ethical leadership guidelines? Are there any general ethical leadership? Yes, there are 5 key steps involved in ethical leadership establishment. First one, you first have to assess needs and resources assessment. In order to establish a ethics policy, you need to assess what are the needs for the company, where and all resources are required. Successful ethics and compliance program. It starts with a good plan. What are the considerations? You know, when you are designing a code of conduct, if a company want to establish ethical leadership program or code of conduct a company want to design, first ask the following questions. What are the ethical challenges in the workplace? What are the greatest risks? What values are important to the company and employees? What resources will support the employees? Who needs to contribute to the development of the code and values? Keep these in mind and develop the code of conduct. So the ethics and compliance program must be based on accurate assessment of strengths and vulnerabilities, like risk assessment, gap analysis, audit reports, all that. So gather information through focus groups, gather information through surveys, and now develop a code of conduct. And a strong foundation for ethical conduct. Code of conduct will act as a strong foundation for ethical conduct. Like, a strong ethical foundation includes in a company training on ethical standards, resources for the employee to get advice on ethics, a confidential reporting system where an employee finds something malicious, he has to report it to the management without any worry of revealing his name. Confidential reporting system, performance evaluation, disciplinary system for violation. Okay, next. So the following are indicators of an ethical program, the strong indicators of ethical program, hallmarks of strong ethical program, where employee has a freedom to question management without fear. They will be rewarded for ethical behavior. There is a positive feedback for ethical actions. Employee preparedness to address misconduct, how the employees are feeling to complain if at all they find something wrong. Willingness to seek ethical advice. So leaders of the company play a crucial role in promoting ethics. They should talk about the ethics importance. They should uphold promises to employees, reward ethical conduct, model ethical behavior, all that. Now, leadership and ethical standards. This character is paramount. Ethical leaders show integrity both at work and in their relationship. That too, in social media, your private behavior becomes public, and it also shapes how employees view their leaders. Next, leadership at all levels. Leadership means what? All levels. Senior, supervisor, everybody. Seniors, they should set the overall tone. Supervisors will influence day-to-day environment. Supervisors' action deeply affect the low-level employee conduct, work practices. Next, ethics should guide every decision from hiring to the performance. In crisis, value-driven decisions can teach employees what really matters. Leaders should show the true colors. Leaders generally show the true colors at the time of crisis and continuously reevaluate ethics and compliance. Nothing but your code of conduct continuously evaluate, and by surveys, by focus group, by risk assessment, okay, you can understand how ethics rewarded the company. You can measure the progress and you can adjust the strategies, and you can address emerging issues. These are the 5 steps involved in ethics and leadership. Nothing but code of conduct designing. Okay, here they have not given clearly why exactly that 5 steps they spoke, right? Exactly what is the purpose of them, they didn't speak clearly. Okay, but that is actually from the context of code of conduct, right? Now, what are major threats in auditing? Ethical challenges in auditing: self-interest threat, self-review threat, advocacy threat, familiarity threat, and even intimidation threat. Self-interest threat, where auditor have financial stakes in the company. Self-review threat, where auditor is reviewing their own work. Advocacy, when auditor promotes client interest which is affecting their objectivity. Familiarity, when auditor become too close with the client. Intimidation, when auditors are intimidated. Blackmailing, bribing, both comes under intimidation. Next, generally, what are the challenges in implementing ethical standards? Resistance, employee resistance. And usually, to make employees understand ethical principles, what is the value of ethics, all that, you need to train them, training cost. And okay, I spend a lot of this. How much return I will make on return, on investment? Difficulty in measuring return on investment. You can't determine, return on investment. It is difficult to assess lack of wrongdoing, because nobody is doing wrong. How much benefit the company got? It is very difficult. If somebody did wrong, how much loss company got, we can easily measure. But nobody did wrong, how much company gained, we can't measure it. Yes or no? So, link to performance. Connect ethics and compliance to performance and corporate strategy. Increase likelihood of demonstrating overall performance of the company. You see, overall strategy successfulness of the company. You see, that's how you can measure ethics impact. Now, senior management must set tone of integrity. Confidence in ethical leadership encourages all employees to follow ethical policy. Now, coming to, what about, do forensic auditors also have code of conduct and ethics? Yes, forensic auditors also have some code of conduct and ethics. There is an association of certified fraud examiners who has to uphold highest level of ethical conduct among forensic examiners. Yes or no? Auditors pledge to act with integrity and perform the work professionally. So auditors have responsibility to their client, public, and each other. So they must prioritize interest of those over self-interest. Ethical standards, ethical behavior standards were issued by various authorities. These standards guide auditors in fulfilling the duties and obligations. Especially certified fraud examiners are expected to follow these standards. Yes or no? Next. Now, so the Association of Certified Foreign Examiners have released something called Code of Ethics. This is applicable to all certified auditors of Association of Certified Fraud Examiners. Now, what do you mean? What are standards of professional conduct? So, integrity and objectivity. The CFEs must act with integrity and maintain objectivity. Like, they must maintain integrity, knowing that public trust is built on integrity. They should not compromise integrity for any reason. CFEs must investigate any conflict of interest before accepting the assignment. Don't accept the assignment if there is a conflict of interest. You can write here, conflict of interest check. Conflict of interest assessment, you can call it as. Okay, next. CFEs must remain objective, unbiased while carrying out their duties. CFEs must avoid actions which discredit the association and their profession. They should always act in the best interest of the profession. CFEs must never make false statements. They should never make false statements or under oath, and they must comply with court orders. And professional competence, they must be competent, ensure that their knowledge and skills meet the requirement. While accepting, they should check their competence, only then they should accept. And they must engage in continuous professional development. They should continuously improve their skills and effectiveness of their services. Next. And CFEs must exercise diligence, critical analysis, professional skepticism while performing their duties. Yes or no? They should apply care, professional skepticism. They should document evidences for supporting their conclusions. A fraud examination must be well planned from start to finish. And work by assistance, should be clearly supervised based on complexity. And next one, they should understand the client or employer what regarding scope and limitation. Understand the scope and limitation. CFE should reach an understanding with the client about scope and limitations. If there are significant changes in scope, engage new terms, new understanding must be made. They should communicate with client and employer all significant findings. They must maintain confidentiality. These are all ethical standards of conduct. Okay, these are all ethical standards of conduct. Then they have something called examination standards, okay, which are issued by association of certified forensic examiners. Now standards, fraud examination. CFEs, they should conduct fraud examination in a legal and thorough manner, gather evidence that is reliable. Now he should set certain priorities and scope at the beginning of examination and adjust the scope of the audit according to the need. CFE should be alerted to bias or unsubstantiated opinion from witnesses. Evidence, they must gather effective control on evidence. Control of evidence should be maintained, a clear chain of custody, tracking evidence's origin, all that. The extent of documentation may vary depending upon needs and objectives of the employer. CFEs must follow standards when reporting findings, ensuring reports are based on relevant and accurate data. Reports can be oral or written and may include fact witness and expert witness. Report content, it should be evidence based. Okay, CFE should not make statements about legal guilt or innocence of the party involved in the case. You don't have to judge them whether they are guilt or innocent. No, you don't have to. You just give evidences. CFEs must adhere to strict code of ethics like professionalism and diligence, ethical conduct, integrity and competence, testifying and truthfulness, evidence and opinion, confidentiality, material findings, professional development. So what is the role of certified fraud examiner? They can participate in 3 ways. They can identify the fraud, they can help in conducting interviews and reporting for somebody else fraud investigation, they can evaluate fraud risk and recommend the company how to prevent it. And CFEs, these forensic examiners, can collaborate with lawmakers, courts and advocates, and they can also help organizations by designing fraud detection programs. Yes or no? That's it. Then professional opportunities. So this is not that important in this. Whatever I told, that is enough. Whatever I told, that is enough. Like, what is the need for forensic accountants? Because cyber crimes are rising, regulatory failures are increasing, fraudulent activities are increasing. These all call for experts in forensic. These experts identify what happened, why it happened, how it happened. They play crucial role in investigating digital evidence beyond traditional methods like fingerprint analysis, all that. Then the demand for forensic accountant is growing due to increased fraud in India. Law enforcement experts analyze physical evidence, but digital evidence needs specialized forensic accounting. Government bodies, PSUs, banks, insurance, all need forensic accounting experts. So what forensic accounting involves? Forensic accounting involves using accounting, auditing, data mining and investigative skills to detect fraud and financial mistakes. It is a growing field in response to rise in cyber crimes. Understood? This is important, this definition. Forensic accounting means, again they give a slightly different definition. So forensic accounting involves use of accounting, auditing, investigative skills and data mining skills to detect fraud and financial mistakes. It is a growing field in response to rise in cyber crimes and frauds. So prerequisites of a good forensic accounting: he must have professional skepticism and he must have knowledge and understanding of internal controls, strong financial knowledge, all that. In India, the CMA Institute is also conducting a course called Advanced Diploma in Forensic Audit, which is offered by CMA Institute. This program helps professionals to gain understanding and improve their forensic audit knowledge. So summary, so forensic audit relevance and historical context, recent example. Okay, constituents of forensic audit, this is important. Constituents of forensic audit, important this is. So what are all various things that forensic auditors do? Forensic auditors do what? Forensic audit focus on various key tasks to identify and prevent the fraud. Correct? Like this is actually a heading ma. Okay, forensic auditor focus on various tasks to identify and prevent fraud. Like first one, they help organization assess fraud risk factor and evaluate controls. They compare and contrast fraud schemes to establish strong controls. They develop countermeasures. They use data analysis techniques to identify high risk transactions. They evaluate internal controls and identify weaknesses. They assess financial and program risks. They use evidence gathering techniques. They justify conclusions about the fraud with evidence. They document evidence. They share findings and advice on future prevention strategies. So what they do, forensic auditors, they just assess fraud risk factors. What are fraud risk factors? Pressures, opportunities, and that one, fraud triangle risk factors. They develop in this, easy points are assess fraud risk factor. Okay, develop countermeasures, use data analysis techniques. Okay, use evidence gathering techniques, document evidence, and evaluate internal controls and share findings. These points seems very easy. Okay, now what forensic auditor, they assess fraud risk factors and evaluate risk. They develop countermeasures. They use data analytic techniques to identify high risk transaction. They evaluate controls in the company and identify weakness. They use evidence gathering techniques to detect fraud. They document evidence on the process and finally share findings and advise on future fraud prevention strategies with the companies. That's it. So this also you remember. Constituents of forensic. Constituents means what? Components, nothing but. Okay, what forensic auditors do? Constituents we call it as. That's it. Okay, so with this the chapter is completely done and revision also done. Up to 40 minutes it took revision, that too a quick revision. So you see, you have to read slowly, thoroughly, cumulatively, which will take at least 2.5 hours of time. Okay, that's it. We'll solve question bank now. Okay, after this.